Yo, 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 good morning, everybody. Welcome to Monday at the 5ers. I am back. I had a little weekend off and I am back now. I hope everybody had a great weekend as well. My name's Richard Butler and welcome to the 5ers live stream. Yes, we are live Mondays through to Thursdays for about 6 hours every day. So for everybody that's joining us this early, thank you very much for coming in early and having a bit of a day with us. Excellent, excellent, excellent morning so far. Great weekend. Sunny South Africa, blinding light almost. Mr. Will Davis had some tech difficulties, but he's back. What's up, Will?
Hello there. Sorry, guys. I do not know what happened. I couldn't access anything this morning. I was like, "What is going on?" But I am back. I am back indeed. So
Sucks to be you, mate. Now
it
you're
does
back.
suck to be me. It does suck to be me. There we go.
What's up, mate? How was the weekend?
Good man. Yeah, not too bad. I had a really chill one. Spent an absolute fortune. So hopefully I can earn some money back in the markets this week. Otherwise, I'm gonna just sit and cradle myself this weekend. Went shopping in Cardiff with the missus, and then went out for some food. Went out for some all-you-can-eat sushi, all-you-can-eat hot pot. Well, it wasn't hot pot. It was just like Korean barbecue where you grill it yourself.
Oh, yeah, nice.
But yeah, no, it's good, man. Yeah, really good. I need to get a haircut, so I'm probably gonna get a haircut today.
I had one on Wednesday?
I
Thursday?
thought you were growing your hair. What happened to? I'm growing my hair out.
Well, we haven't had water for about 10 days now.
Oh no.
Yeah.
Fair. Smelly boy.
So I did not like the idea of having matted hair. So I decided, screw it,
Didn't
I'll
fancy
cut it.
dreadlocks now.
Nah, not a fan. Not a
No.
fan. Not for me, at least. Not for me, at
Okay.
least. So decided to cut it purely because I was getting annoyed with the fact that I can't wash my hair.
No,
Or at least if I wanted to wash my hair, I would have to take valuable drinking water and then turn that into nice hot water so I can then wash. So I was just, I'm not in the mood for this faffing about. Screw it, I'll just go for a nice little cut. And then went away for the weekend, wasn't at home. Had the opportunity to actually have a shower and wash my hair. So
And then this is luxury.
yeah, yeah. You don't know what you're missing until you miss it, mate. Until you walk into a hot shower and you're like, oh, this is lovely. Yeah.
I can believe it.
Anyway, I want to say hello to everybody in chat. First in this morning is Henry. Good evening, Henry. How are you? We've got MGN saying greetings. We have got Real GC. Good morning to you. Azrael Trades. Good morning, International Brothers. Good morning to you. We've got Daniel Bartle saying good morning. We've got HB. Good morning. We've got Pratik saying back with fire. Yes, we are back with fire. Frank Kennedy not saying hello, but asking who is shorting gold. We'll get to that in a moment. Sandpaper. What is sandpaper? You mean like when you don't have water, you have to like... And then Kavish. Good morning, Pratia and London Boy. Good morning to you.
Yo, gosh, was good one.
Waterless shampoo caps available at pharmacies. I've done the waterless hair washing before.
Yeah, it's like, isn't it called dry shampoo or something?
Yeah. The problem with that stuff is that it leaves you feeling sticky still afterwards. Like,
Yeah, I get you. Yeah.
it's clean, but like when you like put your hand through your hair, it's just like, ugh.
Yeah, then this has got like a coconut dry shampoo and it smells incredible. All I know.
All I know is that the shower gel that we had was apple and kiwi, mate. That smell, the smell of
Do
freshness.
that. I can't rate that.
It's amazing.
I can't rate that. Apple and kiwi.
Doc CSG asking about gold. We will get into that one in uno momento, guys. We'll get there immediately, very shoot. Russell is saying good afternoon. Good afternoon to you. It's Vinny. Morning, Will and Rich. How are you, my people? Miss you guys. Been going through some stuff, but I'm happy to be here once again. Awesome. Glad to have you here.
Good to see you back, brother. Hope you're okay.
Frank Kennedy asking, nice ink, Will. What's the meaning?
Oh, thank you very much. This one, I like it. You know, I've had this one since I was 18. I saw it. So my older brother's got something almost identical. and I just fell in love with it when I was old enough to realize what it was. And then, so I tried to find something myself. I tried to find some form of tribal, and I mean, I'm not gonna. I don't know if you can see my shirt. It's quite see through.
Yeah,
It
you can
goes,
see it.
it goes all. It literally goes all the way down to like my belt line and below. Um, so it doesn't really mean anything. It's special to me. I fell in love with it. Ever since I can remember. This one here is my time of birth. That one there, I just like it. And then I got boots on right now, but I've got one here, which means extra charge in Greek. That's the only one that actually means something. I'm also going to go get one that says Hong Kong in Hanzi in Cantonese, so Herngong. So those two are going to be the only ones that actually mean something. The others I just like. Yeah, the others I just like.
Yeah, I have a few tattoos myself, and not all of them have a story. Some of them is
No.
just purely I like it, and
Yeah,
yeah,
a couple of mine have stories, but yeah, some of them, like I said, I just like again this one here, I like it's not great. I need to get it redone. Like the guy who did it didn't do a great job. But like it's faded in places, or the line's not as sharp in places, so it does look like a kid has drawn it in chalk or in crayon rather. So I need to get it redone. But again, like I said, it was just one that I love ever since a kid.
yeah. I have two tattoos that have meaning. The rest are just
At all.
purely
I was gonna say you've got a few as well.
yeah. No, this one has the most meaning. This one over here, it's a relationship diagram.
Okay.
So there's five dots over here. There's two dots over there, and it is 5 dots represents myself, 2 dots represents my wife, and it is a many more than 10, which is a saying that my wife and I have for each other. It's like, how much do you love me? I love you many more than 10.
I rate that. Do I like that?
Yeah, and then this one over here is okay, it's upside down.
Can we invert his camera?
There we go. There we go. That's look a little bit better. That's also one of my wife's designs that she made, and it's two of my favorite games ever. So, yeah,
Nice.
it's the insignias for two of my favorite games. Anyway, dude, did you get yourself any of the summer accounts as
I
yet?
haven't yet, dude. You know what? I usually work the weekend, and I'll work through. I work on projects. Like here at The 5ers, I work on projects, my own projects. I look at my own trading accounts. You know what? I haven't even done a weekly analysis. I genuinely took this weekend to do nothing with work because like I preach it a lot, and it's about time I start practicing what I preach. Like I always say, guys, take time off. Guys, go do this. Guys, take time for yourself. And recently, I haven't been having a lot of family time. Recently, I haven't. I've been very much in my office, head down and go. And I thought this weekend would be an opportunity for me to actually thought, you know what? No, I got hair on my tongue. I I thought now would there it is. I thought now would be an actual opportunity and a great opportunity for me to say, you know what? I'm done. No more work. Let's just take 2-3 days. I think it's Friday. So Friday I didn't trade the afternoon. So I did a little bit in the morning. So Friday afternoon, Saturday, all of Sunday, and then back today. So I took like 2.5 full ass days of just doing nothing. And mate, you know what? I feel good for it. I feel recovered. I feel recouped, and I feel excited
Nice.
to get back into the market instead of just thinking that, oh, we're back in the market. It's work. Like I'm always excited for work. I'm always looking forward to trading. But like now, I've got like a newfound excitement for it because I've taken a few days to just forget that the markets even exist.
Same here, mate. Like I took Wednesday and Thursday off. Didn't check anything. I didn't have a single chart open. I didn't
Yeah, nice.
have anything. Like nothing work related was open
Sometimes
whatsoever.
you need it though,
Which
don't you?
means that today I have a fair bit of work because I usually do some work on Sundays.
Yeah.
Prepping for the week and all of that kind of like stuff. And yesterday when we got home, the missus and I were just both absolutely knackered. We were just like, no, we've been traveling. We're just tired. Like so. didn't want to do anything other than that. And then obviously because we still didn't have water, you know, you kind of get home and you're like, ugh, still no water, you know, can't cook food and wash dishes, and you can't get to like your typical, let's call it home tasks. Can't get to any of that stuff. So hopefully we're going to have water this week, and then if we have water this week, we can get to all of that stuff. But before I get to any of that stuff, I have I have a crap ton of work related tasks that I need to do. And on top of that, I will be teaching my lovely wife, who shares the same tattoo as this one that I have on my forearm.
Yeah. You
I will be teaching her how to trade and going from absolute beginner and work her way through to the point where she goes ahead and purchases her very first account, and then see how she gets that done. So obviously I'm going to be going and sending her through the whole 5ers experience. So register with the hub, go through all of your webinars, and go through all of Rich's performance coach course stuff, and then from there on she will also eventually become part of the 5ers family and get herself a 5ers account. So we'll see how that's going to go.
Dude, that'd be sick. Dude, that'd be super cool. So I'm doing something similar with my brother, you know, with the indicator we've released. So I'm sort of teaching my brother how to use the indicator, how to find A+ setups, what confluence stacking is, because my brother's a little bit more advanced than your wife. Because again, he's traveled all Italy with us, you know, with me, you know, with the 5ers and doing the funded freedom. So, you know, he's got a little bit of experience. He knows what trading is. He knows how to somewhat analyze the markets. But so he's not a beginner, but he's certainly not a confident trader. And so I'm sort of teaching him how to confluence stack, how to analyze high probability trades. And so he you know what? And he's smashing it. He hit TP1 today. The only issue he's having is with his laptop. He's struggling with this position sizer on MT5. I don't know why. It just doesn't seem to like his laptop. So I've actually given him permission to use my big PC in the mornings. So I'm looking forward to seeing what he can do. He smashed a 3% day on a 100K account last week, and he's just bought himself a 10K account. So he's going to see what he can do with this.
So I have a question. Is he trading purely with that indicator, or is he adding his own trading analysis to it as well?
A little bit like me. He's putting he's using the indicator as a. So I use the indicator as a confluence. He's using the indicator as an initiation. Does that make sense? So he's waiting for the indicator to say, "Here's a trade opportunity," and then
he's using the indicator as a signal.
Yes, basically. And then what he's doing from there is, instead of just blindly placing it because the indicator says signal, he's actually developing an analysis around the signal to validate it. Does that make sense?
Okay, so does he understand the indicator and how it works? So does he understand why the indicator is printing a signal, or is it just print a signal? Okay.
Hence why I said don't just place blindly. It's more of a case of, you know, the indicator is now placing something here. It says that here's a long opportunity forming. Now you've got to tell yourself why. Now you've got to understand, can you find why this could go up as well as the indicator? And to be fair, this morning he smashed it. And he's trading a very similar strategy to me with the consolidation break, close above the 50 EMA, nice bullish momentum. And yeah, he smashed out TP1 today.
Nice. So just to get back to the whole teaching my wife how to trade, the idea is to have her not be reliant on any indicators whatsoever. So
yeah, nice.
I want to see what it's like for a person, a complete novice that has zero trading background, to go from zero to whatever level she can achieve.
That's sick.
A portion of it is going to be entirely 5ers related. So it's like a little test of how well your webinars can impact a person. How much does our live content impact a person? We can see everything from her stuff. I can have all of her data analyzed. I can have all of her information that she's asking for. I can say, okay, what barriers does she have for information? What kind of information can we, add as an example, maybe to the 5ers catalog? And then so on and so forth, kind of like find
You
out.
should do like a mini series of that. That would be sick.
The idea, I think,
Does she
is
not want to be on camera? Or...
no. That depends on her entirely.
Yeah.
If she wishes to. But the thing is, I don't want to use it for clout. That's not like
no fair. Yeah, no fair. I get you. Yeah, that makes sense. I get that.
We may record some stuff. And say, because okay. So to give you an example, if we're going to go through the 5ers performance coach information, the course, there's really no point in video taping that because that information is there. So,
yeah, it's gonna be boring to watch as well.
Yeah, it's already there. So it's kind of this is where we started. Maybe we do a video series where if I have the time on a weekend or something, where we say, okay, look, this is the kind of information that you would generally be looking for outside of like the typical stuff that's there already, ready and waiting. And then if there's information that none of us know, it's like, okay, but where can we find this information, as an example? And just kind of like work your way through there to the point where she eventually has her own account and moves from there.
Dude, I rate that a lot. I think that's gonna be sick. I reckon she'll smash it. Big up Alex if she's watching now. She should be. She should be watching now if she's trying to.
I think she is. She's sitting there with it looks like a notebook in her hand. I also have more like note pages that I'm going to be taking as well.
Nice. I do that. That's super cool, man. I like that. Like I said, maybe I'll do it one day with my partner, but for now, I really can't be bothered.
So, I wanted to add this, just one last thing. The idea of kind of the difference between somebody that's trading for a living and somebody that's trading absolutely not risk-free, but like stress-free, effectively. Like they're not reliant on this trading income. So to have that dichotomy, that juxtaposition between somebody that needs to make money from trading to, kind of like make a living, and a person who's like, look, I'm just going to try and see where it gets me. And that, okay, it's not a scientific approach, let's put it like that. It's not going to be scientific data, but like how much easier it will be for somebody that does not rely on this to make a living eventually off of it. So yeah, we'll see.
Dude, I reckon she'll smash it. Like you said, it's when people rely on the trading profits, you usually find that people struggle a little bit more. It's when they don't rely on it. It's when they solely have it as a risk-free hustle, should we say? Then I think that's usually when people
side hustle.
Let's call it. I hate the word side hustle, but it makes sense. Let's call it side hustle because in theory it is.
Yeah. Like Cool saying, the wife is going to kick your ass, Rich. We were actually talking about this yesterday on our way home. Where we were like, can you imagine? Like, I teach her how to trade, and we also go through all of the stuff, and then she ends up being a way better trader and much more profitable.
Mate, that happens all the time. So many times, like a coach or a mentor of some sorts will actually teach someone how to do something, and that, it's where the saying that, the student becomes the master, because like a lot of the time, like a coach is there to teach something to someone. And if you get a natural, like a lot of the time, the coach isn't necessarily a natural. As some of the time, that a coach is just someone who excelled in it. Like, let's say, for example, myself and you, Rich, we may not be natural traders, but we're good traders. Now, if we taught someone who's good and natural, they'd excel more than us. So could you imagine if your wife now was a significantly natural, better trader than you, as well as your education and your mentorship and your guidance, she just surpasses you completely and leaves you in the dust. How awesome would that be? Yeah,
I would be stoked. Like, genuinely, I would be stoked. The idea would obviously be that I had some input, but the rest of it was on her. So I would be stoked, dude. I would be like in the clouds, happy with if she were to reach that. And even if it doesn't happen, I would still be happy because it's like she's trying out, she's actively participating in a journey that I'm a part of. So yeah,
Yeah.
that's like
The only thing that would worry me teaching someone is that you cannot control their mindset. That's the only thing that I hate about teaching people. So like I was thinking, like, for example, I'd never teach my partner. My partner now, she has a career, she has a job, but I'll potentially retire her one day, make her a stay-at-home wife, and maybe then I'll teach her how to trade. And if I taught her how to trade then, though, you risk having her just at the markets 24/7. She becomes like that. You can't control the mindset, and that's the only thing that worries me, is controlling or trying to help someone with their mindset when they're so close to you. It's like, oh, it's just mindset and
yeah.
trading, psychology and trading. Look, I can teach someone to trade in 6 weeks. I don't care. Easy. That's the easiest part. It takes the longest to actually learn how to develop that mindset in trading. That is where mentors really thrive. And like a lot of people say, oh, find yourself a mentor, find yourself someone who teaches you to trade. And then a lot of people will look for someone who actually teaches them to trade. And it's like, yeah, here's my course, here's my mentorship. If there's not psychology in their course, if there's not mindset and psychology in their mentorship, then I'm sorry, you're wasting your money, because 90% of a mentor's job will be to guide your mentality and psychology.
I will add this though. I know my wife very well. I mean, we've been
I hope
married
so,
for
mate. I hope
yeah,
so.
we've been married for a long time. We've been together for an even longer time. I know her very well. So I know what her trigger points are. I know
Yeah.
where like emotionally she might struggle with some things, or she might like find some things a little bit easier to handle and whatnot. We're not going into this with any sort of expectation. Just
Yeah,
just
exactly. I rate that so
industry
much as
experience.
well.
So in that case, I'm not worried about that at all. I'm not going to go into this with the idea of it's a lost case because emotional. No, just we'll see. We'll see.
Yeah. Mate,
Anyway,
I reckon she's going to smash it. I reckon she's going to smash it. Speaking of smashing
agreed.
it, we've got Orville Johnson saying, really love you guys. Appreciate the trading vids. Big shout out to you, my man. All right, really glad you're enjoying it. Usam, Master Butler, and Davis. Hope you legends had an awesome weekend. I did indeed.
Indeed,
Thank
we
you very
did.
much. Russell saying that cool Japanese kanji for a tattoo. It means vegetable. Uh, yeah, dude, I
I mean,
love.
if I ever get into a car accident, I
Oh,
have some.
mate. Oh man, yeah. The only issue that I hate about Asian languages, and I think Filipino is the only language that you can read, is they all have Hanzi, Kanji, whatever it's pronounced as. But you've got the symbols, and learning it is so hard, man. Because I've just posted. I don't know if you can see. I've just posted in chat a second ago. Here it is. So this is the symbol for Hong Kong or Hong Kong. So this is the tattoo that I'm going to be getting in a few weeks' time. I haven't booked it in yet.
The first one looks like a home, doesn't it?
It does
The
actually.
first symbol looks like a little house with a like I don't know, a slanted roof,
It
and
does.
then a
It does.
straight
Well,
roof, and then a little.
maybe that's why it's called.
That's what it
Maybe
looks
that's
like.
why they nickname it Hong Kong, because it looks like a home. I don't know. I don't know. But yeah, no, that's fair. It does actually. So that's the tattoo that I'm going to be getting. I'll probably get it on my ankle as well. But we'll see. Frank Kennedy saying, "Will I have a smaller version of that tribal just covering forearm part?" Oh, dude, sick. Frank, are you older generation as well? Are you sort of like 50s plus? Because I've never met someone my age with the tribal tattoo. I see so many people like 40s, 50s plus, and they've got or like a very similar print in tribal. But everyone my age sort of looks at me and was like, "Will, what the hell have you got on your arm?"
There's actually a reason for that, but we can get into that a little bit later. Let's carry on going through the
Absolutely.
question. There was actually one here from Russell asking which summer account is best for swing trading. Well,
That's a
you
good
can
question.
take any one of the accounts and swing trade them because you are allowed to hold them
It
overnight
depends
over
what your risk
weekends.
to reward is as well, I suppose, because you've also got the ability to have the cheaper account, $149, and it's a 10% phase one, 5% phase two. So if you're a swing trader and you don't care too much on time frame, and you know that you're going to get that 15% overall profit target, I mean the cheaper one at $149 is probably the better option because again it's cheaper. But other than that, they're pretty much the same. You know, they're both pretty valuable.
Yeah, I
I,
mean, if you look at the rules, you are allowed to hold overnight with all of the
yeah,
accounts. The 5-10% one gives you, so the two-phase one, both of the two-phase, the 8-5
yeah,
and the 10-5% one, both have 10% drawdown available to you. And the consistency rule applies when in the funded phase. So you can hold your trades as long as you want. The consistency rule is still going to apply though. So you can't do it in one trade. Let's put it like that. When you're in funded, you can't do it in one trade because you need to have at least two trades for that 50% consistency rule. So any one of them will have that benefit. Holding overnight, holding over weekends. Yeah, all of them are the same. It, like Will said, it's depends on what you can afford, first and
yeah.
foremost, and secondly your strategy in terms of like your risk to reward. Sometimes you can hold a marginal, like small position for a long time and then have like intraday stuff that's slightly larger to help offset that kind of like trading. But yeah, swing
Mm.
trading is allowed in all of those accounts.
Yes, indeed. So yeah, literally, like you said, it just depends on how much can you afford, what trading
Mm.
strategy, what you're looking for. 100K for $149. What? Really? Where? In heaven, or in heaven indeed, or on the fivers, or it's for futures. It has never happened in my entire life. I'll tell you what.
Yeah.
Let me show you.
Yeah, so 100%, this is the summer deal. So the summer deal is effectively just the summertime in the Northern Hemisphere. We have it's three accounts, but you can have up to six of them. The cheapest one of which is $149. That is for the 10% first phase, 5% second phase account. And then we have a second two-phase account, which is the 8% and 5% for the second phase, which is 179.
Mm.
You can have two of each, so you can have four of those. And then we have a one-step pass one, which is a 10% requirement for take profit, and you have 6% of drawdown available for you, but it's a one phase. So once you've passed it, you're funded, and that one goes for 249.
Exactly. Right. Okay. So, Lesh, welcome to heaven. Here we are at the gates of heaven. Now you can see that. Okay, I'm going to stop with the blasphemy now because I do want to go to heaven. Anyways, so we have got the drop down just up here, the nice little banner with Mickey is frozen, looking all handsome over there. So we have got this drop down here, which you can see limited time offer.
Limited time
There we
offer.
go. We got there in the end. So you can click start trading, or if you do out of default accidentally click the cross and think, oh shit, where's it gone? Literally just click get funded, and then you can see CFDs, one step, two step, or summer plan. Click the summer plan, and it will take you to the summer plan. And there we go. Just like that, you do have CFDs or the futures. I personally trade futures. I am still working on my CFDs. I'm getting there slowly, but there just hasn't been anything in the NASDAQ for me to take. In fact, actually, I haven't taken anything. What do you do?
You
What
said
is that?
I personally trade the futures. I'm struggling with the CFD side of things. Isn't it the other way around? You personally trade CFDs and you're still
Oh,
struggling
yeah.
with the futures.
Yeah,
That's why I was
sorry.
like,
Yeah,
flip it
yeah,
around, mate.
fair. Flip it around. Monday morning brains kicked in. I'm
It's right. I'm
personally.
rested. I'll catch all
Yeah,
of your faults, mate. All of them.
bro, can you have my back today, please? I'm personally struggling with the futures still. I'm a CFD trader, but I am learning. There we go. I think. Did I get there? Did I get it, Rich? Maybe
Let
I
me check.
should. Maybe
Let me
I'm not
check the VOD. Let me just check. Yeah, you got it, mate. Good.
Perfect. Thank you very much. It's a goal. It's a goal. Maybe I shouldn't be explaining the summer plan. Maybe you should do it.
No, dude, you're doing a cracking job, mate. Cracking
So
job.
yes, the summer plan today. This year, the summer. Anyway, so we've got CFDs or futures. I will be trading the futures on stream. I just haven't seen the NASDAQ. I've almost completely stopped trading the NAS on my CFDs. I'm trying to save it for the futures. Anyway, so 100K for only $149. Yes, start trading. That'll take you into your hub, and then I'll explain. I'll log into my hub in just a second, show you how to actually purchase it. But as you can see, up to 6 accounts, overnight trades are permitted. Pass in one trade, so there's no minimum trading days.
That is only for the one step, which does
Yes.
not have the consistency.
Indeed,
rule.
that.
Well, no, not the step two. The two steps. The two steps that does not have the consistency rule.
As you see, 2-step, 1-step. So that leads on perfectly to you have three types of accounts, technically 4. You have 1-step, 2-step, and then you have 2 types of 2 steps. So that's 5 accounts that you can choose from. So we either have, my maths is right on that one, isn't it? No, it's 3.
Okay. All right.
3 accounts you can choose from. Yeah,
3
accounts that you can choose from.
Main heading, subheading.
Yeah. Breathe, Will. Breathe. It's okay. Monday will be over soon. I promise. It's okay.
Yeah, only a scant few hours, mate.
Couple of hours.
It'll scuttle by for you. Don't worry.
Couple hours. You can go back to bed. I promise. Okay, let's try this again. So anyway, we've got 100K 2-step option. We've got 8% and 5%, which is the classic. You've got unlimited trading period, so unlimited trading days. You can pass in as long as you want. Second step, exact same. Maximum loss, standard 10%. You've got 3% maximum daily loss on both steps. You've got a target of 8% and 5%. Risk leverage of 1. Yes, phase 1. Phase 1 and phase 2. All these phase 1, phase 2. 10% for scaling as well. So you do still have a scaling plan on the phase 2, on the phase 3 technically once you pass. Leverage 1 to 100 throughout, even in funded stage. Bonus of 10% and 20%. Refund on the third payout as well.
Yeah, so that bonus that's there, the 10% and 20% is in hub credit. So if you've passed phase 2, you will get 10% of your initial payment as hub credits, and then once you've been funded after your first payment, you will get 20% of that. So basically 30% of your initial payment will be in hub credits given back to you. And then on your third payout, you will get a complete refund of the remaining 70% of your initial payment. So 30% of $179 in hub credits and 70% of $179 will be refunded back to you upon your third payout.
Exactly that. And then you have the second option, which is the non-classic, which is the 10 and 5. The 10% being that's your max loss still 3% daily. So all that stays the same. The only difference is the target is different. It's 10% in phase 1, 5% in phase 2. Again, exact same happens is 10% scaling plan. Consistency per day is absolutely nil in the funded, but when you do in the challenge or the evals, when you do get to the funded, it is 50% consistency per day. Payout cap of 2K, so 2% on the 100K, 80-20 profit split. And
that's
again,
per payout cycle, by the way.
Yes, yeah. No, that's
per
not
14 days. Per 14 days.
Every payout cycle is 2% cap. And then again, across the board, leverage stays at 1 to 100, even in funded. 10% bonus, 20%, again, exact same. Refund on the third payout, so you get your complete $149 refunded on the third payout. So there we go. And max number of active accounts is 2. So again, that's the 2-step, and then you do get the 1-step 100K as well. Unlimited time to pass. Unlimited time to pass. Maximum loss is 6%. Maximum daily 3%. Exact same daily as the 2-step. The only difference is 4% difference. So you have got 6% max loss on the 1-step. Target is 10%, only one target of 10%, then you get straight into the funded stage where you do still have a scaling plan of 10%. Consistency per day is a 50% rule. Profit share is 75-25, so only 5% less than the two-step, which is pretty sick if you ask me, because I know a lot of one-steps are like 50 to 60% profit split, which is ridiculous. 1 to 100, even in leverage, even in funded stage. 10% bonus once you pass, and then refund on your third payout, and that's 249 with a maximum of 2 accounts.
So across all 6 or all 3 of the summer accounts, you can have 6 in total, 2 of each running simultaneously, and you are allowed to copy between all of them. So go get yourself one right now.
Let me just log in real quick and I'll show you how to purchase.
Daniel saying, I already, alongside my missus, there's no way on this earth I'm bringing trading into the equation too.
Dude, you know what? I really rate that. Yeah, 100%. Oh, dude, that's class. I like that. Right, okay, so...
please explain the consistency rule. Consistency rule is very easy to understand. When you look at the percentages like, oh, consistency. Technically, what it means is you have, when you make profit in your account, okay, 50% of your profit is not allowed to come from a single trade. So it means, technically, if you have, if you made $1,000 in one trade, then your consistency will show 100%. You need to try and bring that down to 50%, which effectively means that you need to take another trade of $1,000 in profit in order to bring your consistency down from 100% to 50%, which means that 50% of your total profit came from one trade. Now, the best way to work around consistency is to just trade a little bit more. So if you have made, in this case, $2,000, and you're sitting, one trade was $600 and the other one was $400, that $600 in this case will bring your consistency to 60%, which means that 60% of your trade or 60% of your profit came from a singular trade. So your highest amount of profit per trade is not allowed to be more than 50% of your total profit that you've made.
Yeah, exactly.
So every subsequent trade that you take is going to bring that percentage down.
Yeah.
It's going to marginally bring it down.
What that encourages as well, because there's going to be a lot of people out there that says, oh, overtrading, blah, 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 blah. No. What this encourages is the ability to control your trading and it's literally called a consistency rule for a reason. It's to stay consistent and prove consistency in trading, because what a lot of people will do is just full margin one trade once they get funded and then go and either blow the account or get a big dollar figure and then get paid out. That is not consistent trading. So the whole consistency rule is to prove that you are consistently trading and that you can develop a relationship with the prop itself instead of just trying to cash cow it. No one likes to be used and abused. So that's the whole point of the consistency rule, is to say, look, guys, here's an awesome opportunity. Get it, utilize it, and show that you're consistent with it. Don't just go and smash out a $4,000 trading day and then think that you can get paid $4,000 and go and blow the account the next day. That's not consistent. Come be a better trader, basically. Also, just want to show you now that I'm in the hub, go over to new order. Once you're in new orders, go into the CFD section, click continue into the CFDs, and then you can see that I've already got a summer plan, get rid of that. So you can see now you've got MetaTrader, CTrader, or TradingView. You can pick whichever one you want. Now, so if we go to the growth, which is the one step, now we have got this little option up in the 20K. We don't want a pro growth account. So we click that, head down to 100K summer plan. You have now got access to the one step 100K summer plan account. That is $249. Or if you want the two step, you've got two different options. You've got classic and non-classic. So you just tick them, and then you can see when we select plan in just a second. If you go into the top right, you can see the 25K. Head down to 100K summer plan, and then you've got classic and non-classic. If you
want to see the information, just click on that one, yeah.
Yeah, so if we show details, now you can see the difference. So classic and non-classic, 8% classic and 10% non-classic, and then the prices that differ in the bottom. So 179 for classic and 149 for the non-classic. So there we go, and it gives absolutely everything here. So what we just discussed over in this section here. So what we just discussed, my mouse doesn't work anymore. I need a new one. What we just discussed here, you can also see just down here, as you can see, first phase, second phase, or second step, whatever you want to call it, 10 and 5, 8 and 5, etc. 3% tick, etc., etc., etc. Just go have a read, select plan, and then use your credits if you have them. If not, go to billing, etc. So just as simple as that, guys. Go have a roam about, have a mooch about. Nothing complicated. Just literally go into fivers.com homepage, click summer plan, and then go explore. But
and
it is limited time offer. So
yeah, when purchasing an account, you can only purchase one at a time. So you'll have to do multiple purchases if you want the multiple accounts. Okay, so just so that you know that. Question here from Amrit asking, summer plan will be available until which date? Until the end of August. So you have until the end of August to get yourself. So another month. We may extend it. You never know. We may extend it.
Maybe end of September. Who knows?
Yeah, we may. All right. Cool. Yeah, thanks for that one, Shiny Yellow Metal. I made a little boo-boo. I meant to say if you had $1,000 in profit and one trade had $600 and the other one was $400, that would effectively be a consistency of 60%. So the more you trade, the more profits you make, it will bring down your consistency. And just to add on to what Will said, the idea of consistency is it's to ensure that you, the trader, that is going into an agreement with the 5ers, that you are a proper trader, not somebody that is gambling by saying, okay, I'm going to buy, and then they make $10,000 and then pass the account, because the 5ers is looking for actual traders, not gamblers. So that's why we want that. So... And then Azrael Trade saying, guys, I'm not active in the stream today. We work on our new short film. When is the 1v1? The 1v1 will be tomorrow. There will be two 100K, 10%, 5% summer accounts to be given away. So tomorrow, how it's going to work is I am going to send out a Google form that you will fill in. All you need to do is just fill in your name. So in this case, Azrael Trades, your... YouTube name is Azrael Trades. You will fill in Azrael Trades, and then underneath that, just your email address that you used to register with the hub, and then you're in. We're going to then have a wheel that's going to spin on the screen that's going to select a participant. The first one is going to go up against Pedro, and then a little bit later in the day, the next person will be going up against Griff. You will have half an hour to beat the pro, in this case, Griff and Pedro. And if you beat them, you will win one of those accounts. Simple. All right. Let's get to the charts, mate. Let's get to the charts.
I was going to say, have you taken a trade, or have you looked at a trade?
I'm currently looking at a potential NASDAQ long.
I like that. If we can break and close above here, I'll consider taking this on my futures.
Yeah, I'm looking at it. We did sweep the high of Tokyo, which happens to be the high of day as well.
Yeah.
We have a base. We'll see whether or not this base is going to... Let's add it there. So this whole day so far, we had the gap. Was a little bit sideways. We had a double top. So the Tokyo Open, as well as the section over here. If I pull it all the way back, you'll see that it was a double top. We finally closed above, so we've wicked above. I want to see us not push too deeply below this base. We're still above the 50 EMA as well. We had this one attempt to try and push price lower, so we had a new high and a new low in relation to this previous high. Had follow up down to here, but it didn't quite feel right just yet. If you look at the previous 4 hourly candle, it had pushed above, came back down, and then started pushing up again. So I wasn't quite ready to take a sell yet. Not entirely sure if I wanted to sell just at that point. I wanted us to just
Yeah, I
push
know what
up
you
a little
mean.
bit to see if
I
we
like
can
to
pick up a little bit more action up over here and then start pushing lower. But for now, I'm just waiting.
Yeah, beautiful. I'd like to see a pullback into the sort of, what area do I want to see?
5 or 15.
5 minute. I'm gonna go 28,561. 28,561. Pull back, continue higher. If we break and close above, then I think I'll enter on my
561. That's 10
futures.
points away.
Yeah. Pull back
Oh,
down into
okay.
your base.
So
Pull back down.
this upper
Yeah.
end here.
Yeah.
Oh, okay.
Exactly. So that comes down into like the equilibrium. If you go into the equilibrium
Mm.
of that area, that comes down into your base sort of zone.
There, yeah.
Yeah. And then if we can like touch or come into that zone, start heading back up, break and close above the previous high, then I think we'd be in a really nice position for longs. And then I'll look at taking that on the futures account. The only issue is I don't like Monday trading.
Okay, fair enough. We did have this 15-minute base over here that I also wanted to add on as a potential confluence for more longs. We had this 15-minute base, so we were struggling initially. So we were pushing lower, it didn't created the low of the day, started to push up. But when we tried to push back lower, this is on the 15, you can see that in this area over here, we were really struggling with our direction. And then eventually we started pushing up, creating a base. Did not create a new high just yet, came back down, reacted off of this, and then created the new high of day. So I'm just going to wait. There is a potential that we can push back down again, maybe to about 28,534-ish, which is down here, which was that last area over here on the 15-minute. Was that last area where we really attempted to push up bullishly. So we can maybe come back down here if we don't come back down to this 15-minute base and then push up. I would like the same thing as with Will. I would like for us to react off of this 5-minute base that we have over here as a potential push up higher. But I'm not sure, mate. I am really not sure right now. Mondays have proven to be a bit of a...
They're not my favorite day.
thorn in my side.
Yeah, they're certainly not my favorite day in the world. I'll give you that information for free.
Frank Kennedy saying 1 hour candleless candle is wickless. Should we wait? So the 1 hour bearish candle was wickless. We had a wick on the current 1 hour candle. We have just swept the highs. I do think that there is a potential to push up. If you look at the 4 hourly, these are the 4 hourly candles. I can go to the 4 hourly chart and you see it as well. Friday's price action was bearish. We had the gap. We have just wicked above now this bearish 4 hourly candle. So at open of market, market open plus 4 hours. The follow-up candle had a higher wick, but we still closed within the boundaries of the previous 4 hour candle. So like this. We closed within the boundaries, and we are now, for the first time, testing that boundary as well. So we can wait. We have another hour and 10 minutes left before this 4 hour candle closes. We'll see whether or not this is a fake attempt to push up and then eventual push lower. Maybe potentially come and fill this gap that we have all the way down here. So basically the gap is up to that point. So quite a big gap. We'll see whether or not... we'll see from here to here. This is a 220 point gap. It's a big one. Maybe we'll fill it during the New York session. We might even not even come back to fill it at all. So only time will tell.
I think we'll fill it eventually. Just I'm not holding my breath over it. I've given up holding my breath for gap fills.
Yeah. I also just, I don't know. These days, I don't care if it tries to come and fill the gap or not.
Literally, I don't care that far in advance anymore. I'm cool. Let's, is it going to affect me within the next 8 hours? Is it going to affect me within the next 5, 6 hours? If not, I don't care. Obviously, look, I'm not saying I won't analyze it and I won't, speculate over it and see what happens, upcoming. But I won't look at it and go, okay, yeah, I'm not going to enter this trade because there's a gap to the lower side which may be filled in a week's time. It's
Yeah.
I've given up caring. If I'm honest.
Right now we've swept both the previous 4-hour as well as the daily 4-hour, the daily open 4-hour. We've swept it. We have yet to close above. We have another hour before this one closes. What I would like to see for sells is the following. I would like to see us not close above that line, obviously. So this 4-hour, misclick. This 4-hour that we have, I want it to stay swept, not closed above. And then I would like to see price, or at least I would like to see this current candle to close maybe just slightly above the previous candle, as an example, just to show that we tried to push up, but then eventually we started to fail. And then I would like to see a follow-up candle close bearishly, and then I would definitely want to get in on that for us to potentially come back down, maybe for this gap or even a little bit lower to try and test previous week lows. So you can also go to the weekly and see that the week high is very far from where we are, but the week low from last week is within range. It's within, let's say, the next day or two, we can definitely go there. Alternatively, we can always just, from this point over here, and just start rallying up. We will still have this downward channel for the weekly that we can potentially test, so we'll have to see that as well. But this is all in wait. I have not had any opportunity this whole week to go and have a look at anything on the market side, so I didn't even have a look at my monthly or anything like that, seeing as we're coming to the end of the month. Yo, LJ, what's up?
Morning. Good morning. It is actually morning for me.
Man, how are you doing?
Yeah, good. I had a nap before my nap turned into a bit more of a sleep. I slept for like 6 hours. My partner actually called me to wake me up. She was like, "Are you awake again? You haven't been responding to my text. Like, stream is in like 50 minutes." I was like, "Oh yeah. Oh, thanks for waking me up. Yeah, I definitely slept through." So
Nice.
But yeah, so it's actually morning for me. I did. I'm just not a morning person. I always take like sort of 2 hours to sort of kick into gear. But getting there, got my caffeine ready here, so we're kicking into it. But I was up this morning trading the NAS after the weekend news, so I was hoping to capture some of that. But where we gapped on the charts was like we pretty much just gapped right to the top. Like I was hoping we might have a small
point gap.
Yeah, and then like a bit more of a run to capture. So I did pick up some off that high there as we were coming into 10 a.m. my time. That's where sort of Australian stuff kicks in, and you tend to see a bit of a reversal there. So I did capture some of that, and then once we got down to that sort of low area, bottom fish some of those lows and just took some little scalpy trades in there. So but yeah, that was pretty good, and then went to bed for a nap, which became a sleep.
Sometimes taking like a post TP nap is it's lovely.
Oh yeah,
lovely.
It was rewarding. I got my 1%, which was great. I was very happy. I was just looking for like a quarter to a half, and so I was cool, done. Slept like a baby.
Good boy.
Well, I'm just looking at MNQ now. So if we head over, because I'm looking at a long on MNQ real quick. So let's bring my screen up here. Remind me how to do this. I click.
What do you want to do?
On a long.
Okay. So you've got your bracket. You can literally just click right there if you want to.
And I click now.
And then, right.
Dude, I love Dirk's profile pic here.
There
How's
we
it
go.
going?
What's
Boom,
up, Dirk?
there we go.
Am I
Dirk,
tuned
what's
in?
good, man? How you doing?
Good. How are you?
Wait, can you guys see him? I can't see him.
You
Yeah, I
cannot
can see him.
I can see him. Yeah.
Oh, there we go. Okay, now I can. Yeah.
I can see him.
It's
Maybe
an
there's a
offline
delay
call.
with you, with yours,
Yeah.
LJ.
That's why it just
You're
had
on the other
the
side of the world.
the Duke Nukem
It's
Yeah.
logo for
I
me.
love it
Yeah.
so much. But probably I cannot use that. I'm probably like violating copyrights with that.
No, I don't know if it is in the public sphere just yet. But you can use it. You're just not allowed to make money
Profit
off
off.
of it. Yeah, you're not allowed to profit off of it. Yeah. So it's free use unless it's for profit, and if it's for profit, you have to, I don't know, get permission.
Yeah, so fair use.
whoever.
Fair use or transformative content. Yeah.
Yes. Yeah.
Okay.
Dirk, how's the holiday?
It's pretty good. Weather could be a little bit better. We always have like one super hot day, and the next day it's like we're drowning in rain. And
Nice.
today, I guess, is a day where we keep on drowning in rain. Well, it's not that rainy here, but actually, will be nice later to explore the old town of Krakow a bit. Which is
Are you in Krakow at the moment? Nice.
yes.
Yeah, Krakow.
Really want to go.
I'll report to you on Wednesday.
Yeah, mate, 100. Yeah.
Although on Wednesday I'm going to be in Breslau, or I don't know how it's called in English.
Send me photos.
No idea.
Dude, hearing you say that, the missus said to me, the missus said, what if, she goes, what if we go here and it's, and I was like, what are you doing? She's like, I'm trying to think of the word in English. I was like, what do you mean? And she goes, well, it's chow 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 chow. I'm like, I was like, I can't help you. I was like, I can't help you, unfortunately.
She said it in Cantonese or what?
Yeah, she was like, well, the word's this in Cantonese. I was like,
Yeah, isn't that funny
getting Google
how
Translate.
the Chinese language has like its own like word for everything, even
But
like
yeah, and you know the thing
Americanized.
is as well, she was like, this word actually doesn't mean anything. Like, this word doesn't exist in English. So she
Like-
had to try and find the next best thing.
Yeah, exactly. Like I was drinking like a chilled Starbucks coffee, and then I know in Starbucks is in Mandarin Sinpake or something like this.
Simpake,
So,
yeah.
yeah. So if you are somewhere in Beijing, you ask for where's the next Starbucks, people will look at you. Huh?
Oh, what the hell's the Starbucks? Yeah.
What's
no,
that?
yeah.
They don't know what.
Yeah.
Yeah, it's
Anyway,
Like,
gentlemen,
Just
with the
check.
two of you here, we're going to hop off and see you in about 2 hours or so. Going to go and have some lunch, and we'll be back in 2 hours or so. Do send me a message if there is anything that you guys need assistance with in the background. I will be here. Obviously, I've got some.
catching
I've
up
got
to you after your holiday.
I've got some office work to get to. LJ, please don't forget the request. If you can get that to me as soon as possible, then I can get that going forward as well. All right,
I'll do it right
gentlemen,
after this.
if you can do
See
it
you.
like now, that would be great as well.
Okay, I can if Dirk is able to run over some stuff just for like literally 3 minutes, 4 minutes or something.
Yeah.
Just to
Sure.
compile it. Yeah.
No worries.
All right.
Alrighty
See you
then.
guys just now. All right, guys. Cheers.
See you later, Reg.
Cheers. Bye bye.
On that note as well, guys, I am going to love you and leave you. I shall see you all in about 2 hours' time. Make sure you look after these two fantastic gentlemen just down below and ask, well, I'm assuming going to be ask Dirk for the next 2 to 3 minutes. Ask Dirk questions. But guys, thank you very much. I shall see you all in a couple hours' time. Also, guys, if you haven't already, make sure you smash that like button, subscribe to the channel, and I shall see you then. Peace.
Yeah, that's
Peace.
the most
Thank you,
important,
guys.
guys. Yeah, leave us a like, subscribe to the channel if you haven't done so already. And my God, it's like so weird with a white background.
Yeah.
lights installed and anything. Yeah. I mean, you do what you have to do, and then you'll come back in
Cool.
2 minutes and
I
go over
was
some
going to
stuff.
sit here on camera, but it'll probably just be quicker.
Okay, whatever. All right, so guys, good to see everybody. And as you guys know, I'm a bit on holiday, so I might not be so much up to date with what's going on worldwide as I usually am. Of course, I'm still looking at stuff. I'm still looking at my charts. I'm dedicating a couple of hours every day still to managing positions, to open position. One of the positions currently still open, and I wonder if LJ has that one still open as well, is the one we actually opened together last Monday. So that was a week ago on the 20th of July in gold, where we said, okay, this looks kind of like a solid area for gold to make a turnaround based on how far we've come down again, and basically that this all here seems to be a nicely supported area. So LJ came up with the idea. I liked it very much there. So I longed there a little bit in profit. What is, in my opinion, now important that this trade plays out to maybe the full 3.94R that I'm aiming to get in this trade is that we close above the 8 weeks moving average. So that's the blue line you see here on my screen. That would be very important, because then it would kind of indicate that we are seeing a break of structure there, and that we have the potential to go further to the upside. Other than that, this morning I was looking into getting into some trade. I actually thought of buying a small scalp position in gold of this quite nicely zone of support here. However, there's not so much room to the upside, so I rather would see it if gold goes down into this zone again here, which is currently sitting around 4,058. I doubt that we are going to see this during this morning session. Markets tend to be a little bit calmer, although that would coincidence here with the gap opening that we saw this morning. So I'm looking here, of course, on the future of gold, the gold future. NASDAQ, pretty much the same picture. Is all a bit narrowly tight at the moment, so nothing that springs into my eye there. The other asset I was looking at is Euro, the Euro future. Also nothing that really springs into my eye, and it kind of makes sense also because we are getting quite a lot of data this week. One of them, of course, being the interest rate decision of the Federal Reserve on Wednesday. Right now, forecast is unchanged, 3.75%. Let's look at the FedWatch tool quickly, how the forecast is there. So for those who don't know, this tool is pretty neat. It's done by the CME group, and it tells you kind of a likelihood what market participants are currently expecting when it comes to interest rate decision. We can see about 66% of market participants expect that the interest rates stay unchanged. However, we have 34% or 33.7% expecting an interest rate hike of 25 basis points. And LJ and I, we have discussed about this over and over again. If that really is something that makes sense for the Fed to do interest rate hikes, because if you zoom down here, so if you, for example, go to the next meeting after the summer pause, which is going to be on the 16th of September, there you can see actually that right now the market is expecting a rate hike of 25 basis points, whereas some market participants even of 50 basis points. However, this will of course change. Highly depends on the inflation data that we are going to get, and this is actually something I want to discuss with LJ here on the stream later. We've been talking a lot. Is this one? Let me check quickly. About the inflation gap, so I'm going to come back to this later again when LJ is back. Oop, what is this? I think I broke something. Am I still on? Yeah, I am. Good. So something I want to talk with LJ about. So for now, nothing really that like jumps into my face, screaming at me. This is like a short-term trade to to jump into. Let me quickly scroll also through the questions here. Question from Brahmadev 1800. Can I become profitable with a negative risk to reward? In theory, of course, you can. I interpret your question or your definition of a negative risk to reward that you lose more on your average trade when you win. So this is actually the reality that happens to a lot of traders, especially beginner traders out there. Say, you risk $100 to win $20, something like this. We see that very, very often. The main thing about this is, you can become profitable with this, but it's less likely. So if you look at your statistics, not for like 10 trades or 50 trades, but for 1,000 trades, I've honestly speaking not seen a lot of traders that are successful despite the R being slightly negative or the risk to reward being negative, so risking more than they can gain per trade. So I wouldn't do that, because the positive side effect of working with a positive risk reward ratio, like the one you see here on my screen for the gold trade, is where I risk 1 unit to gain 3.9 unit. So that's a 1 to 3.9 or 1 to 4 risk reward ratio, is that I do not need to be correct so often. So let's say if my trade would be a coin flip at 50%, trades like this still would be super profitable. In fact, with a risk reward ratio like this, I only need to win like 1 out of 4 trades to still end up not losing money. So that's, you kind of let math play for you, to put it in words like this. Plus, it also forces you to look more into your trades, because trade setups like this are rarer, so you end up actually not trading so much, which is a good thing. It's not advisable, especially if you're a beginner, to try something like doing 20, 30, 50 trades per day. If you do that per month or even per year, you are very well off already. So aim for something that's a bit boring, so to say. Trading is not supposed to be high action, clickety-click action, like of course, a lot of social media, a lot of marketing material by exchanges suggests it is. Exactly. The issue with negative R is market most of the time is random, which is 50-50. Therefore, your RR needs to be at least 1-to-1 to make money. Absolutely. I agree with that. And it's funny. I mean, I've back-tested, designed, forward-tested probably thousands of trading strategies in my life, and more actually nowadays, because thanks to me using AI for a lot of the software tools that I needed in the past to code myself, I can outsource at least parts of this now to, for example, Claude Code with Opus 5.0 and Fable model. They are very competent in coding. In fact, much better for a lot of stuff than I am myself. So I can test many more things that per year or per month than in the past. And it's funny how almost every strategy ends up being in the pocket between something like 47% and 54% of success rates. So this shows you how unbelievably competitive the market is out there, and with how many other retail traders, professional traders, and so on you are competing that take away edge. So my advice for you would be, if you find something that is basically a coin flip, like 51% of the time right, then start working on the risk profile, because a strategy like this can be very profitable if you are able to get your risk to reward ratio to 1-to-2 or 1-to-3 or even 1-to-1.5. So let math play in your favor and not against you. Don't start trading trying to scalp the 1 minute chart and so on and so forth. Scrolling through more here. A nice discussion you guys are having right now here about risk management. Like it very much. Yeah, we can do that later. Since the pound is involved, I'll hand that off to LJ later. It's not a trading pair I trade very often. Bart, hedge fund Bart is back. How you doing, man? I think you're muted. You are muted. You are muted. I cannot hear you. Or is it just me? Can you guys hear Bart? Yeah. Okay. Yeah. All right. Sorry, guys. I'm talking with LJ in the background, who just told me he couldn't hear Bart as well. Yeah. What else do we have? We have a bit of more data coming out this week. Thursday, for everybody who's living, for example, in Europe, quite important, because we're going to get the GDP growth rate. Let's see. Of course, for Germany, the forecast is 0%. We're not growing at all anymore. We're getting some inflation data from Germany, and we are going to get the core PCE price and GDP growth rate from the USA. So Thursday is quite going to be a busy day, then followed up by inflation data on Friday for Europe. So a lot of stuff coming out. If you're trading on accounts that prohibit news trading, you might want to be very careful there, not to open new trades around this time. Yeah, just seeing, okay, others cannot hear Bart as well. So Bart, must be something with your microphone, maybe. Yes, now I can hear you, Bart. Hey, welcome.
Yes, perfect. Thank you. I don't know what was wrong about it, but
Yeah.
I'm glad I am back.
Sometimes Windows likes to change settings without doing anything, actually. How's Sven?
I think that is it.
I can see you adapted the hedge fund in your name very nicely.
Yeah, it was from last week and I haven't changed it yet. But I also like it. It's kind of funny, so I'm letting it in for now.
You should. How's trading? Are you in something at the moment?
Yeah, I already took a trade. I
nice.
got in like last Friday and on gold, and it bumps a bit.
Nice.
So I was out this morning, and I'm already back into a long trade on the S&P 500.
Okay.
I think I also need to share my screen, again.
That would be good, yeah.
Let's see. And you, Dirk, are you still on vacation?
I'm still on vacation right now. I'm in Krakow. Then tomorrow we are heading to Breslau. As I said, I don't know how to say how the English name for that is. The Polish one I cannot pronounce. And after that, it's home. So next Monday, I'm going to be back in my usual spot in my office. Here we go.
That's also nice to finally get back. I also see LJ back here. So good morning, LJ.
Morning. How we doing? I had to send off a document to Rich, so I just had to quickly pencil that in real quick. So yeah, don't worry, I'm back. But yeah, welcome, Bart. How we doing?
Okay.
Going strong?
I'm doing great. I want to share my 2 trades. I already did today, but
Beautiful.
I would say it's nothing that special, but I'm always saying that.
I was just about to say, that sounds like your usual mantra. Oh, it's not special. I just made $1 million on this.
Yeah, I just pocketed
Yeah.
full yard, hedge fund Bart over here. Easy morning,
Yeah. That's true.
Pocket
But
change.
yeah, about the trade. First was with gold. I also like breakouts, and now I'm trading like more manual. What I said. So I took this trade manual, and it's just that we broke this last high, and I think we're going higher, and it's also some intuition. So I just took the trade. The whole day on the Friday, we couldn't get to the TP. I'm just waiting, and this morning we got the win, and it was on just a 5K account. If we're getting back to it, yes. Let's see. And why I bought a 5K account is that last time we did like a giveaway of like a 5K high stakes account, and people were like saying like, oh, 5K, it's not much and I can't do anything with it. So that's why I wanted to prove that you also can make a good amount of money with just a 5K account. So I'm now almost done with the first phase. As you can see, I haven't lost a trade yet, so also a bit of luck. But I want to show to get to the point to your first payout. And if you get like a payout of 150 euros, dollars, then you can buy the 100K summer plan. And then I want to let you guys know how you can grow within that, and maybe in a year or in a few months that you can make your first few $1,000s just with a 5K account, what is not too much money, or if you win a giveaway with us. So that's what I'm planning. And also a trade on the 1 day, and that's like what I always do the same, is that we got a really red day on the S&P 500. So what I do, we got a real red day. Normally I only buy under the 0.2, but somehow the trade got activated. So I got into the trade here, and now it's running a little bit green, so that's nice. And the last thing I wanted to say, it's much, but about a question what I heard private from somebody else, said a lot of people are trading only the NASDAQ because they really like the NASDAQ. And what I see the last days and weeks is that the S&P 500 is more stronger than the NASDAQ. So the last few days, if I want to take a long, I'm searching longs and only trading longs on the S&P 500. And if I want to take a short, I only do the shorts on the NASDAQ now. As you can see now, it's more growing than on the NASDAQ. And also I took this this trade last Friday, and as you can see, I made it to my take profit. And if I took the same trade on the S&P, it hasn't. It's going straight to my stop loss. So maybe it's good for some people to also look at the other markets, because sometimes I heard people say, yeah, I only trade NASDAQ. But maybe it's good to see how the market's moving and then make a decision. Okay, I see the NASDAQ is going really bad, so if I want to take a short, I will do it on the NASDAQ. So you have like a bigger opportunity to make it. And yeah, I don't know how you guys think about it, because I heard it a lot, but I think that for me it's better, but I don't know.
Yeah, I mean, definitely. Recently, like, tech's been getting swamped with the whole Korean Kospi trade, the chips trade. We had Google earnings last week, so first time for like negative free cash flow or whatever on the year. But so yeah, a bit of a janky kerfuffle. People still trying to decide if they believe in like this, I don't know, potentially extended multi-decade run of AI. That like, yes, it looks expensive now, but if you put in that context and you're going to hold this, you actually want this investment, this huge dump into infrastructure and that kind of thing to actually get it there, right? Hang on, give me 1 second. I just got to respond to another message. Sorry, I'll continue my thought in a second.
Yeah, that's fine. We will see him later. I can't hear you, Dirk. I don't know if the other people can hear.
No, I'm unmuted
again.
Yes. I said I very much agree with you. You should have a look at both. In fact, you can also look at something like the Russell 2000, for example, which has like more of a smaller cap stocks as well, and rotational effects, where money goes from high tech into more small caps or defensive sectors and so on and so forth. And you can build models around this. So one thing I, for example, do is I look at how the correlation between NASDAQ and S&P is, S&P 500 is, or like NQ and E and ES. So the futures there, and if I see that the correlate, normally they are of course very, very tightly correlated. Yeah, you rarely see like, oh, Nasdaq is going up 100 points and the S&P 500 is not going up. But if that happens, and if the correlation exceeds certain boundaries, then I, for example, might intraday look more at the S&P 500 to see some kind of effect that the correlation tightens again. I don't know how to put this into words because it's a very mathematical concept. So based on this, I choose, is the NASDAQ today the better instrument to trade, or is the S&P 500 the better instrument to trade? And if both are not, I might have a look at the Russell, for example, which I do not trade, honestly speaking, at least intraday very often. Other than that, when it comes to really futures trading, I actually also am more on the NASDAQ than I am on the S&P 500, honestly speaking, because the volatility is often a little bit greater, which is, of course, something I want to have as usually as a trader. Not necessarily crazy volatility, but if you, for example, compare here 15 minutes the S&P 500 to the NASDAQ, you see it's like a very similar move this morning. Yeah? We had gap opening to the upside of the futures, and then they kind of did this pattern. So in this case, it wouldn't really have mattered what you're trading. Nice, by the way, in your trade that like your take profit seemed to be right at where the futures opened. Yeah, so you were like immediately you woke up to take profit, so to say, probably, which is a nice way to start a Monday.
Yeah, I was a little bit nervous, not too much, but when I wake up, I wanted to see what's my gold trade doing, because sometimes after a weekend, you can just like have a wick down. So I wasn't hoping for that, but everything was fine.
I was over the weekend in a Kiwi dollar position, which I didn't close out on Friday, and I also was a little bit nervous. I was like, oh man, I hope the orange guy is not like making the wrong moves again. But surprisingly, the market is not so much reacting to it anymore. Seems like we've gotten used to his shenanigans in threatening with genocide every 2 days.
Yeah, I think also for a bit, it's like you hear it 20 times and the market is moving, but after like 200 times, they don't care anymore or something.
Yeah, and we see it more on the bond markets, the effects of it. You back, LJ? LJ?
Sorry, no, not just yet. Hang on, sorry. I'm still sending this message. Yeah, sorry. I'm sorting some stuff out. Sorry, give me 1 sec, guys.
Just doing your thumbs up when you're ready. Then we're knowing
exactly
you're done.
Yeah, like SUSM 4930 says, I agree. Sometimes S&P 500, US 500 moves cleaner than NASDAQ. Exactly that. Although, of course, the heavy hitters in the NASDAQ are also in the S&P 500. So otherwise, of course, you wouldn't have these large correlations also. Seems like somebody wants that you run a hedge fund for the audience bar.
Yeah, I understand. But that's not possible. Maybe in the future, but
oh God.
Not,
do yourself a favor and do not open a hedge fund. It's a nightmare. The amount you pay in auditing every year is like you can comfortably live off that already. It's not worth the trouble.
Yeah, I agree with that. We have prop firms like The5ers where we can trade with enough money.
I meant to say that, to comment on that actually, what you're doing there with the 5K account, I like to do that as well. And not because I necessarily, think like, oh, I just want to invest like $30 or what is it for it, and then scale it up to 100,000. For me, it's like always a sandbox also. So right now, for example, there's a strategy, an automated strategy, which I've actually worked on since the beginning of this year. And finally, I think I found a way to make this one quite good profitable. And what I'm doing right now is I'm letting it run on a 10K evaluation account. So before putting my own money, for example, or even thinking of scaling, I want to see, is the execution that I've modeled comparable to reality. And in the past, of course, I needed to do this with demo accounts, which are not so realistic. But with the evaluation account on the 5ers, I know that the fills I get there are going to be the same when that account, for example, is funded. There's like no difference within that. And that makes it like a very realistic experiment. Because within a couple of weeks, I know this works or doesn't work. And if it doesn't work, I have all the data. Doesn't it work maybe because commission? Doesn't it work, which very often is the case because slippage is different than I anticipated? Or doesn't it work because, it always likes to trade when news come out because volatility is great. And with a high stakes account, of course, we're not allowed to do that on the 5ers. So, and I think like even if you do that with a 2.5K account, which you can get for $19, that's a very good investment because you will get a very realistic picture of if your strategy is also later on going to work. Because if it works on a 2.5K account or 5K account, it's also going to work on a 100K account. So for me, it's really, I like to buy these like a sandbox experiments where I can test everything under the most realistic circumstances, and then I very quickly get a yes or no. So usually I have like 150 to 300 trade executions that I want to see, and if these come all clean or like with no surprises, so my profit factor, my edge persists, not only the out of sample data, but then the real executions as well, then I can be very confident about, this is a strategy that actually works, and turn it, for example, into an expert advisor or something. But the way is very long. It's like from this strategy, the first iteration of the strategy I had in January, and now we are end of July, and I'm about like if everything is okay tomorrow still around this time, I'm actually going to switch the strategy into live mode. So I don't, maybe it's for you different, but for me it's always fascinating how long it can take from having the initial idea until the final product, even with all the technical help through AI and so on, that I can utilize nowadays. 5 years ago, that probably would have taken me like 2.5 years or something. So why am I saying this to the audience out there? Because I want to motivate you to not give up too fast. Just because something doesn't work right now, it can be market regime. Like, for example, Bart, you have your gold long only strategy, which probably hasn't traded very much during the last months, I assume. Yeah, there's a market regime where strategy works. There's a market regime where strategy doesn't work. And just because it's not working right now doesn't mean it's like never going to work.
Yeah, I think my gold strategy last trade is maybe like February or March or something. Yeah. Just when the top happens, then it just was all down. So I haven't traded it yet. And what you said about like a 2.5K account or 5K, I agree, because if you trade like demo, it's still another server. But if you need to get a server, it's different. So if you want to have the best results, I think it's better. And also, I think people also got that. And also for me, it's a little bit more fun to test on a real account, because if you're making it, it just feels nice to get your account funding, or just that feels better, I think, than a demo account. And what you said, I can see in people's how many money they got every month to spend, but for me $19 is good enough to give a try.
It's very cheap, because like you said, the upside is limitless or unlimited. Your downside, what you risk, is $19. If you do the same with your own money on, let's say, a 2.5 or 5K account, your downside risk is much, much higher, because if something does not work, and if you're into automated trading, I can guarantee that there's something that's not working that you didn't foresee, and that can be very expensive. I had this in the past, that I lost several thousands of dollars just because I oversaw something. I assumed, my coding is perfect, turned it on, and then, there was like a decimal swap or something. In German, I think in Dutch is the same. We don't write 1.0, we write 1, what is that, comma, 0. I don't know what comma is in English.
Yeah. I always hate seeing that. It annoys me so much.
And
I'm just like,
since coding languages are not German, they use the English decimal system. That's a mistake that can happen to you, and that can be a costly mistake if all of a sudden you end up not trading like one lot, but 10 lots or something like this. And it's nice, to have then the evaluation accounts where mistakes like this can, if you go with a 5K account, will cost you $30 and not like 500 or something like this. I wish we would have had this like 10 years ago already. That would have saved me a lot of money.
yeah, I was going to say, yeah, I think everyone wishes that. And some people don't wish it, because people that have been working on stuff for 10 years and they've got a full career doing this, it's been very, sort of wiped out. Like the playing field has been equalized to a degree.
Yeah,
so,
absolutely.
yeah. But for us, it's great.
For us, it's
So-
mega. It's good and not good because I love it so much. Like thinking about strategies, when modifying it and trying things out, a bit like the crazy guy in the basement that builds robots, and it's so much fun. I end up spending much more time in front of my screens than I did before. Because when I coded it all myself, like line by line by line, of course it's more exhausting. Like this now, I can be more creative, which ironically leads to more work then, because I have more ideas that I in parallel can implement or try out.
Yeah, I still can't find like super quality data anywhere without paying, several thousands and thousands for it. So I don't know, where do you actually get your data from?
I collect it myself. So for example, for the 5ers, I have now for over a year already a server where MetaTrader 5 terminal is open, and there's a Python library that can connect to the MetaTrader, and it just pulls out all the ticks always. It's just running 24/7. On the weekend I restart it, of course, sometimes because of Windows updates, and it just gets all the tick data. Because like this, I can then realistically backtest on the actual data from, for example, the 5ers. So I know, and the data can be very different from broker to broker, the tick data, and different tick data leads to different outcomes, like vastly different outcomes. It's always amazing, like what happens with the data just slightly changes. So I do that. Of course, there's always the option, to buy data, but like you said, that can be crazy expensive. If you want to buy like gold futures data for like tick data for the past 10 years, be ready to shell out like for high quality data that is like $2,000 or $3,000 or $4,000 for it. And so I ended not only for the 5ers, also other sources, of course, just collecting the data myself. It takes a while until you build up, of course, a library of data, but it's well worth the wait.
Okay. What about you, Bart? Where do you take your data? How do you approach it?
What data I use for like backtesting?
Yeah, where do you sort of take it from? Have you bought data? Do you collect it yourself like Dirk, or have you got some other source?
Yeah, I have like data from like a group where we're helping each other with like the trading digital, and a few guys had like data for the last 15 years or something. So that's what I use. So that's nice because I don't have to collect it myself, and I have it for like more years. But the only thing is, it's like so many, so big is the download, and it takes like hours and hours. That's the only problem with it. But
Okay. Yeah, because I mean, I've been using like CTrader often, like pretty good with the tick data there. Perfect example for you guys, like if you use any kind of training data, if you use just like minute 1 bars and then you go to tick data, you get completely different. They can be worlds apart, absolute worlds apart. So I've been trying to find other quality tick data that I know is reliable. Like I found other bits, but I don't really know how reliable it is.
But like on the 5ers MetaTrader, the tick data is quite broad there. You just need to go to, I think it's on charts or something, and then you can like activate that it loads all the data, and then on every chart you need to zoom out and scroll left, like so it reloads the data. And I think they have like for 2 or 3 years tick data also on. What you can do then is, I mean, it's it's okay to test on 1 minute bars, for example. But you can, for example, do a test on 1 minute bars and then use the tick data and, like you said, see is the result still the same, or is there something going on that my order execution is way different than I would assume on the 1 minute bars, which is very often the case. But if it's not different, then then you can backtest everything on 1 minute bars.
All right,
but still,
I haven't.
data is the better way to go, of course.
Yeah, I haven't tried it on the 5ers tick data, so maybe I'll try that. I gotta just convert everything from C into MT5.
Yeah.
C, yeah,
that's a bit of pain.
C sharp. Yeah, exactly. That's one of my problems, because a number of times I've tried to do it with other packets of data, and then the algo sort of just breaks itself, and I'm just like,
do it in Python. It's much easier. Python, there's an MT5 library, and that's pretty easy to dig into, and then you can even do that with Claude. Just tell me, I want to extract the tick data. The only thing you need to be, that's like a trap. I wish I could tell you I didn't fall for that one like 2 or 3 times in my life already. I did more often than that. Is that you need to be careful with the time zones, because your time zone is going to be different than the broker's time zone, and that's very mean. If you think that, I found a strategy, and then no, you didn't. You didn't.
Indeed. I was going to say that's been one of my biggest pains, actually getting the time zones right, and then especially with daylight savings as well. I think we've talked about this before. Definitely massive pain. I'll have to try that. Same with like TradingView. I was wondering if that's any good or just like waste of time. Yeah, I didn't think so. Because it's a derivative on a derivative on a so.
It's like if you develop indicators that you want to use in TradingView is fine. But still, the thing, and guys out there, I don't want to get into too technical details, but like maybe this one thing. The thing is, TradingView, PineScript, the language, it computes on every bar close or on every new price within a bar what the indicator looks like. So if you want to try to port a PineScript indicator, for example, to Python, usually you work with vectors there. So it doesn't recalculate on every tick, on every close, usually. So you get like different results. So one of my processes when I, for example, develop an indicator like this that I want to use on TradingView or that I want to give to people to use on TradingView for free is that I always make sure that my Python harness is the same like TradingView. So I'll download data from the indicator from TradingView, feed it into Python, say make sure that what you calculate looks exactly like this, because otherwise I'm quickly comparing apples to pears. But these are like, there are so many of those, trap pits, so to say, when it comes to coding with financial data. And, you probably have to experience all of them yourself.
Yeah, I agree. I think it's one of those things like learning how to use AI, with coding and all that kind of stuff. Like there's a certain process you got to go through to actually get the most out of it, extract the best kind of results, that kind of thing. So it's always a tinkering process, but regardless. Okay, so since we're still on the indices somewhat right now, we got from Frank, LJ look at US 100. So I'd be curious to see what you guys think of with the indices. I know we did touch on them briefly before. I had to jump in and out with some other bits. So I know as well, Dirk, you've been sort of out of the mainframe, we'll put it that way, of the past week or so. So I'm curious what you think, without having been totally immersed in in the day-to-day of markets recently, and then I can also give some updates on what's going on. I will say that obviously we had this large gap on the Friday. I was looking for us ultimately on Monday to rise up through here, that the Iran situation would peter out. I believe you mentioned the gold trade that we were talking about on the Monday.
Are you still in that one?
No, I did jump out because of the weekend stuff with Iran. Now, because originally that was going to pop off, eventually didn't. I believe that's because there was like recommendations or probably a bunch of things that this is just not going to work. Being that full aggression They've also spent a huge amount of America's arsenal, like on the what's the specific rockets? I don't know. They're like $4 million a piece, and they've used like 1,200 of them. Is it the Tomahawk missiles? I don't know. I forget. But
it's like the
regardless,
amount they fired, they comfortably could have financed Medicare. What is it called in the USA?
Yeah. Medicaid. Yeah. Exactly. So, and the other thing is like the time it takes to replenish that stockpile, right? And as well as getting the resources needed, or the bits and pieces. So that's a very long wait time. So if they continue to dump now, they'll have nothing left. So I think there was a general recommendation that, okay, we're going to start this and it's going to keep going. You've got no guarantee that it's going to finalize things. But I think we are coming up to the final battle, the final countdown, as it were, to see where this ends up, where the US eventually has to like pull back and go like, okay, this is just a waste of time. I think this is a last ditch, last breath effort to see what we can do. Can we shut down Iran in some abstract way, perhaps, now they're looking at? And obviously Iran is trying to press that throttle and basically, pretty much on like a cost basis, force the US to pull out, right? Just because it costs too much. And it's a win, but it's a small win. Is it worth the what's that old trope? Is the juice worth the squeeze? Put it that way. Yeah.
Is it worth the struggle?
Yeah, exactly. Yeah. So is the result worth everything you put in? Now, at the same time, I do think there's definitely scope for stuff to come back off. We've seen Iran basically being very skeptical, sort of denouncing the US pause. Of course, they're going to do that. You can't really believe anything from either side right now. You kind of got to wait until... Take it for what it's worth, but then wait until something actually eventuates. On top of that, we do have a bunch of the earnings this week as well for some of the other big tech players. So that's definitely going to rock the NASDAQ. Last week we had a couple of them. We had Netflix, Google, we had Intel, wasn't it? Or was it IBM? Either way, majority of last week was predominantly like healthcare and financials. And so just like Bart was highlighting before, that's why we've seen like S&P outperform. And we also had the problems further with the Kospi. There's still a bunch of churn in there with the chip players. So that's sort of rocketing things all about. And I think Micron in particular had a bit of a dump on the Friday as well. So going to be interesting coming through this week with all of that. Plus we got the Fed, right? We've definitely gone back to that position of, I think you had it up before, the Fed Watch tool for the probability of hikes. So we've definitely jumped up again for potentially more hikes. And we're seeing that again across the globe for all central banks. And we've seen inflation fears and all that kind of stuff pick up. I still got to say, I don't see it. I see everyone talking about this right now, but I can't really, I can't really map the two. Like, I really have to reach to try and get there. It just doesn't, I see you've got something here, so maybe, yeah.
Yeah, I was the other day I was really thinking about this, this 1 year forward swap being less than 2% when it comes to inflation, and that the household expectation for inflation is actually at 4.2%. So you have this lining up, the market expects the next 12 months under 2%. Households expect 4.2%, and even the Fed you have at 3.6%. So I was thinking about this a lot and looking into, did we have something like this before? We actually had during COVID, where we always also had forward inflation swaps at 2%, and in reality later we had 9% inflation. But of course that's like a special occasion. This is also a special occasion. We talked about this last week. I said this is supply things of logistic chains that cause the inflation. It's not a demand-driven inflation. So the Fed cannot really do anything against supply shocks, in my opinion. And interestingly enough, this is also like a 1 year effect only. We only have this for the swap 1 year into the future, that we are below 2%. If you look at 5 years, 10 years, or years 5 to 10, so above 10 years, they are sitting where you would normally expect them, around 2.2 to 2.3%. So just this next year is going to be quite interesting. And it's just like, and maybe we're actually getting a better picture of this already this week, not because we have the interest rate decision, which I think is going to be unchanged. So I agree with the 66% of the market that says we're not going to see the change. But July 31st, PCE inflation. That's going to be an interesting one. And of course, in August, when the next time we see the actual CPI. Let me put it like this. If I would be in the chair at the Fed being the one making the decision, I wouldn't dare to hike interest rates at the moment. No. I would be more on the side of lowering them, honestly speaking. Because that's the only way I can really stimulate is supply shock as well, like to make financing easier and cheaper for companies.
I agree. I think that's the only sane path, and especially when you look at other external countries, like no one else is really like rocketing off in terms of productivity and that kind of thing. Like the US has been an exception, and that comes down to the AI situation. Yeah. And now there's the determinants of whether AI is somehow cyclical or if it becomes like a staple. People are still kind of in the cyclical type band, but it might become more of a staple. And then from there as well, whether you think it's inflationary or disinflationary.
Yeah.
And there's a lot more people coming out now trying to say it's inflationary because of all the spending on, chips and data centers and all this. Like, if that's the case, it won't survive, right? Like, it has to actually go back the other way. And we've seen this with every single piece of tech ever in history. So I don't know how people are putting this together as though that's going to be some sustained baton. Like, it won't be functional. You can't use it, which means you might as well write it to zero. And then you got to write all the, take a massive discount on all the chip makers, all the Mag 7 players, like just write off all that future growth. So, but at the same time, they're saying because it's going to be inflationary, we should see them go up. Like, who's paying for, like, I don't, like, basic, like, addition, subtraction has just gone out the window. I don't know. So I think that's really weird. The other thing with the inflation picture is there's a weird distortion with how they calculate things in the core PCE, which I think is why Kevin Walsh wants to get rid of it. Particularly things like housing, which goes back to things like the mortgage bonds, mortgage-backed securities from COVID that they were buying even after housing settled and then started rising. They kept buying it and buying it. I think they're still buying a portion now. So that definitely artificially inflates certain portions and elevates sectors of that calculation. So it's like a calculation problem and issue. As well as on top of that, obviously housing across the globe now is becoming a massive issue. It's probably going to be one of the biggest political issues in general going forward globally. There's definitely going to be some changes, tax changes, rule changes, whatever it might be in certain jurisdictions. So I think that one that's being artificially calculated from capital injection from QE. And then on top of that, you have a further rollover of debt and debt refinancing after COVID. You've got the US government in particular, which has a massive debt cliff of having to refinance and roll over debt. And then you've got private companies having the same issue, where it all sort of is clustering at once. And so hence you're seeing rates, bond market go up. But it's almost like people, even I've listened to a bunch of people in the bond space, and it's like they're attributing why rates are rising to completely the wrong mechanisms. And to me, it seems wild. So either I'm completely wrong and I have no idea what I'm talking about, or everyone else is. But I feel like we've done this so many times. I've seen this, through the entire past 13, 14 years I've been trading, I see this every time where you get this huge clustering, this huge herding effect where everyone is on this one side of something and it's completely the opposite. And this feels just the same, kind of like tariffs last year with inflation going to 10%, 11%, or a complete market crash and all this jazz. So I agree with you. I think the next question with this, I think, as we've been talking about, is at what point do you start betting on the other side? The timing is hard, just like the dollar yen situation. This was where it gets difficult, right?
I mean, I said last week, Monday, I still have it in drawing here as well. Let me quickly switch over. I said once we touch the bull market support bands in the NASDAQ, which was almost the case on Friday, this is the time where I start buying again. It doesn't mean that we cannot go lower, touch the 200 line or have some sort of flash crash event or something. That can always happen. But and this is, of course, not like for day trading or scalping, but for thinking like, oh, this might be a good point now to invest forward going for the next 3 to 5 years or 10 years, like do single stock picking. And this is still my go-to signal. We almost did it on Friday. I hope we're going to see it this week. And then I'm going to start buying again. The buying that I actually wanted to start doing like in October, November. But this would be the sign for me.
I agree. I think, it really does come down to Kevin Walsh this week. Obviously, we have the earnings and stuff that's going to create volatility. I don't think it will set direction. It will be more volatility. Kevin Walsh will set direction overall. It's whether he wants to keep that powder dry, just like he did last time, for one more meeting and then wait till September and then, punch it, right? It gives him an extra 2 months, see what happens with war, that kind of thing. He can spend more time getting the rest of the Fed on his side. Right now, you've got a very 50-50 split, so it really is Kevin Walsh that tilts the pan one way or the other. So that's going to be interesting. And I could see, even if he believes that, yes, rates should go down, he stays more neutral and such, which gives that sort of impulse that there's the potential of rate hikes going forward in the market. But then he pulls a whammy out later and we fall off. That would also give a perfect, in theory, you would potentially see, NASDAQ, S&P indices drop down further to that lower band, like you highlighted. And then, yes, I do agree that would be a very nice buying point overall. So, because, if we do, then the risk reward changes, just like you were saying, right? So risk reward then becomes that they flip the other way and we drive higher. And starting to see that across the board, like we've started pricing in rate hikes for ECB again. Another 2 by end of year. I think, I got to say, this stuff is insane. And I think the currency markets are now starting to call bluff on some of it. For instance, like euro dollar hasn't moved. It's been languishing. Dollar yen's the only one that has really driven higher as far as the dollar component, which comes down to people calling bluff on the Japanese side more so. However, they're also getting further and further more aggressive, really signaling that. So I think we're going to have like a cross cataclysm of all these things kind of combining at once, and we'll get very aggressive shifts. That's kind of where I see it happening.
Like for single stocks, you're going to have outliers to the downside, of course, as well. Again, if you just look at Tesla, for example, same when you look at SpaceX. We mean they missed their earnings by such a margin that's actually insane. Came out last, I think, Wednesday it was. But I mean, this falls on fruitful ground with me because I absolutely despise Elon Musk, one of the worst human beings around, in my opinion, at the moment. But that's just my opinion. But yeah, like you said in general, and it doesn't really matter if you translate this into, trading or buying something more tech NASDAQ based, or you prefer to do that in the SP 500, or even the Dow Jones, which of course is not my preferred instrument because of we've been over this also a lot of times already, because of the way it calculates. If you have a share that has a very high number, Diacartic Incorporated that trades at $500,000, then Diacartic Incorporated is going to be the heavyweight of the Dow Jones, although it might be not even worth 500,000. Who knows?
You could be worth 50 billion and Nvidia's worth 4 trillion, but you can change the entire index.
Exactly.
Yeah.
Doesn't make sense. That doesn't mean, of course, that it's not good for trading. It's just for me, I don't trade indices like this. Like a bunch of more throughout the world.
It's far more cyclical. Yeah. And so
Exactly.
just like we were saying, it definitely more heavy weighted to the financials, that kind of things, like banks and stuff. So if we are seeing rates actually at peak or peak sort of fear of potential rate hikes or inflation scares, that kind of thing, then you would potentially see it underperform going forward.
Exactly.
Of course. So, yeah.
Rates coming down a little bit, or yields coming down a little bit also, 10-year, although we are in a steady climb there still.
Yeah.
Yeah, and the thing is also for me, the whole narrative we are seeing at the moment is, I mean, in order for that to become true, to see really like 4% inflation or 5% or 11% or whatever those crazy numbers out there are, that means that the war needs to continue. Because that's the thing that's causing the supply shock.
Yeah.
If that ends, everything is not immediately back to normal, of course. There are like dragging effects with fertilizer and so on and so forth. But I read this week, for example, like, the USA is running out of oil. They are at the lowest oil reserves now. It's like fear mongering, like, tomorrow you're going to gas up your car and you're not going to get gasoline anymore. No, it's not going to be like this. The USA is not dependent on oil from Iran or from elsewhere in the world. I mean, they are sitting on Venezuela, which has the highest oil reserves in the whole world.
They are the best position in the world with oil. Zero, like, that's just straight up. That's it. So yeah, I see a bunch of this as well, and same with people fear mongering this, and almost like they're still in. They want their shorts or their bearish plays to play out, like almost like saying like, yeah, we should keep pushing. Like they almost want the war to continue, right?
Yeah.
Totally deluded from, no, this is not good. We don't want this. This hurts people. It's bad. It's bad. War is bad. Okay, who cares about your short play or whatever? Jump out, stop being silly, and buy the index.
Yeah.
But yeah, I've seen a bunch of like advocation for like in just a weird sense. I don't know. Some people are just so disconnected. Just watching stuff on from certain fund managers and that kind of thing across like Twitter and that. I'm just like, God, it's so siloed in like just a weird way. Yeah. Anyway. Yeah.
And I mean, like maybe as a last word from my side, because you mentioned earlier AI chip manufacturers and so on, of course prices are going to be elevated there because the demand is so high. I mean, look at the turnover nowadays from, for example, OpenAI and Anthropic. The time between the release of two models, it's like getting shorter and shorter and shorter, and the improvements in the models are not tiny steps, they are really giant leapfrogs. And if I compare like how it was 2 years ago, I really wondering how come you were able to do anything with these models nowadays, And like, for example, Opus 4.8 was just released. When was it? In February or March? And now it's end of July, and they just released Opus 5.0. In the beginning, this took like 2 years for something like this happening. And then we had, I mean, maybe that's not so good news, like OpenAI, who had a model breaking out into the internet and hacking some website to get data it needed to compute things. That's wild as well. So we are on the brink now of models self-improving themselves. Whether that is a good thing or not, we cannot debate about this. It's happening whether we want it or not. But it's the curve of acceleration is exponential. It's not linear. It just accelerates faster and faster and faster, and it's hard to keep up. Even now, it's like really, for me, it's hard to keep up. What are the new things that I can do now that can, to a certain extent, replace like my daily routines, to automate them? Do I want them to be automated? Does that mean potentially that in a couple of months I'm going to shut down my brain because I'm too lazy to think about things and just tell ChatGPT or whatever to do everything. It's quite an exciting time, but behind the curtain, it's going to continue to drive demand, and it's going to result, I'm pretty sure, in higher stock prices or in general higher prices for risk on, at least until the time a black swan event happens and AI is going to kill us all.
I agree. Like, this was the DRAM stuff. Pricing, I think DRAM has dropped a little bit in pricing. This is sort of slightly updated. This was from, a week and a half ago or so. So obviously, like, we accelerated pretty hard. Yeah, we've had a slight dip, but I'm pretty sure the recent data I saw, we're picking up once again. And regardless of that, people looking at Micron, this was NVIDIA. Yeah, we saw, like, I also see people talking about, Micron can't keep growing at 1,000%, earnings, whatever. It's like, yeah, no duh, dude. Like, obviously. But you often get that peak in that earnings run, revenue run. And that starts to drop off just like we saw in NVIDIA, but, the stock price just keeps climbing, right? You get that inversion, but it just goes up, 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 up. Right, so we've seen that before, and so hence if people trying to call like those kind of tops on these stocks, that run up is the precursor which basically cements them there, right? They've now got such especially when like these kind of technologies have a very heavy moat around them. It's not easy to just spin up some chip maker and otherwise we'd
I mean, that's the one thing we noticed. No, like last week, Bart asked me, to send him like the specs of the mini PCs that I like to use as servers in my office. So I sent it to him, and I noticed kind of like, oh, that's weird. A year ago when I bought the last one, I bought it like for I think 329 euros, and now the price is like 400 almost. Correct me if I'm wrong, Bart. So it's actually a piece of, I'm not saying outdated, but older hardware that is more expensive than a year ago just because of the chip prices and RAM prices.
Yeah, and perfect example, we're now going to have a CPU crisis going forward that has been alerted to. So similar deal, that's going to be a problem. I would say, like, everyone's waiting for like RAM and stuff to come down to upgrade PC. It looks like we're just going to have more it seems like waiting is a bad idea. Just if you can do it now, you can afford it. It's going to be more expensive in the future. So I keep thinking about that with
you can resell your old PC for a higher price when you bought it, maybe.
Maybe actually, because I'm still on DDR4 lineage and CPU lineage. So it is now getting stressed. I thought I'd get a bit more wear out of this, but obviously everything's accelerated, so I might have to just bite the bullet and do it. And same with NVIDIA's actually now started re-releasing the 3060 GPU, right? Because that old RAM is much cheaper, but restarting that whole process of producing them is actually cheaper than trying to produce like the new stuff for that reason. And those cards still perform massively well for the majority of people. You can look at like Steam, the gaming software, whatever, or not software, you know what I mean. It's the most heavily used GPU. So a lot of benchmarks are going to that, and it looks like for the majority of users, that'll be the base level, which is actually good, because if you now do invest a touch above, you should be able to perform quite well, because the majority of other users are going to be sort of landlocked at this lower band because they're not like power users per se. So a lot of things are going to benchmark a bit lower to accommodate for the general consumer overall. So interesting stuff. Sorry, Bart, we've been yapping again.
Old men yelling
no
at
worries.
Old men just having a yarn.
But I also learn from it. Sometimes I'm just also like the chat. I'm just like listening, say, I agree, and learning about the market, and also about the prices. Dirk, it was not 400 but 500 because it was 499. Yeah, so it's
Yeah.
getting higher, and also I think last month like Apple also increased all their products. Some products like 100, some even 200 or more. So it's a bit annoying, and everybody's gonna feel it because everybody has a phone or TV or a screen, or that's a bit of the problem. And I think it just will grow in the future because all the AI stuff and everything is just getting bigger and bigger. So if you want to buy it, I would say yeah, buy now. And if you wait another year, maybe it's like again like 200 euros extra.
Yeah.
Yeah.
I mean, if you use it just for gaming, you might also look into an AMD GPU. This is one I'm using in my office as well. I hated it in the beginning because it kept crashing, but I found out that it was a user problem because I had the wrong driver installed. After I corrected that, now it works like a charm. So if you're just into gaming, you might as well do this. The thing NVIDIA has, of course, why everybody in AI and machine learning is using their GPUs is the software framework called CUDA, which AMD doesn't quite have. Everybody's using this, and it's only running on NVIDIA GPUs. This is why, especially in the AI scene, there's such a high demand for NVIDIA hardware.
Yeah, indeed. And obviously, like, the two are like, what are they, cousins? Jensen Huang and what's the name from AMD?
I have no idea.
Yeah, but they're cousins. But obviously, Jensen's not just going to be like, oh, here you go. Like, you guys got to, obviously. But eventually, they get there. They're like, oh, okay, we'll give you some stuff. Give us the front run first. So.
When I read this, by the way, is there like, are we doing some sort of giveaway for reaching the 110,000, or did I miss that already last week?
No, we are. I think we're doing it this week sometime. We've also got the 1v1s coming up this week, so I think we're going to offset them between the 1v1s and the giveaways there for you guys, as well as the giveaway for the 110k. I'm not sure if Rich mentioned the 110 giveaway when he was on earlier before. I know he was talking about the 1v1s. But yeah, I think it's just a point of segmenting them apart to give people more chances.
Okay. So, yeah, of course, makes sense not to have everything in the same week. But we can ask Richard later when he's on again about that. Lisa Su, okay.
Yeah. But were you saying you gotta jump out? I think you were trying to say before. No,
yeah, I wanted to say the last thing is that also about a giveaway from Summer Plan, but then on the Instagram very soon if we get like the whole account back. So I hope to get like this week or next week on the Dutch channel and on the main channel like a Summer Plan giveaway. So that's nice. And then I'm also jumping off because I'm working on the giveaway and to get the account back, and next month, if I get it, an event from the 5ers in Netherlands, so there's enough to work on for me.
Yeah.
So then I will hop it off and see you guys like next week again.
Beautiful, man.
Take care.
Are there any other like directories you want to push people to for the 5ers Netherlands, or you gotta figure it out first, get it sorted?
Yeah, I think we're doing like also a post together, so if you're already following like the main channel, then you will see, I think, like next week. But we haven't got into the account yet to we got it back but not to post. So Meta is like so annoying to work with. It's not fun. And if we got it back, we will do it. But it's just the 5ers and then Nederland. So how you say it in Dutch. I will see. I think people will see it soon.
Beautiful.
Yeah,
awesome.
Guys, if you're from the Netherlands, definitely join the 5ers Netherlands Instagram once it's back, and I think Discord also, no?
The Netherlands is back, but like the main channel of the 5ers.
Oh, really?
You can post on that.
Oh God.
Yeah.
Okay.
It's
That's
really
a bummer.
annoying, and everybody in the office is just annoyed by that because that's our big thing. I'm glad we have YouTube, so that we can still do. But
Meta doesn't really have good customer support. I once was like working together with a rather large channel, and they spent like 50,000 euros in Facebook ads per month. And when they had a problem, they had to wait for weeks also, because apparently spending 600K a year on Facebook advertising is not enough to give you a personal account manager with Meta.
No, it's not. Yeah.
It's crazy.
You got to spend a lot higher, and then typically, even then, you have to take a full trip to the office and actually talk to someone at one of their offices in the local jurisdiction, right? Like, otherwise, yeah, it's a hard time. It's a hard time. I've got some friends that I know as well that do massive numbers, like insane numbers, spending, and same deal. Like, it still ends up in a office meeting. Even when you're running, over beyond 10 mil a year in advertising, like just stupid numbers. Like they've got a line, but it's still come to the office and we'll talk to you. So yeah,
that's true. They just don't help, and the system is just not working. You would say like, oh, it's like so big of a company, it just will work. But sometimes I use the same password, and sometimes I can get in and sometimes not. That's very weird. Sometimes I use like incognito modus, so private modus, and then I can get in. So that's also weird. Why can I also get in when I use that? So it's definitely not working well, and I think it will not get better.
At every other company, you would say like, oh, what is this company like doing sketchy stuff? What's happening with my data there?
I think, they're such a massive company. Definitely, how many billions of people they service. I guess it comes down to that. It is hard to. The organization for that stuff. Obviously, they do have the money, of course, because they are so big. But you got to admit, it's a hard thing to organize at the same time.
Probably,
So, anyway.
Yeah, that's also true.
Cheers, Bart.
Yeah,
Take care, mate. Here once again.
See you again next Monday.
Next Monday.
Beautiful.
There he goes. Leave us a like, leave us a comment if you like Bart. If you don't leave us a like and don't leave a comment, Bart is going to cry. Just kidding.
Yeah, we don't want that.
We don't want that to happen.
Don't do that to us, guys. Yeah. Jeez.
See, you're right. NVIDIA Jensen Huang and AMD CEO Lisa Su are cousins.
Yeah.
Seems like chip manufacturing runs in the family blood.
The funny thing is that they both got into it randomly. Like it wasn't some coordinated thing, which is crazy. It's just one of those random happenings, which is pretty wild. But it's good. They have some good competition with each other, So. Dirk, if you'll just give me 1 second just to jump up. I also got to send off one more final thing with the other stuff before, just to check it's all good, and then
Alrighty. See you in a moment. Yeah, guys, markets pretty flat. I said it this morning when I joined for gold. Actually, I would like to see the gap close because it's also a nice zone of demand being defined here. We had in the past limit buy orders that were filled by market sell orders. Not happening right now. Pretty boring move. Pretty much the same also when we look. Actually, the S&P a little bit more dynamic, but pretty flat. Everything is nothing where I say like that jumps into my face. I need to trade this now. So going to wait here at the sidelines. Probably not going to do a trade. The only trade still in motion is the gold trade from last week that apparently LJ exited already. Remind me to ask him about this. So I'm still in that trade. You can see this sketched out here. Important for this one is that we close over this blue line, which is the 8 weeks moving average. That would be a good telltale sign that we're at least going to attack the bull market support band or bear market support bands. They are now on the daily gold chart. So yeah, let's see what's happening there. For sure, going to depend highly also on the situation in the Strait of Hormuz. Hormuz? Yeah, Strait of Hormuz. I think I pronounce it correctly. Let me quickly go through the comments here a little bit. I haven't been paying too much attention to the comments. Hide your oil, yeah. Nice one. All right, good. If you guys have any questions, anything you would like us to analyze, I think we still owe analysis on the pound sterling Canada dollar. Let us know. Otherwise, we're just going to continue with what we've been doing before. And yeah, leave us a like, subscribe to the channel. As I said, later I'm going to ask Richard when he's back on when the giveaway for us reaching 110,000 subscribers is going to come in. 110,000, man. That's really, I still remember when we first started it was sitting like at 20,000 or something like this.
Yeah, 20, 30K. Like, it's grown.
Funny how
Definitely
insanely it has grown.
It's been
I
like
need to
a
get my
year
own
as well.
channel to 100K. That would be fantastic. But that's still some way for me, still sitting at, I think, 10,500 or something. What are you drinking? What is that? Beer.
Mango lemonade flavor.
Oh,
Celsius. I know.
nice.
I know Cambam loves this
Ah.
stuff. So
I love
let's
this, like
just-
this Italian lemonade called San Pellegrino, and they have like an orange lemonade, which is like slightly bitter. I love that stuff. I cannot have it at home because I end up like drinking it very fast because it tastes so good.
not San Pellegrino, like the carbonated water
Yeah,
though.
it is
But
same
it's
brand.
flavored.
Yeah, it's
It's
flavored.
flavored
yeah.
though. Oh, okay, okay.
It's
Because
not
the
flavored water; it's really lemonade.
okay, yeah. Because the standard like carbonate like sparkling water. I don't know why people drink this stuff.
Yeah, I when I drink water, I also drink still
Terrible.
water, not carbonated stuff.
Yeah,
Because
it's
when you
weird with
gulp
water,
it down, you're like
right?
thirsty. You get this feeling, no?
Yeah, yeah, it's weird. Anyway, welcome. You're not late to the party. We're just getting started, so don't worry, Elvis. You're all good. You're all good.
You're not late. You arrived at exactly the time you wanted.
Yes, what is it? A wizard.
Yeah, I was thinking about what
Yeah.
Gandalf, I think,
And then
said
I was
that,
like,
no?
what's the exact quote again?
I cannot get it. I cannot quote Lord of the Rings.
Yeah.
Yeah, man. Markets are
anyway.
a bit boring this morning. Huh? Not much happening. Not much that I see where I say like I want to jump into that.
Yeah, I think we're definitely, obviously we got the Fed through this week. We do have durable goods later on for the US today. And of course we've got the Fed coming up this week. Plus we've had the back end of last week's talks, or not talks, but kerfuffle with Iran and the US restarting again. And then over the weekend, that sort of de-escalated. So we've had some gaps, we've definitely had some jumps, some moves. And I think we're now waiting to the US session to see if there's any kind of Trump tweets, comments leading into this, since we've already kind of run, right? We've had that gap higher, slight pullback, we've now run higher again. And now we're trying to confirm that kind of price. Are we warranted to actually stick up here? Or do we get that pullback going into New York? Now, on the balance of probability, I would say we do get some kind of pullback, bit of a retracement. We kind of seem to have fully fleshed out this potential good, in air quotes, good move, or good, not really geopolitical activity, but basically a step back from escalations, per se, right? But it's still up in the air. So we've come up, hit these double highs through here. This is also a resistance that we had from long. I know I've got it drawn out to here, but it goes like way back. I think I just put it to here for sake of decluttering the chart, even though it is a bit cluttered nonetheless. So I would probably be looking for some kind of a pullback from here on the NAS. I don't think we'll come down as far to, of course, close the gap that we had today. I think that might be something we have to see over tonight going into the Fed and that kind of thing, and then eventually get some kind of push down, or we just see that that doesn't close and we drive on higher overall. But we've definitely got a lot to figure out. We've also got a bunch of the tech earnings coming out this week as well, which is definitely going to drive things in particular, like the NASDAQ and that general risk on, risk off type sentiment. So I think right now the market's very cautious, trying to find its feet for the week. We're also going into end of month as well. That's something also to consider. And then next week we will have NFP. So we've got a bunch of data coming out through the next further periods. And so it's a bit of resettling in amongst Kevin Walsh's view and the potential re-escalation of the Iran situation, or further that there is seen as a no-win situation, so the re-escalation doesn't actually happen and we come to some kind of resolution. So we've got a number of sort of binary events mixed in with conditional probability events, or more tempered releases overall. So definitely expect some activity, some volatility through this week. I would say I would be looking for these kind of like high points that we get to, and then be sort of fading some of them, depending on what the next lead point of data or the current session is. This was the kind of point I think we were talking about on Friday for us to reach on gold. Obviously we gapped up, we basically met that on the gap. We've now pushed up here into the R2 that I've got on here. My pivot points are always slightly different on my own trading systems on MT5 and CTrader, because of course the bar closes and that kind of thing on TradingView are slightly different, but it's within, you know, a couple points delta overall. So I still am in favor of fading this. I don't want to say shorting it, but fading it. Probably gold, the euro as well, since we haven't really stuck up through here. We're now in this lower band below this higher cluster that we had earlier today. I think we do have susceptibility to draw down towards closing the gap, if not entirely the rest of the way, and then potentially bounce from there. So that's what I'd see on the major currencies. The indices are a slightly different matter. I think if we get that, we might just come down to Asia lows and then potentially build up from there in anticipation of earnings this week and some of the other bits and pieces. The indices have a slightly different dynamic. They tend to take a bit more time to actually close gaps. Whereas currencies will be more active and actually seek to close that within normally a day, 48 hours, unless we've had a real significant like macro type change. This is just a point in time, some headline stuff, not like a severe shift in the overall landscape. So yeah, if any of you guys are looking for trades, I would be leaning on closing the gap. Pound is something, because we were going to talk about pound. Pound is something that we have pretty much come down and actually closed the gap just about. I know on TradingView right here, it's actually not showing the gap. The gap, this shows it as a full bar, but the gap was down here. So we're pretty much just on it, like a few pips above. So that is interesting, but hence if the others do come down, say the euro, the Aussie, the other majors do come down to close the gap and potentially the dollar yen to rise higher, pound could actually come down and seek the lows through here from last week, is what I'd say. So I don't like pound longs at the moment. I'd be looking for some kind of short.
Your views on CXMT at more curiousness, however that is pronounced, do you mean the DRAM manufacturer from China? If you're referring to that, I think they went public, no, today, did they? With an IPO, and it's like, anyway, it's
No
the
idea.
largest DRAM manufacturer in China. If they went public, probably the largest company in China also by margin now. And I personally don't have any view on them because I have never in my life traded so far Chinese stocks. There's like too many hurdles to jump through.
Yeah, I was going to say it's very hard to actually get any kind of access to that. So, yeah, good luck. It's very, very difficult. Yeah, I couldn't say one way or the other either. I normally end up I take it tangentially into like information pockets to then extrapolate to the broader market and the US sector and the AI and tech as a whole. But as far as directly trading them, like, yeah, you just can't get that same sort of access at all.
Exactly.
Oil down, indices up. Yeah, okay, one of the other things we can touch on oil. I said last week, I don't think oil's getting beyond 100 at all. And since that Thursday, when I highlighted that, yeah, we've cratered right down. There's so much oil out there.
Only the gas prices in Germany, no matter what oil is, they just continue to rise.
Yeah. I mean, yeah,
Actually.
European gas prices are a whole nother situation.
Well, here in Poland, it's much cheaper, so I have to gas up the car before we return to Germany one more time.
Yeah. But yeah, so this was the this was basically the range that I highlighted. We did actually tap directly into that and then fall off. So that turned out pretty nice. Now the thing with that, even with the straight with the stuff ongoing, we're now only missing about 4 million barrels a day. We can deal with that, right? Originally it was about 22 at the start of the war. We then pretty quickly brought that to 16 and then to 12 and then to 8 million barrels, and we've been working with that for the past 7-8 weeks, -8, and then because we got other channels coming through like the east-west pipeline and such, and so now it's about 4 missing after the re-escalation of things popping off. Now if you add the MAB El Mendeb strat, I always messes up, yeah, the pronunciation. With the Houthis and everything in Yemen, even if that gets disrupted, which goes up towards the Red Sea, that's probably only another 4 million. So that comes back to the same point that we were just, a couple of weeks ago when we ended the war and oil prices came right off. So that's another -4, so we'd still be at -8. We can handle that. Like, this is no biggie. So I don't think oil gets back above 100 realistically. This is on the futures, so on the spot price last week, we did reach about 100 on like the real-time now spot price. But yeah, I think oil's sort of capped around there. So on WTI, on any forward futures contract for the next following contract, it's only capped around 92, 90, 92. And that means the spot price was around 100 at that point. And it's come right off. So I don't think oil's going higher. I see a lot of fear mongering once again, just like people saying oil was going to 140, 150, 200, 220, 250, 300, some insane numbers. I feel like that's very similar to the current inflation rate hiking situation. Like, what are we talking about? There's a full disconnect, which is interesting. There's going to be a lot of opportunities in markets coming forward when this does start to unravel and we get it'll be a very sustained run in the opposite direction overall. There's still a lot to plumb through because other countries do have their own idiosyncratic issues or challenges and that kind of thing, so that will give a bit of pushback, but we will get a new direction set overall. but I can't see this inflation thing. Everyone keeps pointing to oil. Oil is not the problem. The actual main problem beyond oil is actually refining, right? Refinement of oil, because we've closed a bunch of those plants after the whole sort of environmental movement over the past couple of years. That's actually more where the chokehold is than the actual supply of oil, which you need to actually refine the oil, and then it goes into products and etc. But yeah, I don't know what you think about that, Dirk. I know you've been away. You probably just put it out of your mind for a bit, but
No, I mean, just being away doesn't mean I don't follow current events and have my sweet time looking at the markets. You never really stop this. At least I don't when I'm on holiday. Maybe for a day or two sometimes, but my mind always wanders around. Yeah, I'm not doing 14 hours when maybe I'm doing just 5 hours or something a day.
Yeah.
I mean, like I said, it's the markets are behaving like we are going to run out of oil, and we are not. I mean, what is the one good thing, although I'm a little bit hesitant calling it a good thing when we talk about war, is that the distribution lines are getting larger. You don't have everything going through the Strait of Hormuz anymore. You have like new pipelines here, there, or other routes where oil come from. So it's going to be something like this chokehold probably cannot happen that easy in the future anymore. So that's one good thing coming out of this. And yeah, it's like as soon as this whole Iran thing is over, which hopefully it is. I mean, I've been saying this also for weeks now. Probably next week it's over, and it's not been over.
But it's essentially over as far as
then we're probably going to see oil drop to something like 50 or 40 or something like this again. Because like you said, there is only 4 million barrels a day missing now to get back to the point we started before the war. It's like nothing really. And if that narrative is gone, I really wonder what all those doomsayers out there are going to focus on then. It's probably going to go back to AI then. Something, mass unemployment.
Or back to the tariff restart that we've had.
Yeah, or tariffs
recently,
again.
which the market is ignoring right now, which they should be, because it's been well telegraphed. And these are basically new tariffs because some of Trump's previous tariffs got blocked. But again, I've already started seeing that pop up as like a Liberation Day 2.0. It's like, guys, calm down. Gotta stop.
And like you said, and the market is very detached from reality. Right now, I have a feeling it's like playing day to day, and normally the markets are always playing what is the situation going to be 3 to 6 months down the line, and this is not time. It's very reactive, the market, a very weird market. I think I said this before. Unlike any market that I've experienced in the past, there were with black swan events, COVID for sure, then the whole Fukushima disaster back then, but they were rather quickly resolved, and I still only for a couple of days or maybe 2 or 3 weeks you'd see this reactive market that's kind of only reacting to news updates. And now it seems like this has been going on basically since when this whole war started. March, or was it February? I don't even remember.
March.
One thing that's been bugging me once again is my favorite trading pair, dollar yen, where I've been getting stopped out again. So it's now 2-2 for this quarter when it comes to dollar yen for me. Still, it seems like the Ministry of Finance in Japan, they kind of have lost their credibility. It seems like nobody's really believing in them anymore, that they want to do intervention. The last interventions, which were like trillions of yen, they put into intervention, but basically didn't do anything long term. And you still have a gap, between US interest rates and Japanese interest rates, which are already at multi-decade highs at the moment with 1%. And it seems like if we don't get hints of rates being cut in the USA, that this is still going to continue for a while. see the carry trade still. I don't understand why. We've talked about this before. For me, the more attractive carry trade at the moment would be Aussie Swissy. So, yeah, I don't know what to do with this one. Just leave it alone now. But I have a feeling if I leave it alone now and kind of what is it?
Capitulate.
Yeah, thank you. That would be the top, and then we crash down.
Yeah, so I agree with you. So similar to, so this was that top X from some time ago. Like, you guys can see this is listed here in June if you see the bottom, but I wrote that out, I think, back through here when I was taking that trade. This would be absolute top, where I'd reconsider again if this got stopped out. We did then hit that pretty quickly. And then this would, if we somehow broke out this channel and such, that would be the next area I'd start to consider.
Yeah.
We did get up to there and a touch above towards that 164. I don't think they've lost credibility. I think the market just needs to confirm that credibility. Like, it's been a lot of jawboning, a lot of talk, a lot of rhetoric, but they haven't fully pushed through with the rate hikes and such. Now, it also does come in the face of the US section, just like you're highlighting, that is right now so powerful, and there's been such a market move, and in global interest rates as well, or bond yields, I should say, that have been driving higher, which they're going to drive much more aggressively and forcibly and confidently than any kind of potential of Japan. Now, Japan driving higher on a relative basis to where they were is a much higher multiple, and you should impute that this is going to have much more degradation, much more impact overall. But the market wants to see it actually happen. So, I mean, this was the same thing we talked about before, where we do actually need to see that follow through. And there's been rhetoric, talk, and it seems to be waiting for the Strait of Hormuz situation, the new Fed chair coming in, and then obviously talked a number of times about Scott Bessent going over to Japan. I think it was just under 200 times in the past year, like 150, 160 times or whatever it is, the trips over 400 days or something, right? You know, he's been there every second or third day or something ridiculous, you know, flying there a couple of hours, literally flying back to the US, stuff like that. So pretty insane. I was like, damn, that's this is a lot, right? So I think, yeah, we're waiting for that coordination there. There clearly seems to be stuff in the works, and it's just a timing thing. I feel like a lot of the other stuff, we can see it right there. It's in the purview. A lot of the rest of the market is not seeing it because it hasn't happened, but it's staring you in. It's like you're driving really fast. You've got your high beams on. You can see this deer, but you're like, the deer's just going to move. And you keep going straight, and then the car's just going to crash into the deer and you're off the tracks. I feel like that's what a lot of the rest of the market is aiming for. And they just believe that the deer will play chicken and run the other way. Yeah. As you know, a deer in headlights tends to run towards the object that is coming at them, and you know, you crash. That's kind of how I feel with it. But on the same measure, like you were saying, I think just going straight to Ord Frank might now just be, you know, give up on the, not give up, but maybe be more tentative and just run this Ord Frank situation. I think the other thing, I expect the Aussie dollar to be super weak going forward. We had a massive run up earlier in the year. Now very 50-50. The current economy with Australian after the tax changes, we're going to see a massive drop in house prices. We've already seen that because of the tax changes. I think we're eventually now, there's been a bunch of stuff that's brought in with immigration and that is going to curb immigration, which we need to actually see to cap house prices, because eventually if we keep having that portion bloviate, it's just killing the economy, because we've become this thing of investing in essentially non-productive financial assets that are just kind of arbitrary. And we've had this productivity per capita glut for quite some time. and it's been propped up by immigration. For the past 30 years, we've had the highest immigration levels in the OECD, which has always propped us up, and that's why we haven't had a recession in 30 plus years, outside of like COVID as like a technical, everything's shut, right? But that now has to change, and just like after COVID though, we had like 1.6 million people migrate here with a population of 25 mil. That's a massive portion. Yeah. And because of that as well, government spending is blown out, because in order to compensate for lack of productivity per capita, obviously the government has to spend more to support certain pockets. So in 2005, a new baby born, the total debt per new entrant of capita was like 5,500. Now it's 70,000. So we're now going through that portion of having to raise taxes massively, which is what we've seen in the past budget and such. And eventually this is starting to kill industry. You're seeing capital start to go overseas, the capital flight. Like, people can go to New Zealand and get zero capital gains tax. And right now, they've brought it up to almost 50%, 47.5%. So if you can literally go 2 hours that way and get zero capital gains tax to start a business, and then you can still operate wherever, people are going to do that, or go to Dubai or whatnot. So I think we're going to see a massive crunch going forward. It will be slow, won't be right away, but we've also, if you impute the tax contributions for people that were negative gearing properties, it's the equivalent of 120 basis points of rate hikes. And then if you equate how many people are actually negative gearing, it's like 20% of investment properties, and you do all the math, whatever, it equates to another 2 rate hikes, which is what we were originally pricing after the 3 that we already had, which I already said 3 were too much. So across the economy, we're already hitting that, and potentially they still want to do another 2 because of the entire global rate hiking portion. Now, if we do that, it's going to crunch everything. In the long run, it might be better, because you do need to get house prices capped, reform industry and that kind of thing. But near term, a lot of pain. So I could definitely see this running higher on that basis, where we get those rate hikes and such staying higher and coming in and held higher for longer. But at the same time, you're going to have this cross comparison eventually, when it has a delayed reaction that it hits the overall economy, and then we rip off. But we're nowhere near there just yet. So near term, we've definitely got a massive push, and it's going to be probably reasonably aggressive, but eventually come back off. So I think this is a very clear picture where you can actually structure it out in terms of that forward path. There's other economies like you could do the same, but the forward zigzag is less predictable. So I like that, but it's something that you can run that up, call it back, run it up, call it back again. So that's what I do like.
Yeah, I think the thing with the yen also is like, I think it's also massively correlated to the Iran crisis right now. If you look at the imports, for example, for June, the deficit is up by 25% just because of oil prices. So once that unwinds, that could be like the catalyst also to see prices actually coming down. So yeah, probably it's like, for me, it's either Aussie Swissy, but like you said, there are dangers in there, of course, as well, or keep trying to play this. Although, like very often in the past, this is not a trade I particularly like to do with a CFD or spot trade. It's more something I want to trade with options, but because it gives me more flexibility. In this case, maybe even buying some short dollar long yen options. and then need to be prepared, that like 2 or 3 or 4 times, I end up just, losing the premium, or my risk is the premium. Of course, I paid for the options then. And but only one time succeeding this is probably going to give me a 10x or something. So I still have 8x's left, 8 times left until.
Hang on, this is something I've weirdly never thought. Can you get options on bonds?
On bonds, of course.
Government securities, yeah, on rates, yeah, of course you can. Yeah, I just think like that might be a play.
The treasury future.
Of course you could. Yeah, of course. That's what I was just thinking. How have I never? I've always just taken outrights.
Yeah.
How have I never thought of doing this or like trading like futures on it? Like,
if you played with options,
this is the dumbest thing I've just like. It's just like occurred to me.
You're actually trading it then like a hedge fund would, no? Like somebody
exactly.
Like a popular example, Michael Burry, for example, he didn't like physically short, the stock. He bought put options, massively out of the money put options, which like cost a penny, but when really this black swan event comes, like 2008, what he was betting on, then it's going to be worth a lot of. In fact, the options or the instruments he traded there, or that he bought, were created because of his request.
Because
the options on the what were they called, collateral debt thingy.
CDOs.
I don't even remember. Yeah, exactly. Were created because he and a number of other smaller investors requested them specifically. That's also once the event happened and he wanted to get out of it, he was not able because the banks refused to give him realistic prices. Like I was making,
there's like no other market.
Like oh no, our server's not working.
Yeah, and there's no other market participants. Like very small liquidity pool of participants, of course. Yeah, and takers on the other side in particular, obviously. I mean that's maybe a way to position it through options. I'll have to have a look. It's then just the question of getting access and that kind of stuff. But why have I never thought of doing that before?
As a retail trader, it's not very easy also for options, like for currency options. I think I don't know. I mean, I've been using Saxo Bank for such a long time now that I never really thought about alternatives. But my options trading in general is like very, very low right now because my strategy doesn't really have an edge anymore. I'm being arbitraged away there. Thus, my tendencies to move more into spot trading again, also, and finding my strategies there. The thing is always the pricing. They are going to rip you off with pricing for sure.
Yeah, through treasuries though, like.
But there are, and if not, I mean, also buy the dollar put, yen call.
Yeah. I would create like a synthetic equivalent.
Exactly. So I probably would do like I don't know, like a put that's like super out of the money, to really just speculate on this BAM event that we had a couple of times in the yen. No?
Yeah, I was just thinking because as well, the current direction is definitely overpricing, rates going higher, potential rate hikes, inflation going higher. So I was just thinking the cost should be cheap because it's a very out of favor trade right now.
Yeah, absolutely. Yeah.
Overall, so
you still have to bear with the interest rate, of course.
Of course, yeah.
The differential, you're going to pay for that as well.
Yeah.
Although, no, not really. No, you are because you are short the US dollar.
Yeah, you will. Yeah. Raf, what was it? How do you know that, LJ? How many kangaroos were victims? I forget what this would have been. I guess this was when we were talking about Aussie and stuff before. Sorry, I think when you in real time when.
Yeah.
Yeah.
When you were talking about the housing and so on. That comment.
Oh yeah. Look, kangaroos are not victims. I'm pretty sure they just make their home wherever they want. Like, anywhere you have kangaroos, like you have like your border of your property, they'll just jump over the fence and they'll just make themselves home, right? They literally just hop over, find some good grass and just sit down, you know, and you're like, oh, there's a giant kangaroo in my backyard. Hey, man. And then you go out to feed him. Either he's friendly and he'll just take your food and be very thankful and then hop off, or you try and give him some food and he'll be like, get all aggressive, and like, if it's a big male, he'll be like, what do you want, bro? What do you want? You know? So yeah. But yeah, guys, throw us anything else you want to look at. Like we were saying before, we've definitely sort of consolidated into some of these top areas. We're not moving too much overall. If I jump into mine and go to the 5 minute, let's now down into this. You can see the NASDAQ, the past while now, past couple of hours, like we've literally just moved in a very, very, very tiny range overall. Gold's getting a bit of back and forth activity if you guys are like scalping, but it's pretty much just scalping the range and then waiting for further direction. I feel like that's pretty clear. Euro, similar deal. We've got this small little block here, just waiting for. This was the piece I highlighted earlier, depending coming into New York, what other information we get, and durable goods, somehow that just ticks us just enough below this area, and we might just get, you know, trades running, new entrants and stops. Since we've got a bit of a slow day, we're also coming in towards European summer, which definitely kicks off through this week and going on for the next this week and the next 5 weeks after that. This is like the main caucus. So you can see these sort of levels break. We get a run down, close that gap, and then potentially drive higher. Same with Aussie, same with the pound. Not doing too much. Like I was saying before, I do see the pound sort of driving lower. We're still getting that lower degradation at the moment. Pound I don't like overall. I'd rather wait for this to buy, considering that the euro does actually follow through, start to drop down. Same with the Aussie, any of the majors, and start to look to close this gap somewhat. Otherwise, we could pick up higher, but I'd have to see a catalyst for that, which I can't really see at the moment.
By the way, I'm just reading here, looking, Saxo Bank offers options on treasuries. Also interactive brokers, Ninja Trader.
Yeah, I've normally used interactive brokers before.
Yeah. Like a number of contracts there, but quite thin order book from what I can see.
Yeah. S&P is something that's still climbing, I will say.
Yeah, more so than the NASDAQ today. Yeah, NASDAQ a bit more flat.
Can we push further though, or is this a bit of a topping point?
I wouldn't bet on it. I could imagine, like, I mean, we still have the durable goods coming out. Of course, it's probably not going to have such a super large impact though. And if the number is at least within the expectations, I could actually see us going a bit lower later.
I agree. Because
like,
you've got basically
hedging going towards the interest rate decision tomorrow.
Yeah. This top section of probably the run high level, we're probably obviously not going to break the highs from last week, which I think are... No, not quite, yeah. But I don't think we'll break the highs from last week, so potentially we'd push higher and then just falter just below there and have to reload coming into the rest of the week, especially with the Fed earnings, everything else we've got going on, a bunch of the data. And we do have this gap down through here. So given today's run, if you're looking at like an ATR type situation, these have been some of the bigger moves that we've had with the massive drawdowns. We've made the majority, like 80% of that move today. So I would not be wanting to bet on this upside. I'd probably be preferring to bet on a retracement back through there, and then potentially at least halfway through here. Whether we get to the full, often you will stall just before the actual gap on indices, weirdly enough. So I don't know. I would definitely be pushing for the downside overall from here.
Yeah. I'm quite happy that I'm not
Asymmetric
going to
odds.
sit in front of my screen this afternoon, so I don't get tempted into a trade like this. I
Going
don't
back to
like the
your
short setup.
holiday.
Yeah, because for me it's not a clean setup.
No, it's not.
Can jump either way. It's probably somehow I have the feeling also the great orange man is going to say some stupid stuff again later.
I agree. Especially after pulling back over the weekend. He's susceptible to coming back the other way. And we've seen the past couple of times, we've highlighted this, that normally it's a fear into the weekend recovery. We see the Monday a pop, and then after that, he re-escalates. Right? So yeah, I would be very wary of that right now, overall. So yeah. Look at gold. Yeah, sure. We can do gold, no problem. Great momentum, question mark. On what time frame are we talking about great momentum? Because, like, obviously we've had this pickup. Definitely talked about last week around having this sort of rounding type section with some of the pullback that we had on the let me bring it up real quick. Sorry guys, just give me 1/2 second. Here we are. If it'll load. There we are. With the FedWatch tool. So we were down lower at about 16% chance of a rate hike previously, like a week ago. And now we've jumped up to, it's now at 33. So we were at 37% a day ago. I guess this is last Friday. A week is arbitrary based on the 7 days. On Friday, a week ago, was 11%. So we dipped as low as about 9%, right? On Friday, we came up to 35. By the end of Friday, we're at something closer to 37. But now we've definitely dropped down a touch to 33. And hence we've seen this pickup in gold there. I've got another chart here to exemplify that. Here we are. So hence, that was the forecasting for the most or next closest rate announcement. But you can see how since March, since the war kicked off, like I was saying, when it did kick off, gold is predominantly going to be measured by rate forecasting and the bond market moving, not because there's some war going on and people think precious metal, therefore it's a safe haven, therefore it should go up. And this is a perfect example of the market pricing for a 25 basis point rate hike by December 26, right? And you can see how this is tracked with gold pretty much 1-to-1, right? Now this is slightly old now at this point. This was where we had, you can see this red line picked up. That's when we went to that 11, 9, 10, 11% probability. And then that pulled back down. We've gone up to that 30% or so. And hence we saw in gold have this further dip down. So we saw the pick up, came back off. We had these kind of lows, rallied a bit again as it fluctuated through there. We came off again as we approached that 30%. We've held those lows through here though, and we now seem to be picking up. So if myself and Dirk's suspicion is correct that we aren't going to get this further push in hikes, and the sort of forecasting and nowcasting is bit off, bit incorrect, needs to be adjusted for future rate hikes, then yes, I do like this as continuing up overall. So I think just with the gap that we have here, I'd like to buy a bit lower, closer to the gap, and then potentially take longs. That's the only thing.
I agree with that. And hi, Richard, by the way. Just because Jake the dog said here, he's looking at the 50-minute chart, which is the one I'm usually also looking, at least when it comes to intraday trading, which has been working quite well lately for the gold futures. It's like I was thinking earlier of going long, honestly speaking, but I didn't because I thought, okay, to the upside, there's not so much room left there. In my opinion, I could now, if I were in front of my PC this afternoon, imagine doing something like this if we dip down again with a very tight stop, because it allows you to have like a nice 2R already with a little bit of move only. But it's not like the greatest of all trades. Like LJ just meant it, for me, the better trade today would be, if that happens, and I doubt it does, that we kind of close the gap here and then go into that trade with a rather narrow stop and a target somewhere with an R between 2.5 and 3. That definitely would be a trade I would be looking at if like the surrounding news are normal, nothing out of the ordinary is coming attractive from a mathematical standpoint. I think like the entry is also where it makes sense. Stop loss would be where it makes sense. But I don't want to. It feels a bit like a trade that I would force myself into at the same time. It's not like that I would enter this trade with a lot of confidence. They're like, this 9 out of 10 times works well. It's a bit of a dice roll. And I only would do it because it's, from the risk-reward ratio, a trade that makes sense.
Agreed. I'd be looking at about 4,060.
Yeah. That's exactly the point.
Yeah, around there, 4,060, 4,061, just above the actual gap level, just to get filled, because often you get pretty close, not get quite tapped in or something like that. It falters just before the gap. It doesn't actually fully close the gap. Sometimes you slightly overrun the gap, that kind of thing. So I give enough space for that just below these wicks just here. And then I'd be chasing this to run up, and this will probably be today, then into tomorrow, to push up beyond that. Up towards 41.35, 41.40, that kind of thing. So it'd be about 4,061 entry, a stop somewhere about 4,043, which gives you about a 4-to-1. If you want to just run it intraday and jump out, you'd probably be looking somewhere up around where we are, which is still about close to a 2-to-1 or so from there, with a large degree of stop distance. You could definitely, once you get tapped in, obviously tighten this up towards here or there or so forth overall. But yeah, welcome Will as well. How are we doing, guys?
Hello there. I'm good. I've just closed out with my NASDAQ. It just tanked, which makes sense, to be fair. It failed to break above we moved into profit, came back down, failed to break lower. So I thought, okay, nice. As it moved
don't
back
tell me that.
Into profit, it dropped.
I wanted to short. I'm not short yet.
You wanted to fade it.
Dude, mate, you better hurry up. You're missing that short otherwise.
All right. I mean, I've just impulsively bought.
I wouldn't have done that.
Bought. No, don't buy. Short.
Sorry. Bought
he
as
bought
an
the short.
entered trade.
Oh,
yeah,
fair,
I bought the
fair,
short.
fair.
Yeah.
Okay, yeah. If this closes in a minute's time where it is, this is going to be a really nice short setting up.
Yeah. So
okay, guys, I gotta jump out and get myself and my family, or my family and myself, some nice Polish lunch. Good to see you again, hopefully on Wednesday, if the god of internet lets me join again. And have a good one. See you on Wednesday.
Ciao for now, my friend. Ciao for now.
Appreciate it, Dirk. See you later.
Sure, man.
Yeah, Raf, in FOMO. Like, more so, like, we mapped this out when I was talking with Dirk, just waiting for this to sort of curl over. I'd be on that dip down overall. Did I delete it? Right? Or did I have it on... Yeah, so I think we're scoping out the similar thing on S&P. So this is basically the rough framework. So this is where we closed on Friday. We've run all the way up today. There's potential height further, but we've kind of done this. Like, this is a huge ATR. Like, if we look at this scope from here, when we did actually have the sort of kerfuffle going on in the market with some of the chips on Friday with like Micron. We had the layover from Tesla, Alphabet, so Google, and that kind of stuff. This is pretty much 80% of that move. So I would not be betting on that upside. I'd be preferring to see a bit of a retracement with downside. Not necessarily that we'll close the entire gap, but at least probably push into there, get most of the way through that. So I'd prefer to take this on the NASDAQ. Now I've just got to decide where I'd actually want to, how far down do I want to TP? Because this was the push up we were looking for on Friday. We're talking about the Discord. I figured we get a drop down into here and then into the new week, some kind of push higher. So yeah, I gotta determine the TP. This is the partial entry, so if we get another slight tick up, I'll add again, or if we start fully breaking down, I'll add the second half. I think I'd be going somewhere down here towards that wick low on Friday. Friday my time.
You on NAS?
Time for you guys, but yes.
Yeah,
so
nice.
that was Thursday evening into New York, so it's Friday morning for me at 1 a.m. But around that dip down, I think that's looking pretty good. Trading this on futures, so I can't hold it that far because of the consistency rule. So I'll probably take like partials throughout, and then as long as the trade is still good, I'll like reload, re-enter, something like that. But yeah, how we doing, lads?
Not
I've
too
just
shabby.
I've just done something. It's just entered me into a trade, and I have no idea why.
Oh, on the futures account.
No. Oh no, I've taken out of that.
I will say pound has run down basically to this level I was talking about before. We're almost there now. So there you go with the pound. If any guys took shorts or whatever, like I was saying, I'd prefer to wait for us to actually hit that kind of area and then potentially take longs somewhere off here. But we've definitely gotten there. So the only thing is with things like the euro, we're now pushing onto that same direction that I highlighted, but we've not continued that. So given where the pound is now, we could actually go a bit deeper. As the pound likes to do, it often has a bit of higher vol, so we could get another low before it actually consolidates and then pushes back up for like a dead cat bounce / retracement type factor.
LJ, do you often use the pound and the euro as a invertly correlated NASDAQ trade? So if EU and GU is pushing lower, especially if the DXY is maybe showing a little bit of a propensity to try and push up. Let's say it's not necessarily pound or euro weakness in this case, but like more dollar strength. Would you then say, because there's the potential for a little bit more dollar strength, looking just at EU and GU in general, busy dropping down, that potentially having NASDAQ drop a little bit lower as well, maybe some profit taking, something like that, as the dollar is, increasing in its value. Would you consider that as a potential inverse correlated directional trade?
Yes, so that lays into the risk on, risk off type manner, right? Now it is contextual, just like talked about gold, how sometimes gold is a precious metal and a safe haven, but you have to have the context around whether this is actually purposeful or not. But yes, in general, when we have a more risk-off environment, the dollar will outperform, and hence you'll see euro, the pound, the Aussie coming off. Normally, the catalyst that I use to confirm the euro and the pound movement is the Aussie, because Aussie is definitely more sensitive to risk-on, risk-off as the higher beta currency. So if we see the entire set, more often if the Aussie is actually outperforming in its depreciation, and you see NASDAQ, S&P, or other bits and pieces, maybe in bonds, starting to weave off, the Aussie will sometimes start to front run that a bit, and you'll see the euro and the pound coming off a touch, and then they eventually accelerate. I'll look at that basket of them collectively. But yes, so long as they are both coming off, the euro and the pound, at the same time, then yes. If euro is coming off, pound is not, then it's a different situation. Often that just means like a more of an FX move, and oftentimes more risk on, because the pound will tend to move heavily with risk on, and move a bit with risk off, not as heavily as it does with risk on. It has a propensity to move aggressively higher, more so than it does lower. Typically, when it moves lower, it's because some kind of like government, some kind of factor. But risk on, it will move very aggressively. The euro will move up with risk on, but less so. And sometimes, depending on the occasion, euro will move up in a risk off environment as well. And that's where the context matters. But that's ignore the latter part, because that's the nuanced contextual when it matters type factor. So yes, the fact that we have these guys drawing down is what I would see to confirm that, well, not confirm, but give me a higher confidence that overall NASDAQ, the S&P should come off, given the position we are. Obviously, indices are slightly different to that risk on, risk off factor. They often ignore the rest of the fundamentals, the rest of the macro. We've seen that a number of times over the past couple of years, where stuff is popping off, currencies are getting smashed, bond markets are getting smashed, commodities are getting smashed, and then indices just keep running on, or at least stay kind of level. But in this scenario, where we've already run up, that would give greater confidence to that trade.
Okay, cool. I'm
sorry if I
looking at potential sells on NASDAQ. Just kind of like to align with what you were saying. I want to see us try to at least pull back a little bit. Maybe potentially try and retest on CFD side the upper end of about 28 580-ish, somewhere around there. Nothing crazy. And then fail and start picking up some momentum pushing lower. And then I would look for an entry trying to sell maybe into the gap or just slightly front running the gap. I don't expect us to like test the full gap today necessarily, because we do have interest rate decisions on Wednesday. So I do believe there might be a little bit more of a lull before then, like a little bit of a calmness before the storm kind of like thing. So if we're going to fill up that full gap, I would expect it to be Wednesday.
There's that, and obviously we've got a bunch of the other big tech players through this week. So I gotta check earnings this week. I think Meta.
I didn't even check that.
We've got like some of the big four. I forget now. Meta, Apple,
we've got
I think
Apple.
as well.
Apple is
Amazon
on Thursday. AMD is the 4th. Amazon is Thursday. Google just took it last week, Wednesday.
Last week, yep.
Meta is Wednesday. Microsoft is Wednesday. Netflix had theirs last week. Nvidia will only have theirs again in August. Tesla had it Wednesday.
Last week, yep.
We'll have our first earnings report for SpaceX.
It's going to be terrible.
Yeah, I don't think it's going to be all that good. So yeah, all of the big ones. It's Apple, Amazon, Meta, Microsoft. Yeah, those ones. So yeah, overall, not expecting like the biggest of movements just yet. Bit of a lull, maybe like a slow downward tick, but with an eventual volumetric movement down to eventually fill that gap by Wednesday. Maybe New York session Wednesday, pre-FOMC, which I think for me is around 6 GMT. So the evening, 6 o'clock, so 1800.
Yeah, so I think it depends. Obviously, we got from Alphabet, I think their free cash flow was negative this time for like the first time in forever. So hence we saw massive volatility on that. At the same time, they're investing in other things. So we saw like massive breakdown, massive rip up, then come off. So it's going to be a digestion from the market. There's going to be some kind of inference imputing that into the other big tech players if they're in the same kind of boat. Obviously, they've all been talking up certain things. Apple definitely outperformed last week because they're also sitting slightly aside from this whole, as is their whole thing. You know, they always let someone else build certain products, then they come back and perfect it. So the same thing with the AI stuff, the infrastructure, all that kind of stuff. They're not investing as heavily, but then they'll wait for everyone to figure it out, and then they'll copy it and then do it better after. And we also saw them increase prices last week across the board for all the tech, as well as things like Apple Music and cloud storage and all that kind of stuff. So they definitely outperformed, but then it's going to be the question of, do we get the same kind of reaction for the other big players? Or do people start to digest that and say, no, this is actually good because it's going to turn into something that is a revenue generator, which everyone's trying to flip a coin on right now. So I'd definitely say volatility. I think at the end of the day, once you digest that, you start playing the back and forth of these kind of games. Eventually you go like, yeah, but in 5-10 years, I think we're definitely higher. And so we tend to see this volatility, a snap down, and then eventually we get bought back into overall. So if I can swap to one of you guys' charts for a second.
Yeah.
Just got to pop to the
Little
ladies' room. Yep. And I'll come back.
Awesome stuff. I'm in S&P at the moment. So I feel I'm a little bit early. You know, we've got this. You know, we got
Selling
this.
or buying? Selling.
I'm selling.
Okay.
We got this. Price starts slowing down at this point here, and then we did break and close above here quite nicely. We came back down, attempted, failed. We came back and retested, should we say, this area here. And then we've moved back up, failed to break and close higher, and then actually created a new lower low, creating that, you know, shift in structure. So that's the identifier there. I would have much rather have closed under the 50. However, if we can close under the 50 here, then I think there's confluence for my early trade to be somewhat positive anticipation, should we say.
Okay. What did you end up doing with your NASDAQ trade?
I took out. Yeah, no, I took out about...
Little bit below, little bit up?
Oh, no, below. Yeah, no, I was down. Yeah,
Okay.
no, I took out about here.
Yeah, I wasn't entirely sure about NASDAQ this morning. Monday's being a little...
Dude,
like
it's
I
Monday.
said, Monday's being a little more of
Monday.
a lull period for me.
Yeah.
Mondays have been a bit strange. So I don't know. I'm gonna look for sells. My initial look that I had earlier was for buys because there was no real reason to be looking for sells just yet, but that upward momentum has completely died off.
It's
So
gone. It's completely gone. You know, we again, just basic order flow. We had price attempt, failed, continued higher, broken close above, nice little consolidation, breaking close further above again. Price came back down, failed to break lower, tapped into this area, continued higher, and then all of a sudden, we just momentum dropped. We failed to break higher. We closed lower, and that was the indication for me to say, "No, I'm out. I'm hopping off this train before it gets to the destination I don't want to get to."
Yep.
Looked at the S&P. I thought, okay, if NASDAQ's starting to drop, NASDAQ's starting to look a little bit more to the downside. You know, okay, let's see what the S&P is doing. Maybe I can get in a little bit earlier, the S&P, if the NASDAQ's already moved. Because I always find that S&P is a little bit slower than NAS.
It's
And
not
then
as volatile.
Yeah, consolidation, break and close above, pull back, tapped into, come back above, failed to break higher. And I thought, okay, if we can break and close below, then happy days. And we did. We broke and closed below. I thought, okay, I'm going to get in. It's a little bit early, but I'm going to get in anyway. So I'm 0.5% up at the moment. Not only that, I put the indicator on. It identified short. It got it wrong here, but it identified short here. And I thought, okay, even the indicator's on my side here. So,
Yo, boo you.
Yo, boo you.
Hey, I've arrived.
Hello. How you doing, man?
I'm good. Sorry, I just feel like I rudely interrupted. Please carry on.
That's go on. I'm done now.
No. I feel bad.
No, it's all right. It's all right.
Booyu is a dick.
Yes, officially confirmed. I'm a bit of a dick. I'm sorry.
We'll let you off, mate. We'll let you off. We're
Will.
all a little bit. What?
Sorry, did you say you're up 0.5% already on this now?
Yes.
How big is your full TP then?
3%.
What
There's
are you
no
risking?
way you're up 0.5% now then. Yeah, what?
No, I'm not. Now I'm at 0.28%.
No, but hold on a second. What is your risk?
Okay.
2%.
Okay.
Oh, okay. All right.
Yeah, okay.
That makes sense. That makes sense.
Because I was going to say, with where we are now, if that's 0.5%, dude, you're
I got my big
8% profit or something.
Yeah.
TP1 would then be 2%, but you would be taking off half risk, I'm assuming, so 1%. And then TP2 would be technically 4%, but you've already taken off half, so that's 2%. So this is a 3% trade.
It is indeed a 3% trade.
So
right, you're doing the
total. Okay.
Yeah, so
you're doing the partial.
2% come down, 1% take off half, blah blah blah. Another
Okay,
2%,
makes sense.
3%
Yeah,
total. Move stop loss to break even after TP2 has been taken.
That's fair.
It's
I just want to highlight.
Yeah, it's aggressive. It's risky, but it's.
No, I think it's fine. I think it's fair given today. I
don't
just
know
want to highlight this.
Though, but
Yeah, of course. Yeah. Hang on though. If look, I'm just gonna say Khan because I'm gonna absolutely butcher the rest of your name. I'm sorry. But yeah, if you're in this right now, I would potentially consider just scrapping it where we are.
Yeah, that's why I did.
I think we're coming off.
Uh-huh.
Like Will scrapped his long.
I
it's
scrapped
you,
mine down, yeah.
but we're
I've
definitely
swapped my
getting
bias
downside
as well.
momentum. Yeah. So.
I might actually counter that a bit. So I, on the higher time frame, spotted that we've reached kind of an equal low area that we bounced off of. We did blast through this equal low here, but it looks like we're kind of reaching like a. If I go down to the 50-minute chart, it's very on the tip for me. I reckon if we go through here, then we're long. Right now, I wouldn't necessarily be taking shorts, but I don't know. I reckon if we pull back a little bit, maybe retest this low here or this low here, might be able to look for a long. But yeah, at the moment, I'm out of this one. I have gone long on US 30 though. That is working out absolutely beautifully. For those who don't believe me, this is where I got in.
We believe you, bro.
Yeah.
Unfortunately, though, I did get a bit scared because I did initially enter that on Friday. Entered in longs on S&P and US 30. But then I was like,
definitely
oh, it's a
risky.
weekend. I don't know what's going to happen. So I decided to close those positions. Took a little bit of a loss on them, but re-entered in the US 30. Don't know why I didn't re-enter the S&P now. But yeah, NASDAQ. I have a feeling since US 30 and S&P are also heading higher, NASDAQ might turn the tide. I'd want to see a bit of a higher push though before I jump into that trade though.
I mean, that gap
But-
for US 30 was like a godsend for you, mate. It was just like, oh,
Yeah. Well, it would have been a godsend if I had stuck with my plan and held the trade. What I did was I got scared. I closed it on Friday. Was like, I don't know what's happening over the weekend. You know, Trump has been making a bit of a noise about Iran, so I was like, all right, you know what, let's be safe. Close it out and then reopened it last night, basically.
Yeah, that's
And
why we
on-
got the jump higher in the indices, right, and across the board, like risk on assets, because Trump did pull back. But I think that's the layup to the next. Like, it's a bit like, let's take some more time to calculate what we're going to do rather than just retaliating, because that hasn't worked, obviously. So that's why I'd be more favorable of some kind of pullback. It feels very much like we're going to get some more headlines, that kind of stuff going on. Like, to drive higher, I think you'd have to assume that somehow, you know, Iran and the US and everyone else have come back to do some deals. We also had other headlines with Pakistan arranging a situation with Iran and China, which China called for over the weekend as well, which is something else I've highlighted. Like, eventually when this does start getting dire, China's going to come in. So hence, the US probably also pulled back because China is now pressing there for saying, this is not good, this is not going to work out. And then they put it under the guise that, okay, we don't want to engage in the military stuff. There were some other bits and pieces that we've already spent too much money on, the, you know, whatever their rationale is they want to give publicly. But clearly they're giving the lead to China to say, you go and try and put your, you know, foot on their throat, and see if you can figure it out overall. So, but this stuff is never straightforward. So when you get something good, it tends to go bad the next way, and then back and forth. Yeah.
Yeah, for me, I'm just like, you know, the ultimate escalation would be boots on the ground for me in Iran. I think
Yeah, not going to happen.
It's not going to happen. It's not going to happen.
It's impossible. It's impossible. Yeah.
Yeah. So if there's not going to be boots on the ground, and that's the worst scenario, then I reckon the next worst scenario would be, okay, we bomb, they bomb back. Hello. Hello from London as well. They bomb, we bomb back, and all this tit for tat until they call it a day. I think I mentioned it before last week. We are heading into midterms in October, I believe. I keep forgetting because I've got I don't know what I have. A short-term memory, a goldfish memory.
Irony,
midterms,
brilliant.
Midterms in October, then that means, what, there's 2 months left of this nonsense, hopefully, before we start focusing on election stuff. I reckon they want to get...
And that comes with its own volatility in itself, mind.
Yeah, traditionally as well, like, indices always underperform when we're coming up to midterms. Like, if you look at seasonality type stuff, I've talked in the past where I don't really like seasonality. It's a very there is some stuff that is more reliable and other things that it's a very small sample size, right? So yeah, you can get statistical aberrations and that kind of thing, but in general, you do tend to underperform. As things try to stack up, where you've got the kind of federal pocket plus the midterms kind of competing with each other, whereas the federal pockets they're definitely established, they've had the first 100 days and so forth. They want to then roll into the next phase towards the end of the term and going into the next elections, at the same time supporting the midterms to win there as well. So there's a bit of a chop and change. Plus, we're going into that European summer, like I highlighted last week and the week before and that kind of stuff. So yeah, it's going to be we've got so much data, like the Fed. We got all the earnings this week, and then going into next week as well. This week we got end of month, and then next week we got non-farm payrolls once again. So there's a bunch of stuff to come through. So I think this, as far as trading, will actually be really good. We're going to get a lot of movement, which is probably one of the final bursts before we go into that very much more lull period in that European summer, where you can really pick up some profits. After that, it's going to be much more difficult overall. So,
well, I just had
NASDAQ and S&P trade. Yeah, it's performing, isn't it?
Yeah. Gosh. So just had
Nice.
TP1 taken, secured 1%, and now stop losses at break even. So it's guaranteed 1 hour up, or it could be a 3 hour up. So either one. It's either going to be 3 hour or a 1 hour day for me now.
We are running.
Now risk free.
And this is on the futures, right? Will?
No. I'm back
your
on my
CFD?
CFD account now.
Okay.
Yeah. No, I only trade NAS on the futures.
Yeah, fair.
I'm trying
Why
to
specifically NAS on the futures?
say again, mate.
Why NAS specifically just for the futures?
I don't know. That's a fantastic point. To be fair, I think I just don't want lots of assets on my futures because like I'm not confident with the futures accounts yet. So I don't want to like have a big portfolio on or have a big watch list on the futures accounts. Whereas on the CFDs, I've been trading CFDs for like 8 years now, so it doesn't bother me whatsoever. I'll trade NAS, S&P, US 30, gold, EU, GU. I'll trade everything, and I can trade them very comfortably. Whereas on the futures, I'm sticking my tongue out and chewing on my tongue while I'm placing a trade sort of thing. I'm like,
Sounds painful.
how do I do this again? So I don't want to have to do that and try and navigate through like 3 different watch lists.
Yeah, and especially it's like different asset names and all that kind of stuff.
Yeah,
I'm trying to
exactly.
shop around. Am I on the micro or
tickers because
the
they
mini?
expire and it's
Yeah. You pull in one of these faces, like
literally that. Literally that. So.
Khan. Yeah, sure. I'll take that. I'm sorry. I think you just got tapped.
When you owe me $100, dude,
I think we actually just hit 28,489. Right, like the exact bottom there on NAS was where your stop was, dude. Sorry, bro.
Part of me has the slightest feeling that may have been an SL.
I'm also in a trade right now, 0.5%
Ooh.
risk. Already took TP1.
Beauty.
If we get another drop, so we have a base, we're busy building a base right now on the 5 minute. If we get another drop, I'm taking another 0.5% trade as well, adding on to this one.
Oh, you're adding on? Oh, nice. I thought
Yeah,
you meant
I'm
like
gonna
you're
add
taking...
on.
Okay,
Rich,
fair.
should
No,
I
no.
add? Should I add as well?
Oh, you wouldn't.
I'm gonna. You do you, Brew. I can't
will-
say you do you, Boo, because
I-
Boo you is down here. You do you, Boo you. Should go, you do you, Boo you, Brew. Bro.
I was just every time I hear be like it just reminds me of Dragon Ball Z every time.
Oh, Oob.
What?
Oob or Boo.
Well,
Oh,
someone
definitely
has
Oob.
this love me
Or-
calling me now, Majin Buu. So
Yeah,
that apparently works.
yeah, but like final form, like the peak, just like
Margin
Yeah.
Boo. Yeah. Kid Boo. Actually, final one was Kid Boo.
Kid Boo. Yeah, Kid Boo.
Yeah.
I was gonna say not Margin Boo, not
Fat
the
Boo.
like, chocolate
Yeah, it was
eating.
Fat Boo, Skinny Boo, Super Boo, Margin Boo, and then Kid Boo.
Yeah.
The 5 stages of Boo. Which one are you currently right now, Boo?
No, he's Oob. Oob. It'd be
oh,
Oob.
yeah, I could be
Technically.
Oob.
Is not
I-
yet his final form.
Yeah.
I'm just going to sit here in silence while I watch you guys whatever you're talking about. So
Okay. To keep you in a conversation, by the way.
no, it's fine.
I have to admit something. On the weekend, I was curious, so I went over to Ants Canada.
Oh yeah,
And I saw there's 7 million subscribers over there.
there is indeed.
So what you watch may not be as niche as I thought it was. There are genuinely people who are very interested in the ant kingdom and the ant colonies.
It's not just ants.
You are
though.
vindicated.
Yep. That's how it goes.
Oh, dude, I was still drinking my energy drink. I was lost it. Oh god.
Did you, Boo? Did you at least enjoy it?
I didn't actually sit down and watch it, okay? I didn't go that far. I just went over the channel just to check it out. I'm sorry, what? I just wanted to know, is this actually a thing? And yeah, it's fully a thing. The thumbnails did look interesting, I'll admit. Thumbnails looked interesting. I
Clearly
just
not that
didn't.
interesting.
They were colourful. I just didn't want to sit down and watch the ants. Now, if you told me there's like an awesome narration voice to it, like David Attenborough level,
Okay, it's not quite David Attenborough, but he has got a really nice narration voice.
okay.
To be fair, he he does show expression and excitement, and it is quite good. And there's lots of also like other exotic animals in there. It's not just, you know.
Dude, other like social media traders buy like Lamborghinis, go on lavish trips to Bali and all this kind of stuff, right? Like, you know, Will's just out here buying like expensive ants, and he builds an ant terrarium, and he, you know, he earns all this money just so he can watch ants.
Dude, you joke it. You know what? Fuck you guys. Give up.
Yeah. Hold on.
Dude,
There is
buy a
something
Bugatti,
this week
come on.
I haven't spotted in the chart.
Normal.
You know, we need to keep this organic trader thing going. Where was the chicken and the eggs?
You know what, Boo? You got a fair point. You have got a fair point, my friend. We need to decide.
Wait, what?
Egg. So we've got egg.
You missed this last week.
Okay.
But we've got a new indicator right here.
Egg or chick?
Yeah.
What the hell is that?
That's
We'll
a
see.
scrambled egg.
Can you guys see this okay?
Yeah.
Yeah?
Okay.
There we go.
So I'm a hatchling. I've now developed into a hatchling level. Dude, we could make a game out of this.
So this is the entry, the stop, the progression, and the final form.
Okay, so just to catch Rich up, and for those of you who may be thinking, what the hell is Will on about? We were chatting about Ants Canada, and Ants Canada is, I don't know if you probably haven't heard of it. Yeah, maybe you have. It's basically, it's a guy from Canada. He started out with an ant channel, and it was literally just ants. Now he's moved back to East Asia, I think it is, and he's, built himself a big vivarium. This vivarium, he's got his own ecosystem, and it's called the rainforest ecosystem. He's got ants.
I think I've seen that channel.
He's got ants, cockroaches. He's got a baby caiman alligator. He's got.
I've seen it. Massive
monster
vivarium.
Monster.
Yeah. I've seen it.
Downstairs.
Yeah, I've seen it.
Yeah. So I've started watching him, and then I joked with the guys the other day, and I said I'm thinking about doing, because as you guys know, I grew up on a farm. Now I've got a lot of farmland. I've thought about having an organic channel, because I believe in organic food. I don't like pesticides. I don't like a bunch of carcinogenics and stuff like that. So I like organic foods. So I've thought about doing a bit like Clarkson's Farm. Now, those of you who don't know, Jeremy Clarkson was the guy on Top Gear. He's the host of Who Wants to Be a Millionaire. He's bought a farm, and it's Amazon Prime documentary called Clarkson's Farm. I've thought about doing something very similar, but instead of being like race cars and, high octane cars, it'll be trader in farming. So all my profits in trading that I generate, I'll spend on the organic series. So I was thinking, what do you reckon, guys? Should I be Will Davis, the organic trader? So that's what I was talking about, Rich. And to be fair, I think the majority actually voted yes. but
Yeah.
I don't know if I'll actually do it. And I was thinking, like, literally, like, do like a big 5ers Will Davis organic trader collab where you get to watch me off the charts doing farming stuff, like raising and killing goats, milking goats, raising and killing chickens, and that was where the whole thing came. Where it starts out as an egg. If I hit TP1, it's a chick. If it hits full TP, it's a chicken. And if it hits stop loss, it's cooked. So it's a fried egg.
That actually does make a lot of sense.
So that was it. Like
100%. I understand 100% where you're going from. I don't quite know if people are going to want to watch you go around on a farm, stepping in all kinds of like animal excrement and then slaughter an animal. I don't think that's going to be appetizing at all. So,
obviously,
we were going to call it the organic trader, and hopefully, maybe have like some cute farm animals getting involved in trading. Like he strokes a lamb,
for example,
placing he's an NQ short.
Yeah, so like I'll bring like a baby pig in or something. Like, I'll bring a piglet in, and I'll be like, "This is like Babe, the baby piglet." And then we'll be trading with Babe one week, and then next week I'll just like smash down like some like pork rice or something, and you'll be like, "Where's Babe?" And I'll be like, "He's still here. Don't worry. I'm I'm num."
The animals get to trade until they lose, and then they become cooked.
Yeah, exactly. And if he loses, straight to the slaughterhouse sort of thing. It's like, well, you served your purpose.
Oh my word! I don't think we can do that.
I think this is. I think you're just gonna get banned.
Will,
it's like trade to live with animals.
Will, please get yourself a personal YouTube channel that you could do streaming on. I'm gonna have to talk to the 5ers and tell them to cut whatever sponsorship deals you may or may not have had. Just cut it short because we can't have this.
This is why I was laughing so much. Like last week we were talking about just like more of a Clarkson's farm type thing.
I was joking, guys. I'm not actually going to slaughter them if they hit stop loss. I am kidding. That's
some dark web type thing.
Yeah.
Oh,
some have OnlyFans. I have only Forex, and it's
only farms.
Instead of the not safe for work, it's not safe for most viewers.
Jesus Christ.
I'm kidding. Right, okay, guys. Let's just draw a line under that. That
organic
was a
trader
joke. All that was for lols. I'm not actually going to do any of that. But all seriousness, I was thinking about doing like an organic series where, because like I'm big into my healthy lifestyle, big into exercise, staying fit, staying healthy, and looking after your body and your mind and how that will affect your trading. So I'm big into how what you consume is what is how you perform.
Look, Will, maybe we can start with just like, I got some chickens here. All right, gonna go collect my eggs today. Gonna have my breakfast. Get some good protein.
Exactly, but all that must be done.
Trading, right? Let's we can chill on the culling.
We're not
going
to do that.
We make some cute farm animals wear some 5ers merch. Would that be acceptable?
Yeah, that would. But like any other connotation of like animal farm, like after hours, like needs to be like
behind the scenes with Will.
Behind the scenes is like, what did Will have for breakfast? Was it? Please select the correct option. Was it A, Babe?
Was it
B, Billy?
Yeah.
He could do this with like a Happy Tree Friends type version.
Even
animated, we can't do that. Wow.
Okay. So
just be on his own.
I'm gonna bring up. Right, give me 2 seconds. I'm gonna bring up. Hang on. I'm gonna. Bear with me. You're gonna have to stick with me on this. Give me 2 seconds.
Right. While he does that, thinking about cute animals in 5ers like merch. Are we allowed to talk about potential 5ers merch?
Yeah, of course, man.
Yeah, of course.
Yeah. Okay. Because
Buyu, what stream is this?
Yeah, no, I know it's a Fiverr stream, but I just don't know if this is top secret or not.
No, dude, we can talk about the merch, we can talk about giveaways, we can talk about discounts, we can talk about summer accounts, we can talk about boosting, we can talk about anything related to the 5ers.
Okay, in that case,
Fully
you
boosting.
have the link to the 5ers merch, right? The store.fivers.com.
Yeah.
Do you want to bring up on stream or?
You can bring yours up. Yours is already up.
Yeah, it's already up. Awesome. For those who don't know, the reason I wanted to bring this up as well is because I like the summer theme. I like the summertime. I like our summer plan. And there was a few summer pieces that I, in particular, had my eye on that I have not really seen anyone talk about. In particular, I'm eyeing up this summer print unisex tee and this Fibers beach towel.
It's
And
pretty sick. Yeah, I can't lie. They are really cool.
Yeah, I really like the design. I really don't know why we don't talk about the Fibers merch more.
Wait, Booyoo's pissed. He's like, why aren't we talking about this more, guys?
Why are we talking about this more? I really like these two. Those two are my favorite picks. And obviously, for those more brave of us, there are some boxes as well to celebrate when you get funded.
You know what I want to see? I want to see a 5ers jockstrap.
I was
Hans
thinking
Gunther
more
is
like
back.
a Fivers, like a nice Fivers thong or something that I could wear.
But yeah,
Will, there's this level, and then there's you going to this level. We
Speedo.
have.
There you go, Speedo.
There we go.
Fivers
Thank you
Speedo.
very much. We have some of the 5ers merch, so we do have the hoodies and the t-shirts and stuff like that, and some of us have the caps as well. It's really good quality,
Yeah,
like
no, dude,
genuinely
actually,
really good quality.
Literally, I don't know where my Fivers hoodie is. The missus just keeps wearing it. It's MIA. Honestly, it's MIA. Like I said to her the other day, I was like, right, I'm gonna go record some Fivers content. I was like, babe, where's my jumper? She was like, oh, I don't know. I was wearing it last night. I was like, right, okay, fine.
cool.
So yeah, I don't know where it is, but yeah, dude, they're super comfy as well. Super comfy.
So yeah, if you're looking to looks max this summer, I don't know, want to go out looking like Clav, you might want to put on a Fibers jersey and get yourself a Fibers cap, and yeah, just rock the look.
Pure absolute look maxing.
Yeah,
The hoodie somewhere. I thought I had it there, but it's not there. But I did also we made some other merch through the community month with this stuff. This was a bit of a one-off for some of us.
is
it
that
was
for the
something I
duck
made myself.
races?
Right? Yeah, it's for the whole duck type thing. So it's like the Profit Syndicate. What was it? Pound Profits Syndicate, and then it's got the ducks everywhere. Got the 5ers in there with all the prints and stuff. So I don't know. Maybe we can do some more things like that and actually get some like community contributions or something.
If you
I
really
think
want to
that'd be
show your
cool,
support to the
actually.
5ers, go and get yourself one of these.
You must put it on you must put it on your story and tag us so we can see. There must be proof
Yeah,
that
definitely.
and if you stream it or like record yourself getting the tattoo, like there's hub points in it for you.
Let's go to the
Oh, for
hardcore
sure.
ones that get branding or scarring.
Straight up
Tattoos are
100K
just not
account
enough.
right there. You know, like that's
I will
there.
personally buy you a 100K account. Guys, again, these are jokes. Please, for the love of God, don't do that.
Don't do it.
Yeah, guys, this is honestly we're just joking.
Because there's gonna be people out there like, there's a 100K account and this is so worth it.
It's
Yeah,
oh.
yeah.
I remember when I was working on the nightclub once, and someone comes up to me, and so we used to have stamps for the nightclub, and so I used to work in this one nightclub called Sands, and it was Sands nightclub, and you used to have like a square stamp that said Sands on it, and this one person goes and like tattoos on her arm, or I think it was on her arm or on her shoulder. She tattoos the stamp saying Sands, and apparently the manager said if you get the Sands stamp tattooed on you, you'll get free entry for life. Well, it turns out they were joking because they were drunk one night. And she comes up to us and goes, "Oh, guys, yeah, free entry, free entry." She's forever got a stamp from a nightclub tattooed on her now. And she still didn't even get one night free entry.
Oh,
The least you could have done.
I know.
Will, was to
it
give
wouldn't
her
my
free
control.
entry for the night.
Yeah.
What?
Within my control, but yeah, she deserves
What?
life. I don't care what anyone says.
Oh my word.
I know.
She must have like really loved the nightclub. That nightclub must have been banging, mate. Like absolutely
It was
on
a crap
fire.
nightclub. It was a bad nightclub.
Maybe
She was in there.
He's one of those people that just doesn't register sarcasm.
Yeah.
That's rough. I'd probably still keep it after I got it, just for the story. You know, you just be like, yeah. Cool. Right after you've got it, you're like, okay, I'm already here now. Either I gotta get it lasered off, or I just accept this. Like,
Yeah, this is just going to go to the grave with me, like a good story.
Yeah. I just gotta make a phone call, so I'll come back.
Yeah, no, that's pretty much. Real GCC, Gandalf will, you shall not pass.
You shall not pass.
I said that a few times, to be fair. There was one person really drunk, and he's been really aggressive to me. And he went and pushed me. So I stood there, and I went, "You shall not pass." I tell you what, I will admit, he did throw a hand at me that night, because obviously I wound him up. But it was all the guys working with me, we were all wetting ourselves.
Swinging.
It was on our body cam. Like I'm the sort of I'm an awful doorman. I'm the sort of doorman that'll wind you up just because it's funny in it. And we had it on the body cam, so we went back to the office after hours and we plugged the body cam into the monster TV. And we were just watching it, and we were absolutely creasing. Yeah. I won't tell you what happened after, but yeah.
Yeah, let's keep it PG, mate. Let's keep it PG.
Exactly.
Yeah,
dude, it was so funny. I used that. I actually used that phrase. You shall not pass. Hoodie looks cool, man. Dude, the hoodie, mate, the hoodies are super nice. I'm sure that I've got one at least.
Yeah, we have a very important question here. The chat wants to know: did you model the boxes here?
This is Richard Butler. Yes, this is indeed Richard Butler. I was there when he was modeling, and you should have seen the amount of squats he was doing. It was.
Well,
unreal.
I'm gonna have to be honest, guys. I do have a pair of tight buns, but my thighs are not as skinny as this person's thighs. So no, it wasn't me. A dead giveaway is the lack of tramp stamp tattoo.
I heart Ibiza.
If you can see this, what are you doing with your life?
Yeah.
So this summer, you can get an account from the 5ers with the summer plan. 100K for 149 for the 10% plan. You know, celebrate by using some of that profit, getting yourself a nice little unisex tee or beach towel. My personal preference is, and hopefully watch a bit of Organic Traders, where cute lambs will model 5ers merch for you while trading.
Yeah, where they go.
Yeah.
5ers. Oh, speaking of, actually, hang on. Speaking of, I need to bring this up. So, I'm gonna go back to. In fact, we're actually coming back to TP2, which is nice.
So back to your screen then.
I'm sorry. Oh, what just happened there?
Yeah, I was about to say, what are we doing?
Yeah. So we're coming back down to TP1 now. So we're back up just under $1,000 up, heading down to TP2. This is now risk free. So we're at the chick stage. So we're about to become the big ass chicken. So hopefully we can hit. But again, this is risk free. So we are no longer an egg, and we are no longer cooked. Why won't it go?
Well, you can still be an egg, can you not? Because it can still hit stop loss, correct?
No. It's risk free though. So we're forever.
Oh, okay. No,
Yeah,
I'm
we're
with you.
forever a chick now. We're forever a chick.
All right.
So we'll just put a big chick. Yeah. There
Awesome.
we go. So we're now a chick. We just need to become a chicken. Anyway, going back to the Ants Canada, they've got things that you can vote on. So you can like best seafood, vote on the best seafood. What animals do you want to see in next? Blah 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 blah. You know. So I was thinking, what you could do is, what animal do you want to see trade next, or what animal?
Okay, so there's an octopus that trades, there's a goldfish that trades, and there's a chicken that trades. Like, what else can you add on? And I think there's a cat that trades as well.
What animal should Will add to the farm next?
Okay, so you can have a cow, a pig. I don't know. Do you have llamas in Wales? You can have a llama.
Yeah, like llamas, alpacas, stuff like that.
Yeah. You can have any one of those.
What should be taken next to the food store, sort of thing? Like, who's off to slaughter next?
Nah, dude, come on. We're over that. We're not doing that one.
Vote in the community.
We'll never get any votes. Nobody's gonna want to see a cute little alpaca go to. Nobody's going to want to vote for it either. They're going to be like, I had something to do with the fact that this poor animal is now going to a slaughterhouse. They'll be like,
is this something we should make a poll for quickly in the chat? Or
no
poll. I'm
poll.
also like looking at growing stuff as well. So like growing cucumber, tomatoes, veg, stuff like that. So it's like, what fruit should I grow next? And like give an option: orange, lemon, apples. Like, what should I plant next?
And then we have to wait 6 to 8 months for said tree to get to fruit-bearing stage.
Watch
the tantalizing episode today. 8 months later. It died, guys.
I killed the tree. I overwatered it. But it's
anyway,
something
I
we
wanted
do on the
to.
weekend. It'll be a weekend video series.
We actually did watch this weekend. This is a gardening show with Zach Galifianakis on Netflix.
What, in between two ferns?
The same guy, Zach Galifianakis, but it's called This Is a Gardening Show.
Oh.
It's that same Zach Galifianakis level comedy. Anyway, I wanted to get back to what Buyu was talking about earlier with the accounts, the summer plan. We don't just have the CFD summer plan. We also have a futures summer plan as well. So if we go over to my screen, you'll see that this is the future side as well. Now, you all know that I do like this poor guy is like absolutely... Anyway.
The level unbothered is unreal.
Yeah,
One day I will trade that calmly.
He's like under armpit deep in the soil here, and the water is coming, but he's like, this is fine. This is fine. I'm trading. Anyway, we now have on the swing account side a 100 and a 150k account as well. So we've now increased the amount of accounts that we have. We used to have the 4 for the day trading, which was 25, 50, 100, 150 accounts, but we only had the 25 and the 50 for the swing accounts. Now we've added a 100 and 125 one as well. And they are with discounts as well. So the original 25k account, let me just get this. I have a little cheat sheet. I have a little cheat sheet. Where is it?
I'm interested.
For the 25k futures account on the swing trading side, the price used to be 120. So now it's 69. What a lovely number. For the 25k, for the 50, it used to be 240. Now it's 120. And then we've added the 100k, which is now 189. And then the 150, which is 219, which is about the same price as what you would get for the day trading one. Awesome thing is, with this one, you can hold overnight. So I don't know where I'm going with that hand gesture.
Does overnight include over weekend?
No,
That's
it
my
does
question.
not. None of our futures accounts allows for weekend holding, unfortunately. You can still do that with CFDs, obviously, but with the futures one, it's midweek holding, so Monday to Friday. So if you're going to be swinging, you're going to be swinging Monday to Friday just before market close. So do go have a look at that. It's only going to be on the swing side for the summer plan. So the 2 new accounts only on the swing side. So yeah, go and have a look at this one, definitely. Anyway.
Indeed,
Very nice.
indeed. Very nice.
Very nice.
I'm still considering if I add to this trade. Rich?
I
Rich help.
did add to here. So
Yeah. I haven't yet.
so on the close of that candle, I did add. So I'm not too sure about this. I think this one is actually going to go up and ruin me. But it's okay.
Where am I?
I actually think we're going to potentially come back to this point over here and then start pushing off. So I might consider pulling my stop loss up a little bit higher. This one is not the same. I'm not managing it the same way as the first trade with the 4 TPs. This is just a straight up 1 to 2 R trade. So the add-on is 1 to 2. It's not going to get split up at all. So we'll see.
So, quick question: can you talk us through when it's appropriate to move stop losses and not? Because historically, I'll admit, when I first got into trading, I had a very terrible habit of whenever I saw a trade going against me, I'd move the stop loss, and then if it kept going against me, move the stop loss again. I kept moving the stop loss until it reached a point where it's like I literally cannot move it anymore. Otherwise, I just lose the account. So I've always found that. Well, historically, I found that a bit difficult. Now my rules are a bit more set. I'm happy to take a loss. But in terms of moving stop loss, how do you manage that, and when is it appropriate?
Good
It's a
question.
very interesting question because I think we're all going to have very different answers based on how we approach the market.
Yeah.
So, yeah.
So, LJ, if you want to, because I know that you have in the past moved your stop loss, but you've always done it with very good reason. So what was your reasoning to pull your stop loss a little bit higher?
Yeah, so it's going to depend. If you're very mechanical, obviously moving your stop is going to be detrimental because you're then deviating from your, assuming you've back tested and forward tested your previous approach, moving that stop is going to shift the data altogether. Now, that could be in positive favor, or it could be completely negative and destroy everything, right? So you're not going to know. Now, hence you have to have, just like Rich was highlighting, like a reason why you move the stop loss. And normally when I place a stop, I have some other significant levels that I've mapped out. And then hence I pre-position the original trade with that expectancy that I can move the stop if I need to, right? So I won't position like oversize. I will leave a bit of room to then add into the trade and basically gradient into the total position. That's one thing. Beyond that, even if I do take a more full-size position and then I do want to increase the risk like up above 1%, so 1.5%, maybe 2%, even sometimes I've gone up to 2.5% or 3%, depending on very specific instances when I have very high confidence on the overall playthrough. Now, that comes through a cluster of other market levels, resistance levels or support on the other end, as well as the overall macro framework and the digestion of data. So for instance, example would be things like where you get NFP, where you get that drive higher, say it's a positive NFP number, dollar goes up, then you get that slight pullback over the next 15 minutes, half an hour, and then you tend to continue in the same direction. So in some of those instances where I'm trying to pick that sort of relative top, I might have a bit more degree of liberation for that, so long as I'm confident that there is going to be that slight pullback. If you have a blowout NFP, you tend to just keep picking up for the next hour or two. Don't get that 15 or half an hour pullback, and then only like 2 hours later you get a pullback, which is very minimal, and then keep running. So that's where it becomes very contextual. So you have to have reasoning of some further thought out plan or structure that you've pre-analyzed, pre-conceptualized as to the entire branching spectrum of how the trade can play out. At least that's how I do it. Now, if I'm trading very technical and not doing so much macro stuff, I will still have other further levels where I might have a very near-term key level on like the 1, 5, 15 minute, but I might see a higher level that is possible on the 31 hour, 4 hour that we could breach and run to. In that situation, I'll either decide, do we have the momentum to actually push this, or is this just a bit of an aberration? If it's an aberration, I'll move the stop. If we're going to push it, then I'll often hedge the trade, basically net out the cost difference, wait for that to run up to that prospective higher resistance or whatever, and then TP. Then I can shift the stop up through there and allow it to run down. But by doing that, you always have to anticipate that early, not late, not when you're already in a very, very heavy drawdown. If you're in a very, very heavy drawdown, it's very hard because you've got very limited room where you're now trying to catch the tops at that top point. So definitely how I do it is much more sophisticated, for lack of a better term, much more experienced, that kind of thing. But yeah, that's sort of how I do it on. It's not based on nothing. Like I definitely have a process, certain data points or inferences that I relate to decide whether I'm actually going to do that. I don't do it willy-nilly just because the trade is, I wanted this to happen and it's not going that way, so I keep bringing it up. It's I'm forward anticipating something else going on, so I'm willing to take a certain level of pain, and I know at the same point where that max pain level is, where I do have to drop out at all times, right? Whether you hedge or you close the trades altogether.
Okay, that makes sense.
Yeah. And that's why layering into it in portions is good, because it gives you that extra breathing room if you do have a slightly... This is very hard to pinpoint the exact drop point or progress point. So if you layer in, it does give you a little bit extra room, and then once you see the shift in the market, you can add to the original trade, or vice versa, jump out for a lower cost, or hedge or double up the other way, or flip the trade.
So, yeah, does that answer what you think was like the correct way to adjust for you? For a stop loss?
I don't have a correct way to adjust. I did have a follow-up question though on hedging and layering. Have you ever run into any issues with prop firms regarding that?
Just, in fact, sorry guys, just before you do answer that, LJ, I'm getting a pile of phone calls coming through real quick, so I'm going to have to hop off. I shall see you all. I didn't realize the time. It's 1 p.m. I thought it was the first session for some reason. Guys, I'll see you all tomorrow morning. But in the meantime, guys, thank you very much for joining. Just to let you know, my trade is still running in profit. It is risk-free now, so my stop loss is at break-even. TP1's already been hit, so 1% up for the day at bare minimum. So it's either going to be a 1% day for me, or it's going to be a 3% day for me. Either way, that is going to be the definitive answer for me for the rest of the days. I'm not going to be trading now for the rest of the day because I'm off out. So guys, thank you very much. Make sure that you smash the like button, subscribe to the channel if you are new here, and I shall see you all tomorrow. So thank you very much. Peace.
All right, Les.
Peace. See you, Will. Yeah, so B, you were trying to say, have I had any problems with the hedging type factor?
Yeah.
Overall. So the main thing is not hedging account against account. That's very different. That will be very framed upon between firms, because then you're trying to gamify the thing. I'm hedging within an active trade, and then so I might just take like you're actually capping risk. So this is very different, where you're actually protecting downside, protecting capital, that kind of thing, being safe, where I might take something up here, see if we get a long drive, we run up to here, I'd enter in this trade on the break, and then TP up here. This stop would then come up through here, and I'd see if we hold that and then run back down. Now, even if we then run back down after driving up to here, back to about flat, I've then still captured this portion of the profit, and I've closed the original trade for flat. So that's kind of how it works. So when you're doing it on a systematic, very structured, very considered manner, I've never had a problem. If people are trying to like hedge a trade where you're just entering both of these at like the same time and just trying to see which one comes through, and
that's called
not gonna
bracketing
work out.
almost, yeah.
Yeah, that's bracketing. Yeah, which is completely different. So this is just normal. I mean, this is normal procedure that, you know, any major fund, any, you know, quant fund, hedge fund, institution, whoever, will be doing, where you're essentially just protecting your capital. So it's kind of the same in that manner of having the stop here, but it just allows you to enter that trade, wait, see what happens, and it gives you a further decision process rather than getting closed out through here, then deciding to impulsively, say you pick up through here and then you're like, oh, now it's coming down, I want to re-enter here, and you get short, it goes down a bit, but then it comes right up. You then end up losing more, you get the commission costs, everything else. So that's why you can enter that. Now sit on it, you know you've got like a blanket trade, this is your max loss, and then you can decide. You can wait to see how other markets actually form themselves, how a Trump tweet digests in the rest of the market, and then decide where you want to actually maneuver overall. But I've never had problems when you're doing it in like sincerely, in good faith, and you actually have like a structure and a logic to why you do it and how you do it, then it won't be a problem. I've never even been pulled up on it, but if you did have to get pulled up on it, I could explain the entire logic and reasoning behind it.
Something to mention about that though is LJ's referring to CFDs. Because
Correct.
if you're going to look at futures, you're not allowed to do hedging at all, not within the same account and not across different accounts either. And I know that there are some firms that also cap you on correlated assets. Like for argument's sake, you can't go S&P long and NASDAQ short. Not within the same account, not across different accounts, because theoretically they are more correlated than they are not correlated, as an example. So the best thing would be is if you're going to be doing something like this, where you're going to do hedging or maybe considering dollar averaging into a trade or whatnot, go and read the T's and C's of the prop firm that you're trading with to make sure that you get the right information from the get-go. With CFD, generally not an issue to do hedging on with the 5ers, with CFD, hedging is not a problem within the same account. So if I have a 100K high stakes account and I'm taking a buy and it's starting to go against me, I take a sell in with it as well to try and compensate for that, price going to drawdown. That is fine. But if I've got 200K accounts and the one I'm taking a buy on NASDAQ and the other one I'm taking a sell, no, that is going to get you pretty much, it's going to get your account killed like very, very quickly. Because that is, like LJ said, it's gamifying. It's you're gambling. The one is going to be a winner. The other one is going to be a loser more often than not. I mean, sometimes it's bad. Both of them end up being losers, where the one goes down, knocks you out, and then goes in the opposite direction, knocks you out as well. So don't do that. It's just silly.
Correct. And you can be trading like long euro, short pound dollar, right? Long euro dollar, short pound dollar, on like a secondary cross analysis. So for instance, when euro pound is driving higher, often you'll see euro dollar perform better and pound dollar drop off when there's not much dollar induced activity. But if you're going to do that, you need to have that reasoning. You need to have the structure, everything else of why you actually took that trade from, say, the euro pound in the first place. If you don't have that, you're going to be clapped up. So the main thing is just so long as you've got an actual like structure, a reasoning, a logic, a bunch of thinking and forethought as to why you did this, not just I want to hedge this out and try gamify, just like Rich was saying, then you'll be okay. If you don't have that, then you can get swept up, right? So whenever you take this, just have some kind of, calculus, forethought, that kind of thing, and be prepared, because you probably will have to present it if you're a bit too aggressive. And if you are being too aggressive and being disingenuous, and you're trying to then, after the fact, try and do something like this, you will get caught out, because
even more so.
obviously the team's not like, they're not silly. Like, these are very smart people. They know everything fully in depth. They're covering all this stuff for the entire firm. They're going to catch you out, right? So, bad idea to try and think you can fool someone. It's not going to work. Right.
One thing I did want to say with that question that you had earlier, Bui, was like, when is the right, or when do you think is the right time to move a stop loss? In my case, I'm very much a mechanical trader. So for me, the idea of moving a stop loss is like creating that scenario. Yeah, it's creating that scenario where I'm no longer allowing the mechanicalness of my trading to play out. And I'm becoming a little bit more of a discretionary trader. However, if moving your stop loss is a part of the mechanical nature of your trading, then I would say that is 100% fine as a mechanical trader. So in the case of my trading, because I have the multiple take profit points and I have back tested exactly the expectancy within a margin of error of when I'm supposed to go to break even, moving my stop loss after a certain take profit has been hit. To me, that is sticking to the mechanical nature of my trading. It's sticking to the back testing of my trading and so on and so forth. So the short answer would be, if your strategy dictates that you should be moving your stop loss. That is the short answer. Obviously, it's way more nuanced. There's a lot of like flows and ebbs that LJ was referring to. It depends very much on what you're trying to achieve, what kind of trader you are. If, let's say, hypothetically, you are a swing trader and you decide every time we have a specific swing point, we have to have broken structure or change of character or whatever, and then whenever we have a break of structure, then I'll move my stop loss to that point. That you can't just willy-nilly go ahead and do that. You can't just say, oh, I have this feeling, let me move it to this point. Because you're making a decision blindly without that information having been tested. So that's what I would say. That is how I would approach that specific thing.
Okay.
Yeah, I just to find it, hence the exact same point. Like I was saying before, it very much depends on your priors, right? So if you got a very mechanical structure, like I highlighted to begin with, like Rich was saying, that can completely deviate. You'll just ruin your stats altogether. Sometimes that can end up positive. Sometimes it can be massively negative. Most times it's more massively negative than it is beneficial, right? So that's the trouble. And hence, as well, I was trying to highlight with how I approach the market, which is very contextual, it's macro, that kind of thing. It changes on a dime, but I'm constantly iterating and updating that standpoint, and it shifts. It doesn't stay static, it's constantly moving. So I constantly reiterate that. And even if I shift a stop, I might then shift again lower, or vice versa, or just jump out of the trade altogether. Even if I'm in profit, I might go, okay, I'm in profit, and I'm jumping out of the trade before TP, right? That's the same kind of thing as shifting your stop loss. I'm jumping out early. I've just essentially made my stop loss into TP, right? Because of some kind of market change or a tweet or something else. So it's much more dynamic. So it depends if you're that kind of dynamic macro type trader or more formally mechanical type trader, which obviously I do a bit of both, so they blend into each other, and it depends on what time frame, that kind of thing. But yeah,
I mean, I don't allow my mechanical strategy to be deviated from. What I will do is I will look for a way in which I can have more discretion within my trading if I'm looking to potentially add on to a trade as an example. Something that I don't generally do, but I can see when I'm trading futures that the idea of dollar cost averaging a trade makes a lot of sense. Your initial risk, let's say you're going with one contract, your initial risk is minimum. Let's say $100 for an example, when normally I would go $400 on a trade trying to make $1,000. So I'll go in with one contract, and then I'll see how price is developing. And then I'll decide, okay, maybe I can enter another one contract to try and capture a little bit more of the move. And the thing is, it's not to say that I'm going to completely deviate from my normal strategy. This is like a test it and see where it goes. Same principle, same analysis, but your trade entry is slightly different. So instead of going the full risk all at one go, I see how it moves a little bit lower, maybe get in at a slightly higher point with another two contracts as an example, and then see which one of those nets the best result over the space of a week as an example. So in this case, you shouldn't be deviating from your strategy. And if you're going to be deviating, you better make sure that deviation has been tested. So caveat, as always. So that little asterisk added to it. Like this one that I'm doing right now, I'm testing something that I'm going to be utilizing when talking to my wife about her trading and how she's going to be going forward. So I need that evidence on MetaTrader to show how it works. So this is why I'm doing this. And I'm doing it I've taken this trade on almost all of my accounts except the futures account, because I'm only trading the futures account in the New York session. But you'll notice down here that I have 4 accounts open down here, of which 2 of them is the test accounts. That 20K and 5K, 20K and 10K test accounts that we have, that we use on the stream. So that I have that evidence available on hand and say, look, if you're going to be doing this, this is kind of like what you're looking for and why you're looking for this. It's like tangential evidence.
Yeah, I think the only other thing that people trading mechanically get wrong, but get swept up by is when the market regime shifts, which is something Dirk and I have talked about a million times, and Dirk keeps saying that anyone can figure out a fair algorithm or some kind of calculation that can front run a market regime shift. They'll get a Nobel Prize, right? It's obviously very hard, but it does happen constantly. So the only trouble with a mechanical strat, if you do get a firm shift in markets, which tends to come from macro, then the ATR either might be extended and the ATR is now condensed, and you're still trading on that extended measure, and your profits and your approach is going to suffer. Your strat is going to suffer, or it expands beyond what you expected, and it's also going to suffer, right? You're going to get stopped out more often, whilst the market goes down further, but then does recover and even recovers further than your original TP, and you're going to suffer. So that's where, even if you're doing mechanical, you do have to have some kind of general knowledge of like the data, the Fed, whatever's coming out, and try and anticipate that going forward. You don't have to have an extensive macro breakdown in some big bloviated full deep analysis type situation, but you do have to have a general idea of the forecasting, not just the nowcasting of today, tomorrow, the next day. Do that today, tomorrow, the next day, the week, and then the week after, and going forward with a bit of macro. If you can do that, I always see that will often completely flip people's mechanical or completely technical approach, where they hate macro, they hate fundamental, they hate all that kind of stuff, but just having a dab of knowing where the most likely trajectory is, if it's slightly more up than slightly more down, and if there's a slightly condensing period coming forward or an expanding period coming forward. That can completely change your entire profit profile, especially over a year. You know, so same thing, like we're coming into European summer right now. Most people think stuff will continue. You know, the pip movement on FX tends to compress, and they're looking for larger movements, and it just doesn't happen. And they go like, oh, this sucks every day. Or the same with Trump, where people are trading in amongst Trump and like, I'm getting blown out. Like, but if you took that into the factor, you'd be able to trade around that. So that's that next evolution, that next tier. You don't have to get super in depth, but just enough to add a touch to your mechanical, more technical trading.
I mean, obviously, you're always trying to optimize what it is that you're doing. But there is a thing where, or there comes a point where the time spent trying to optimize is not the optimal thing to do. Yeah. So there comes a point where you need to turn around and say, you know what, this is as good as I can get it without needing to spend more time on it. Because now the time input is now not going to be worth it anymore, because it's going to be a 0.017 expectancy better. But it's all relative. It's all like within like that time frame that you were testing this stuff and all that kind of stuff. There's just going to come a point where you have to say, this is enough. Like, I don't need to adjust anything more. But then at the same time, you also need to be the kind of person knowing that when we're getting to these summer months, you're going to have to adapt. You're going to have to adjust from, let's say, the winter cycle, quote unquote cycle, and how you were trading then. Like, going into the summer months, I don't expect my 1 to 4 strategy to net necessarily TP4 as often. It might only be TP3. So I'm busy testing a 3 take profit with 0.33, 0.33 and 0.34% of the position being taken off. Still a 1-to-1 for TP1, a 1-to-2 for TP2, and a 1-to-3. So if all of them are hit, I would still have a 2R trade with break even after TP2 as an example. So I'm busy testing that as well. It's taking a bit of time because from our winter months is the summer months for the UK and whatnot, you know, for the Northern Hemisphere. And I haven't quite found the exact time where I should start taking the notes, basically. When I should start
this week.
No, I mean, like,
it's literally
the previous years, like last year before.
Oh, okay.
Yeah, that's what I mean. So my back testing on that one right now is just like, okay, it's a little. I need to go get a start point and an end point. So just I haven't quite got all of the data just yet.
I will say that in general, like the European summer basically kicks off this week. It depends on what year. Like you get different data points falling in a different segment depending on leap years and that kind of stuff. But we'll probably have a majority active week this week and next week, obviously because of the Fed and earnings this week, and then next week non-farm payroll. We'll have the layover from the earnings and the Fed next week. But basically European summer really kicks in now, and then we go, you know, towards the end of August and first or second week of September. It's like plus minus depending on the broader economic climate. So definitely from this week to next week is probably the best point to actually get some graft. After that, I would expect things to slow right down. Even next week before non-farm payroll, I think it should be a slower week than what we get this week overall, which I always hate this period. I think for most traders, we were talking about it on Friday last week in the Discord. For most traders, this European summer period is always the worst period of the year. Just not too active. It's a bunch of rebalancing and that kind of thing. The popular trades, like I've said before, that were running tend to come off the boil a little bit just because people deleverage. And then at the same time, people are seeing that deleveraging, things pull back. They want to buy in, so you get this back and forth, but it's on very low volume. And then when you do have things like headlines, that can also propel things further because there is low volume on that same measure. So yeah, this next 6 weeks, call it, is definitely the higher risk zone that we have in general most years. Some years you get a very nice momentum trade when it's a bit more chill, but we're definitely not so chill at this current point in time overall. So
I do want to just say this. My initial entry, this trade over here has hit TP2. Stop loss has moved to break even on the initial trade. So this one right now is a risk-free trade. The second trade that I have entered, it went about halfway in, but I didn't close it. So this one is still currently running. I'm hoping to see this one hit 1 to 2. Then this will be a 1% winner. This one currently, the first trade is a 0.75% winner right now. Well, 0.75 of the original risk, which was 0.5%, so it's 0.375%. So second one currently still running. We'll see how that one turns out. First one risk-free, already locked up 0.375%. If both of these were to go to stop loss now, I would be down 0.125%, which is nothing in the grand scheme of things. So
Yeah.
not too.
Yeah,
not
I jumped
too
out
bothered by it.
where your TP2 was. I got out fully for now.
Yeah. So this one I didn't enter on that candle. I entered on that candle. So on this closure, on the closure of this bearish candle over here. So drop, base, and then a drop candle on the closure of that candle. So the very next candle is where I entered. Went a bit into drawdown. I drew my stop loss just above that area. I didn't expect the price to get to that point. And then from there on, as we started going down, I just moved it back to over there. It's slightly less than where it is here. It's still 1 to 2, like that.
Yeah, we
So
just
they're
got
not
durable
exactly-
goods as well.
Oh, we had news.
Yeah, but I mean, did we really expect durable goods to have like a massive impact?
It was
Yeah.
it was minus 2.2%, but you've got a bunch of conflation with the actual numbers right now. So
Yeah, that was 2 minutes ago.
So do you focus also on orange folder, yellow folder news? For me, I've just got my Forex factory set to red folder only, and that's it.
Orange folder
yeah,
as well.
definitely. Yeah, definitely orange, because orange, it depends. Orange are often the subcomponents that make up the red folder, which are actually often more important because that's like the details, the nitty gritty of the headline number. Like the red folder is often just like the base number, and then it depends on the breakdown. So it depends what breakdown you get between that makes up the headline number. And then there's also some low impact numbers, like when you get the forecasting for the future PMI or whatever, that will print as like a low impact, but that has more impact than the actual final number that comes out like a week or two later. Right? So it's one of those things that you have to learn over time which ones are important, which ones are not, because some will show up on a typical financial calendar as low impact, but they're actually high impact and potentially more high impact than the actual high impact PMI later on, because that's the forecasting to that number later on. So we had that last week with the PMIs, I think, as well.
Yeah.
And do you have your own personal cheat sheet for what those yellow/orange folder important news might be? That you could, share?
I put it together like gradually weekly of whatever's important, what's the certain talking point that week, and whatever's been going on in the general economic sphere, and try and coagulate my own picture. I take inference data plus things from like Twitter, sentiment from Bloomberg, that kind of stuff, see where other economists and that kind of thing is, read like reports from JP Morgan, Goldman Sachs, Citibank, whoever, And then I try and deduce that to where I see things are. I read their data and go like, is this really being calculated appropriately, or have they taken certain aberrations and put it in the, bloviating a bit. And then just one of the big things is often, for lack of a better term, which it sounds very arbitrary and very rubbish, but like vibe sentiment, type thing, where you can see either prices of things are actually going up in real time. And I then do take data, not just, where I live, but across the globe, calculate that all together. And are we actually seeing that? Is it taking impact? Yes, prices have gone up, but has it then decreased spending? And then so that spending aspect, I'll go to like stocks and companies and look at their revenue and that kind of thing coming through and try and aggregate all this all together. And look at like auto loans, bank loans, like all this kind of arbitrary data all pieced together that I do this like running situation and formulate my own opinion, as well as piggybacking off like bank reports, hedge fund reports, that kind of stuff all at the same time. And then at the end of the day, make my own decision. So it's a big, long process, but it's not so long because it's very ongoing. It's like a constant updating system that updates every day, which is why I struggle to tell people where to go. Just do this and you'll know it. It's a constant updating system that every single day gets a new input. Yeah. I don't like going to the gym every day. It just gradually grows and you build that wealth of knowledge, and your brain, you build more connections. You also build up the history where you can then think back to the relation between this and that and that and that, and you get that perspective.
So just another thing to add on to what LJ was saying, when you're looking at red folder news as an example, it also depends on where you're getting that information from. Right now, I'm going to give you a very good example. Right now, Forex Factory this morning with the German IFO business climate was a yellow folder. But if you go to Financial Juice, it was indicating that it was going to probably be a higher impact news event. So it's not to say the one is right, the other one is wrong. It's the idea that different sources are going to kind of scale differently. They're going to put more emphasis on one or two events rather than a different one, as an example. So you as a trader, your job is not just to look at this and say, oh, it's a red folder, let me stay out. It is your job to say, okay, it's a red folder here. Forex Factory is saying it's a yellow folder. Well, it's euro that is impacted. Let me go and see how euro was impacted during that specific time. Okay, I come and have a look here. So that's the time it came out, was on this candle. But pre-running that candle, pre-running that news event, you started seeing quite a bit of volume. It's like, okay, so how big of a movement was this? Well, that was almost 7 pips worth of movement just pre the news. When the news came out, we went into a lull. So the lull itself lasted for, let's say, up until there. So 40 minutes or so where we just didn't have anything. So pre-running that news event was higher impact than the after effect for 40 minutes after the news event itself. Is it to say that Forex Factory got it right and Financial Juice got it wrong? No, it's just the way that they were calculating how volatile said movement was going to be was maybe done a little bit differently.
Yeah, it depends on internal calculations, that kind of thing. Same deal when we get like unemployment claims. They often go from high impact to medium impact, sometimes to low impact, right? Depending on what period we're in. And a bunch of these other indicators, it takes some time for them to migrate to that higher inference point, where they might be medium before, but they've been running as high impact for quite some time. And then Forex Factory, I gotta say, often a little bit behind with some of this stuff. That's the only thing. Still reliable, definitely, but some of the stuff, it gets a bit off. So you gotta take into account the context, look at the past inferences, what actually happened in the market, just like Rich was saying, and see if this is actually impacting things. Because for a long time, like for instance, like inflation was just like a misnomer. No one cared, right? Now inflation is massive, you know? So it shifts from high impact to low impact to medium, back and forth, overall.
Yeah. I just wanted to answer this question from Usam. Usam saying, Rich, is this now a 8 micro trade since you added in, or was it at smaller? I did not take this one on the futures account at all. I only took it on my CFDs. The initial trade, the first one, this one over here, was a 0.5% risk initially. It is now risk-free. And then the second trade that I took was also 0.5% risk as well. So this one currently at break even. The second one obviously had already taken profit. So still in profit, obviously, about 0.25% of the initial risk. Even though I'm currently risk-free on that trade, but not looking all too good. This downward push that we had here did not really have any sort of legs on it to continue pushing lower. So we're getting closer now to that New York Open, which is over here. Getting a little bit closer, so 45 minutes or so. I'm expecting to see a little bit of a lull, maybe a bit of a pullback up to maybe the stop loss wick me out and then potentially go lower. We'll have to wait and see.
I would say, because you're already in profit per se, right?
Which one, on the second or the first?
So what? Okay, well, run me through it. So the first one, your net, correct?
So the first one, I'm up 0.375% account balance.
Okay.
So TP2 already hit. So if this goes back to break even or hit break even, then it's over. Where it's currently at is, if I were to close this one right now, it would be 0.5% across the two trades.
Okay, and so the second one obviously is just flat, right?
Yeah,
so
it's just
if
at
they
break-even,
both hit stop right now, where would you be?
I would be 0.125% down across the two trades.
Would you consider closing the second one right now for a very small profit, basically having a limit order where the stop is for New York Open on the second trade, keep the first trade open, right?
Yeah, the first trade's going to stay open regardless. The second one, I am considering closing it, but
I would do that. That's what I'm looking for. It's up to you, but that's why I closed out earlier. I'm looking for that slight tick up and then to go short. But it's up to you. Like, you do your own thing, but you're already in a good spot. And I think that's like a fair idea. If it doesn't pan out, you've got the first trade still running on, and you still get that cleanup.
it's closed.
Right?
Closed it there.
Hello,
Basically
guys.
no problem.
How are you?
Go.
Hey,
Samir,
What
how
is
we
up?
doing,
What
bro?
is up?
what's up?
I'm amazing. What about you
bro.
guys? All right.
I'm definitely amazing as well.
I'm
That's
pretty
awesome.
amazing.
What about Rich? Rich didn't respond it.
I'm good. I was waiting for all of these other two Muppets to respond to you first, so that I could
You're just
respond.
good.
You know? Leave
You're
the
just good.
best
Yeah,
to
amazing.
last. Yeah, leave
Amazing,
the best
bro.
to last. No, I'm just good. Because we still don't have water, and we just got an update saying that it's probably not going to be anytime soon. So I'm actually a little bit annoyed that
bit
I'm gonna have to sit with my swamp ass without water for another few days. So no, Samir, I'm joking. I'm good, mate. I'm all gravy, baby.
All right, that's awesome. So I can see some trades running. Are you in this trade? Shorts, NASDAQ, NAS 100.
Yes.
All right.
First trade already took TP2, so the first one's stop losses at break even. The secondary trade I just closed now for break even. So I should actually have closed it somewhere over there. That would have been. My wife just sent a message. I can't say this on stream. Anyway. Yeah, so this one closed for break even. I was not testing, but I was trying to gather evidence.
Okay.
Because Samir, you were not here earlier. Basically, what I'm doing is I am going to teach my wife how to trade from being an absolute don't know anything about trading, going through the 5ers performance coach course, taking her through all of the webinars that Will has got, and then have her pay attention to what we're doing on the live stream, and then also eventually get to a point where she is going to be comfortable enough to take her own trades. So then get a 5ers account for her. She's going to pay for it herself, obviously, out of my pocket. And then and then she's going to then eventually see if she can become a trader. The idea that I had now was to kind of like gather evidence to show how you would, for argument's sake, enter a trade and then adjust the stop loss and that kind of like stuff, and show that sometimes it's not the best course of action. So closing the trade at break even is kind of like that. Look, this is what happened. We started failing out over here. Here's the evidence, and then this is what it actually looks like on MetaTrader as an example. So. Wesley saying, Rich, you should document that process. It would be sick to see. I was thinking about doing this like in video format, but there's this little caveat where I don't want to go and videotape her going through the performance course or her watching Will's information. So it will basically be like these little gaps where, okay, she's just passed through the content of this webinar. What was her thoughts? What did she learn from that? And then move on to the next one. So you'll have like these segmental
post-match interview.
Yeah.
To a degree, yeah, like a post information ingress into the brain. What did you think of it? What did you take out of it? Because she's never taken a trade in her life. She is she's a creative person, like 100%. So everything that she does is creativity-wise. I mean, she drew this koi over here. It's part of her art that she does. And we have a bunch of her artwork around the house and stuff like that. This animated one over here of Tengen Uzui from Demon Slayer is her drawing as well. So I want to see if a person can completely, having no prior training in trading, can become a profitable trader first and foremost, but at the same time also be the difference between somebody that needs to trade for a living versus someone that doesn't need to trade for a living. They can have it as a side thing, as that kind of like stuff, and see what kind of emotional roller coasters it might cause. And then on top of that, I also kind of want to see how good I am as a mentor as well. So it's a little bit for me, for her, for the whole process. So yeah.
I'll see if I can try to convince my partner to do it. I think there's like probably a 5 to 10% chance.
Yeah, how did that process come about? Was
I don't know how it will impact.
Richard, or was it your wife who came to you and said, "I want to learn how to trade," or did you say, "Hey, wife, beautiful person, do you want to learn how to trade?" How did that conversation come about?
I don't think that there was any like specific I want, she wants kind of like discussion. I think we were just talking on a normal day just about trading in general because, just like throwing stuff into the air. And then I think at one point she mentioned how cool would it be if we did like a series of how you taught me how to trade. And I think initially in the beginning we were both like, yeah, that could be cool, but then it kind of like stagnated there. And then the other day we were talking about it as we were going on our little holiday, and we were talking about it again, and she was like, I would be keen if you wanted to teach me how to trade. And I was like, yeah, let's do it. Let's get this process rolling. So, that's... I don't think at any point we were like, this is something that has to be done, or like, this is what we're going to do. This is. I've been like mulling over in my mind what was going to be the process. That's why I said I'm definitely going to add the webinars. I'm definitely adding the performance coach stuff from Rich, because this is all. It's like the ultimate test to see if a novice can pick up this information as it's designed to. Like
I
you've got
think
all of
we've
these
got
people in Discord that has the information saying, oh, they've tried this, this is the outcome, this is the outcome. But generally those are people that have already done some sort of trading in their past, and they're trying to right certain wrongs, or they're trying to change certain habits that they had within trading. My wife is walking into this with like clear vision. She's got no background in trading whatsoever.
yeah.
Because I think it would be interesting, not only from your wife's side, vlog on, I'm learning how to trade from scratch as a beginner, but from your side on, hey, I'm teaching my wife, taking my wife through this process. Because I imagine there's loads of people who want to get their friends, family into trading. They want to know, hey, maybe there's some do's, maybe there's some don'ts that you learn along the process. Don't force her to learn a particular strategy. Let her gravitate to wherever she likes, or do send her to the 5ers courses, which I'm not sure. Where can you find them again? Is there a specific spot you can see the courses that you were
Boo,
mentioning?
my friend. Are you the king of segues, aren't you? You
He
can
is,
head
dude, he
over
is.
to the5ers.com. Link in the description box below. Boo, you're a natural, mate.
He is, dude. He is. He's better than me. Jesus. Maybe I've been doing it too long that I've just degraded at this point already.
It's like for us. It's like, yeah, we're mentioning it yet again because we mention it every day, and Boo
Yeah.
is just like, you know what would be the perfect segue? And then he's just on a platter. Here,
Yeah.
go with this. Don't you want to mention the merch? There you go. Here's the merch.
Yeah.
Yeah, link in the
say-
description box below, guys. You can get yourself there. Summer promotion currently running on the futures as well as on the CFD side. Get yourself one of our soon to be no longer a thing accounts because we have a end of August basically where we're not
End of
going to have
August.
them anymore.
Yeah.
So there's a timeline associated with it. So go and get yourself one of those accounts, discounted, and also the literal cheapest 100K account you can get in the industry, in the prop firm industry, $149. Cheap.
It is.
Until the end
It
of
is
August.
very nice. Yeah. Yeah, find that selection. You got till the end of August. You do have some time, but definitely pick it up. What I was going to say, Rich, I feel like we've got a Funded Freedom episode in here somewhere with you, your partner, Will, his partner, and if I can convince my partner to try as well, which might
and
also
your
be a good bit of entertainment because that's going to be the very difficult one.
And Buyu and his partner.
My partner
dude, we
non-existent at the
definitely-
moment.
Your partner's non-existent at the moment.
Non-existent at the moment.
Are we saying that
You haven't-
we're also going to play the dating game with Buyu?
Buyu
Eligible
just-
bachelor behind door number
Yeah.
1. Tell us, what do you do for a living?
Just get an anime waifu, body doll.
Wifey pillow, yeah.
Yeah, they just come with you on the, like on the plane, like, oh yeah, you're like moving.
If you're an eligible bachelorette in the London area, please reach out to Buyu at the 5ers. Set up a romantic evening of trading by candlelight.
Who's man? You saw his profits before. He's a wealthy man. He's very
Candles and
desirable,
candlesticks.
very beautiful.
Candles and
This man.
candlesticks, yeah.
Has some broad shoulders, a good jaw. Like
His knees are not that great.
There we go.
But
Yeah. Have you seen this guy's elbows? Like,
but he's a dancer extraordinaire. Salsa, cha-cha-cha, and the rumba. Anyway, let's get back to the trading.
Yeah, we will.
Samir, my friend, what have you been looking at?
I was just seeing the charts. It is the fresh look I'm giving to the charts. I just got back from the gym, so let's see what kind of opportunities we have. Gold is still kind of ranging on the daily time frame. We don't have any clear trend. Definitely, if we see this leg, we are trending to the downside. So maybe there can be another leg to the downside. So yeah, I'm not too interested in gold. Let's take a look at NAS. I was looking at the weekly handle. The last weekly candle is really good. We have a huge bearish momentum. So can we continue this? Maybe it is making a wick to the upside and continuation to the downside, at least to some kind of retracement area. Let's see what kind of retracement area. Okay, maybe this 30% or it is like 38% retracement area. Can we tap this area? I'm just gonna leave this like this. This is the Fibonacci area. So let's go to the lower time frame and see what this can do. I'm just gonna draw some levels. Okay, we have this as a support area. Seems like we are reacting from it. Let me see. Yeah, we are close to that area. So I'm gonna draw this also because this from here we had a good reaction. So let's go to the 4-hour time frame. 4-hour, I can see this type of trend line. So I do think we can tap this area and we can continue that weekly candle momentum to the downside. So this is point number 1. But if we break this area, I think we can get the momentum to the upside, something like this. I think this is the last area where it should print the lower high in this case, as we are having some lower lows and lower highs. So let's go to the 1-hour time frame. What we can do in today's NYSE session, I'm just gonna leave this 200 EMA on. Okay, so this is also seems like some kind of liquidity area where we have many rejections. So definitely we can see a false move to the upside and then break back in. That can be the entry point here to maybe fill this gap that we have today. So definitely shorts are looking good, and this gap also can be filled maybe today or tomorrow. And 200 EMA is also there on the 30-minute time frame. Can we tap this 200 EMA and this daily level and reject? I think that can be a solid trade idea here. Can be, shorting trade idea, something like this. Couple of points, probably like 120, 140 point stop loss for this gap fill trade. So that can be 1 to 2. So this trade idea seems very...
What is that level's pricing? 28.
It is around
28.
666, something like that. I'm using this Oenda chart, so your level can be different. So if I just draw the level, it is around this daily level.
Yeah.
Probably
I just wanted to
this kind of...
see how close
29.40
mine was.
on futures. Rich, 29.40 on futures.
Close to that.
29.40.
I think we can go at least here, and then we can...
28.940.
Yeah. So I was on the point. I think we can just have a little pullback and we can continue that strong trend which we are having. It is a very good trend on the daily time frame. I think on the weekly also, yeah. So definitely looking one more leg to the downside and then continuation to the upside. But for that, we need some kind of structure shift. But I'm just relying on the 1-hour and 4-hour leg to the downside. Some kind of impulses correction. I think one impulse, and then maybe it can shift a market structure, then go higher. That is a different story. But today, shorts are looking good. But what if we fill the gap first and reject it from maybe this kind of area? I think then the bias can shift. I will look for longs around this area to at least that 200 EMA. So these two trade ideas are making sense. I'm just gonna delete everything. I was looking to delete this. Okay, I'm just gonna delete this. Yeah, these two trade ideas look solid to me. Maybe rejection from here, this, some kind of gap, and continuation to the upside. But if price decided to go higher, I don't mind shorting from here. So again, I will not enter immediately. I will just wait for some kind of rejections. Maybe 5-minute pattern can be a rising wedge, falling wedge, head and shoulder. These kind of patterns that can make me, confident about taking a trade around these areas. So NAS looking cleaner today. Actually, for this week, it is looking good. Even if I can catch 2 good trades this week, I think that will be a successful week for me. So I will just wait patiently for the good setup. Areas are good, but that doesn't mean that I will just have a good entry here. I need a good entry scenario. For me, what is good entry scenario? For example, it taps here, some kind of squeeze, or maybe even a head and shoulder. That can be a good kind of trade here. Okay, let's talk about US30. US30 is already going higher. All right. Daily time frame, we are having so much impulsiveness on the daily time frame. I think this can be the resistance that I would like to mark on the daily time frame. Going to the 4-hour, I have this 4-hour area. Can we react from here in the NYSE time frame? Maybe we can catch a pullback, and then of course we can continue with this trend. So as a trader, I don't mind catching that pullback also, but let's see on the 30-minute what we are trying to do. Yeah, we are away from the 200 EMA. 15-minute, yeah, we are away. I would like to take shots around these areas, either this or this. At least I want to catch the pullback on US30. As we are going higher, I think I will wait for this area to get tapped. Let's see if I have any other confluence, maybe some kind of trend line. This is already broken, so it is not valid. Yeah, I can only rely on this horizontal level. Do we have any supply area here? Let's go to the 4-hour. Okay, we do have this some kind of order block here, which was tapped. I think price is already trading around that area. No, it is very close to that area. So yes, this area I will be eyeing on sells at least to that 200 EMA. So I will be playing a reversal trade on US30 today. One push higher, little bit of rejection. I don't mind shorting it. This trade idea is giving me a little bit more confidence because I have experience in trading these kind of setups where according to 200 EMA, market is overextended, but that doesn't mean it can not go more higher. It can of course go higher. The only way I can enter in the market is giving me some kind of pattern on the 5-minute, even on the 1-minute, that's still fine. We're already losing the momentum. So more loss of the momentum. I think this trend line breakout or maybe some kind of this trend line, I can enter a trade something like this, but I can put my stop loss above this level and I can go for 1-to-1. This trade idea is also good. I'm just gonna rely on this trade idea for now. But if we impulse to the downside, tapped this area, then of course I'll be eyeing on buys on US30. So US30 is a little bit cleaner actually, I think. NAS is good, but we have some kind of, ugliness going here. So I don't know if this is gonna create a liquidity or a real breakout and then continuation to the upside. As I have traded these type of setups as I mentioned before, so my confidence level is a little bit more on US30. So I will rely on US30 today. Selling idea can be around here or here. Actually, we are already here, so let me delete this area. I'm just gonna keep one line if we. Yeah.
Rahul, I just want to mention, yes, there was a little bit of news. It's from the Swiss National Bank saying it expects to keep the interest rate at zero. So if you go to the dollar Swiss, you'll see we've had this little bit of a push up right now. And then if you go to the DXY as well, the DXY had a little bit of a attempt to push up a little bit. Nothing super crazy. So yeah, definitely this, like LJ was mentioning, like there's nowhere are we even nowhere are we even talking about frank news whatsoever, and then they just say, look, we're expecting to keep it where it is right now, and the market is reacting to it. So
that's what I said to Dirk, saying basically scrap the dollar yen shorts and just go long anything against the franc. Perfect, right? Like much cleaner trade, much safer, much more predictable, that kind of thing, and it will get that double bubble effect when the dollar yen does eventually come off. So I've now flipped to franc cross trades instead of the dollar yen overall, because dollar yen has been very painful. It will get there, but the time is very hard. You can go back and forth, have some massive profits, have some drawdowns, that kind of thing, yada yada. I'll let you guys.
So let's see what.
Yeah. So Rahul, when you're saying you thought Trump said something, here's a little information. If Trump is going to tweet something, it's not just going to be one pair that's going to be affected. Like let's say the Swiss or the Swiss connected, you're going to see dollar, pound, gold, everything, oil. All of them are going in some way, shape, or form going to be reacting as well. I did want to say this thing tomorrow for everybody that's in chat right now. Tomorrow we're going to have our 1v1 battle one in the morning against Pedro and one in the afternoon against Griff. So how it's going to work is tomorrow I am going to send out a Google form that you need to fill in. It's going to be your stream name, like your YouTube name. Like in this case, we have got Rahul. So Rahul will put his name as Rahul Sharma 9716, and then just underneath that, just the email that he used to register with the 5ers. And then what's going to happen is we're going to use that information to select somebody on stream to come and join to battle against Pedro or to battle against Griff. Okay, and we're going to do these 1v1s twice a month, every second week. So bi-monthly, basically. All right, so you need to beat the pro. So it's going to be different people that you're going to go up against. Sometimes it's going to be Buyu, maybe Samir, LJ, Will, myself. It's going to be predetermined. We'll know who it is, but you might not know. You'll know on the day. We'll also just not know who it is that we're going up against on the day either. So it's just as bad for us. But if you do beat the pro, then you will win yourself one of our summer accounts, 100K, 10%, 5%, which is a $149 account. You get to win one of them.
That's a big account.
Yeah, that's a lot of
good.
buying power. It's a
Yeah.
lot of buying power on that. So you need to be there tomorrow. So it's only going to be for everybody that's in chat tomorrow. So if you're not in chat tomorrow and you're not there, you can't expect to be chosen for the competition. All right. So do keep your eyes out for that that form, that Google form. It's going to be released tomorrow morning with my first segment along with Will. So at the start of the stream. And then the very first competitor is going to go up against Pedro at 9 GMT. All right. So the stream opens up at 8. You have 1 hour to get all of your everybody in for that one. The first one's going to be at 9 GMT, and then the second one is going to be at 11 GMT. All right. So 2 competitions, 2 people up against 2 streamers, 2 pros, and then you can win an account. If you guys like that, we'll keep on doing it more often.
On that same topic, Rich, we did have questions earlier with myself and Dirk with the 110K giveaway. And also, when is trivia coming back? Add the 2.
So trivia would be the week between the 1v1s. So we still need to see which days. We're looking for a day that's a little bit quieter. You know, that doesn't really have that bunch of volatility. Or let's say hypothetically we have a day where we have a bunch of news in the afternoon and the morning is just kind of like quiet. So we're going to be looking for a day like that to do trivia.
So it's probably more likely not a week after, it's within the 2 weeks after, whenever it's poignant, given the market conditions.
Yes,
right? But
given market conditions, we'll just on the day say, yeah.
In between the 1v1s. It'll be someday within the 1v1s. So if you guys turn up, it will be someday within that, depending on the market calendar, events, Trump, that kind of stuff that is going on. And you guys can jump in. Now, the only other one is the 110K.
So the 110K one, because I was on holiday and my manager was also on holiday this week, we're going to be planning that one very soon, now that everybody is back in office. Obviously the summer plan stuff and whatnot takes precedence. And then there's add-on stuff going on to the summer plan as well, some booster things, which hasn't yet been released, but that's going to take the majority of the the celebrations, and then we will definitely have a day to do a 110K giveaway. So yeah, but the thing is, you guys need to be subscribed. You need to have liked the stream, and you need to rock up every day.
Yeah.
That's awesome.
That's how
Actually,
you find out, because it will be offset. Like, we don't even know the exact days ourselves, so it would be on the fly per se. We do have a general structure, but it will be as it goes for some portions. So as long as you guys are here every day, you'll find out. You'll be here. You can jump in. Beautiful. So
yeah. Samir, you were saying, sir.
I was saying, like, this summer plan was really unexpected, and as it is the 10th year anniversary, So every month we are dropping like bigger bangers. I was really unaware about this thing, but as it came, I was heavily promoting this thing because the deal it is so good. So I think, I don't know, maybe next month we're gonna have more bigger banger. I don't know, because every month we are leveling up.
I almost forgot that we were still in the 10-year anniversary thing, because
Yeah,
every
we're
month
doing-
there's something that is like hype. It's like a
To
next
the full
hype
end
thing.
of the year.
Yeah.
And I forgot it's just like we're gonna keep on doing this until February next year, 2027. Every month we're going to have something, either a giveaway or reduced accounts or competitions. Or every month is literally going to have something. I mean, we had the release of the performance course, we had the Traders World Cup, we had the 10-year anniversary giveaway.
Community
Like
month.
We had community month. We're probably going to have another community month or another community-based event.
Which will be leveled up from the previous one as well.
Yeah.
Now that we've...
Now
yeah.
you've got the summer accounts. It's Samir, what do you think of the summer accounts itself?
I think the way I look at my journey, I was that kind of guy who was, I was having nothing basically to my name. So every percent that I was making on the account, that was really very crucial for me. So me coming from that background, I think I was aiming for only 1 to 2%, and we already have that thing set up for you guys. I think as a beginner trader, it is gonna make you a little bit more profitable. The rules are very. I mean, it is gonna make you disciplined trader. If I'm just looking at my past, and if I was having this opportunity, I think it would have made me a better trader. As 3% drawdown, I am not allowed to overtrade. And the other thing is, it is 2% payout cap on the $100,000 account. I'm already not getting greedy in that way. So I know that I am allowed to make $2,000. Of course, you can make a little bit more, but you can only get, 2,000 as a payout. But it is really mind-blowing thing. I think as a trader, it is going to make you a better trader, because I have followed that path without having these kind of rules. But Summer Plan is giving you that kind of rules, which is going to make you a better trader. So I think it is really awesome. You just need to have a solid plan, and the rules are already in your favor. You might be wondering, oh, it is just 3% drawdown. But if you just look at that way, the way I'm explaining, like the way I'm telling my journey, or my past, whatever it is already in your favor. It is preventing you to make a lot of wrong mistakes in the market. I think in that 5% drawdown, you are allowed to overtrade. You can punch many trades in the market. So trust me, guys, it is gonna make you a better trader, because I have followed these rules. I have made these rules by myself, but on this account, the company is providing you these rules, which is going to make you a better trader. So that is really good.
I honestly think that this two-step summer account is probably the best account
Yeah.
for novice traders, advanced traders, and people that just want to add a little bit more allocation to their already existing portfolio. The thing is, you still get an 80-20 split. Yes, it is capped at 2K, but you need to make 2.5% to get a payout. Now consider this. You can drop your risk all the way down, like 0.1% of risk, and you can still trade effectively over the course of 2 weeks to make $2,500 in profit and then get your 2K payout. The risk to reward. And that to me is like the thing that like really stood out about these accounts. Yes, people are going to look at the 2K payout and they're going to say, oh, it's not enough, it's not enough. How often are you making 2K every 2 weeks on one account? So for some people, it's going to be relatively often, but then you go and compare how much they risk in order to get that 2K. This is going to be the account, in my mind, that is going to be the most stress-free account that you can have.
Yeah.
Yes,
Exactly.
you still have 1 to 100 leverage. You're not going to be utilizing all of that leverage, but who does? Who's leveraging full margin every single trade? This is an account that can last you your whole career. And
And I think people have seen
Yeah.
it doesn't work if you go 1 to 100. We did that in the 1v1s for a bit of fun.
Yeah.
Doesn't work. right? You
I
get
remember.
blown out, that kind of stuff. And we saw when both of us on that day both reduced that, we had some wins, right? So the 1 to 100 does not work. So
Yeah.
yeah,
You don't need this level of leverage. You don't. But it is there for people that would like to use it because it's
doing a
this account is
complicated
basic-
approach with multiple assets, that kind of thing.
Yes.
Hence
So you've got
it
enough
lends
margin to play with. Yes.
Yeah, so you can the entire point is it's very open to all types of strategies and approaches, right? So you can do multi-asset, hedging, off-balance stuff, cross-correlation type assets that balance each other out and that kind of stuff, and pick up like 10, 15 trades overall. But there's only a very small amount of people that are doing that. But we do still offer that to those who do want to do that.
Yeah, I mean, all our
most
other
people are
accounts
trading-
still exist.
Yeah.
You know?
Yeah, exactly. So
In this case, I honestly think that in terms of getting a consistent, good, well thought out, lower risking account, for the price that you're paying with the payouts that you can have, I mean, this to me is a no-brainer. I got myself two of them, so no-brainer.
I'm just looking at it. I'm just looking at it this way. Like, I am paying $149. By the way, use anybody's code, you're gonna get 10% off. So I'm just paying $135, and I'm getting like $10,000 to trade. So in 135, you're getting $10,000. So I'm just looking at it this way. So it is. I mean, just even if you use 1% of your brain, it is a no-brainer deal. So it is awesome. I'm just gonna get 2-3 accounts because I think we have four accounts I can get. So I'm just gonna get 2-3 accounts of this.
You can get
I think
6.
six.
So you
Yeah,
can
6
get
total.
2 of the 100K 10%, 5% 2 steps. You can get 2 of the 100K 8%, 5%, and you can get 2 of the 1 steps as well. And the thing is, they're all capped at 2K, and it's every 2 weeks. So it's every 14 days you can request a payout with much lower risk. Yes, obviously you have the consistency rule of 50%, which is fine, 100% fine. Like it's actually pretty good. You can have 6 accounts that you can have 2K payout per account every 2 weeks.
Yeah.
That's 12K with minimal risk twice a month for 24K. And you get refunded after your third payout. So after you've made 6K on this account, you know, your third payout, whatever your third payout amount is, let's say you've got the full payout, like 2K. You've got 6K on every account, which you can get in a month and a half, and you get a full refund.
And you can still pick up the original high stakes account
Yes.
as well. The
Like this
original
does not
100K.
this does not count against your max allocation.
And that's the main thing I'm happy with. I would be very upset if they got rid of the original, right? Because very much do love that. I think that has its place. I think it needs to be there. But this I also love, right? I think
This is a really
they
good
work
account.
very nicely in combination with each other. So yeah, this is beautiful. Just like when this first came up, like I said, I was like, oh, this is good. I like this. And it's a very generous, I think like you were saying with the 50% cap, that's very generous. Like if you're making 2 trades, you know, to make your entire profit,
You're golden.
and you're also probably highly leveraging, which you're going to have a bad time later on. So that is very generous. Like I can understand where sometimes you get some small trades, and then you get a really big trade. And so hence 50% is a fair valuation with that. Because, I mean, to be honest, with trading, if you're trading well, that often does happen. That's, you know, you're not doing anything wrong. So I think, but 50% is a very healthy manner. It's not like 20, it's 50, right? That is very, very healthy. So I think that's really good. And is that just on the funded or is that on the evaluation as well.
So on
It's on the live only, I think. Yeah.
on the
Only
two-step
on the
one,
live?
it's on the live one only. So during phase 1 and phase 2, you have no consistency requirements. On the one step,
There you go.
you have the consistency across the evaluation and the
Across
funded
both.
section. Yeah, because technically this is only one phase, so you're going to potentially get to that funded portion faster. Because your requirement here is 10%. Yes, you only have 6% available to you initially. When you go into funded, you still only have the 6%, unfortunately. So it's not going to scale up. So you don't have as much drawdown as you would have with the two-step plan, but you can get to funded faster. So you can start getting payouts a lot faster as well. But
There you go.
the two-step, you can pass in 1 day.
Can I quickly get you to click on CFDs and a 25k two-step? Or 20k two-step? 25k, there it is. And how much does that cost?
Cost.
176. So for the cost of a 25k account, this summer, you can get a 100k account. And all the additional benefits that having a 100k account brings, 4 times the max drawdown, 4 times the buying power, and with that payout cap, for me, I compared the 25k, on a 25k account, that would be 10% target. That would be quite a lot. But on a 100k account, 2.5%, that's all right. That's doable. So in comparison,
You're risking a lot less of your account to make the equivalent amount. Where if you have a
correct.
25k account, you have to go basically 4 times as much with the risk to make the same reward, but it's costing you the same amount. So from a risk to reward perspective, at the same price, take the 100k.
And even if you make over those amounts, right, that profit still sits there.
Yeah,
So yes, you're capped on that current payout period, but it can sit there and you just wait, hang around, get paid out the next time as well. So it's not like you lose out anything from making more profit. You just time barred, but it sits right there. You can work on other accounts, whatever else you're doing. Like that's why I really like this. Like I said before, really good.
Oh, and Buyu, this is with the new account. The classic one is 195 for a 25k.
Wow. So it's definitely cheaper across the board than a 25k account.
If you take the equivalent 10%, 5%.
I mean, okay, a max daily loss of 5% on a 25k account is what? I don't do maths in public. $1,250.
What was
for a max daily loss?
5% on a 25k is you half that, and then you move 1 decimal point.
Yeah, so 1,250,
it's 12 and a half. It's 12 and a half, and then you move the decimal point up 1. It's 1,250.
Yeah, 1,250, and 3% on a 100k account. That's $3,000. So even on the max daily loss basis, ignoring the fact that the maximum loss is 10%, even on a max daily loss basis, you're getting more max daily loss. You're getting more buying power. You're basically getting more of everything.
More.
More
power, more energy, more power, more energy.
And there was another thing that did Samir just mention that if you can use an affiliate code on those as well on the summer plan.
You can use anyone's code. You can search it on Twitter. You will get 10% off.
Okay, because for some ICT traders, I don't know. I don't know if any ICT traders are in the chat, but I did see recently, for instance, that he is using his affiliate code to raise money for St. Jude's Children's Hospital. So, hey, if that's what you're into,
doing that?
Well, he's basically asking a bunch of
saw it on
companies
Twitter,
he's basically asking a bunch of companies, hey, if you use my affiliate, can you create an affiliate code? And instead of getting any affiliate money,
I believe the $5ers is also a part of that.
Yeah, $5ers is also a part of that.
Yeah. They're adding an extra $1 to every account purchased to that link.
Yeah.
So we have
Time
double
has
the
changed.
amount of the donations. Like if anybody is, let's say, is 1,000, so we're gonna give 2,000 as a donation. I think that is really nice initiative. Yeah.
It is.
Okay, we
I
are
just
about
want to
to.
say, yeah. Sorry,
Yeah, yeah.
Samir.
Go
You can
ahead.
say
Go
it, 'cause
ahead.
we're about to say the same thing, I think.
Yeah. So we are about to. The market is about to open in 6 minutes. It is the NYSE opening. So let's see what we are going to get in this market open. Again, as I mentioned, I'm eyeing on that US 30 shorts, but let's see if I get it or not. By the way, as you guys was talking about that Swiss news, so I just realized it was a very clean break and retest setup, and the leg was also good. So your stop loss placement could have been, in a good area. So this was a very good break and retest. So these type of break and retest works. So I just want to touch on this point, like where we have a structure and then impulsive leg and then retest of that. So these type of break and retest works better. So if you have this kind of break and retest, let me give you an example. So something like this, impulsive break and retest, something like this, and the leg is here, the impulsiveness started from here. So these kind of break and retest doesn't work in a good way. So if you have some kind of internal structure like this, so this works better. So that is just if somebody is trading break and retest, I have noticed it. Maybe you can add it in your trading, or maybe you can backtest this thing. Yeah, 5 minutes away from the market open, and hopefully
You're
Rich was
getting
about to say the
excited.
same thing.
I was going to say we're getting
All
super
right.
close to the NYSE Open. I just wanted to answer this question from Elite Quote. Summer plan profit cap is 2K. We make $1,000. We request a payout to get $800. That is correct. It with the 2-step, it is a 80-20 split. With the 1-step, it is a 75-25% split. So if you made $1,000 with the 1-step one, you will get $750 as a payout. With the 2-step one, it's $800. Okay, but it's capped to 2,000. So you need to make 2.5K with the 2-step one to get that 2K payout. And for the 1-step one, you need to make, I think it's 2,600 or somewhere around there to get the
All
full
right.
payout for that one.
After the first target.
But you have to meet the consistency rule. It doesn't mean that
Yeah.
you make $1,000 in one trade. So I think it is very easy to manage. You just do the normal
$1,000
trading.
total profit, yeah.
Yeah, 500 each trade, 2 trades. Best case scenario, if you wins your you are on a winning streak, 2 wins in a row, the payout is secured. So that's the catch.
Yeah. So that's once funded with the first phase, 2,600. I think it's like 2,666 or something like that, in order for you to get the 75% 25 payout to cap at 2K. And then for the 2-step one, it is just 2,500. So you need to make 2.66 repetitive profit on the one step, and then 2.5% on the 2-step to qualify for that max payout, that max capped payout. But you also have a limit on the lower side, so you need to at least make $250 in order to qualify for a payout. But that is across all of our accounts anyway. Like we have the lowest amount that you can make to qualify for a payout is $250. My trade is on its way towards TP3.
I was going to say,
Nice.
it's going
Nice.
well, dude. I did
Yeah.
re-enter, so I'm also in and churning this right now.
What is your
pretty
TP, by
good.
the way? Because we have a gap, so I don't know if you guys are expecting it to go lower, or your TP somewhere here.
I'll show
So
you.
I'm already up about 2%. So my TP on the futures is 28432 at extension. Now I'm happy to take profit well before that because I'm already up 2%. So this is definitely an extra trade for today. Overall.
My TP 1 and 2 was already taken. My TP 3 on CFD is 28,430.3, and my TP 4 is 28,9 or 390.3. So just before the Tokyo low of today, We'll see what happens in New York session. Then I'll be looking at my futures account to take a trade on that one.
50 seconds left for the market open. So you guys are already in the trade. So I don't know.
We're pretty similar, Rich.
It can move in your favor.
Yeah.
Yeah, I'm prepping now for the New York Open trade.
I think we can fill this gap.
I'm on the same point. Okay.
All right, 30 seconds. Market is about to open. 15 minutes.
Oh, 15. No wonder it didn't look the same.
All
I was on a
right.
15-minute time frame. I was like, why does this not look the same?
All right.
Dude, I think this is good. I think we're flagrant right now. This is juicy.
Yeah.
So this would be where
I just took
the second entry.
TP3. TP3 just got taken.
All right. The market is about to open. I mean, it is open right now.
Yeah.
So let's see.
Yeah.
TP3 is taken. It's busy
I'm gonna hold this.
pushing lower. 28,420, 28,410 on CFD.
This 200 points.
When to take? Do I take in here and then re-enter on a bounce, or?
I'll re-enter on the bounce. I would cut now and then buy in
All right,
again.
I just cut. I'm gonna buy in again. Yep. I'm up 2.5% today on the futures.
Nice.
So
Nice.
pretty happy
You
with
have
that.
a 100 or 150k account?
150. Yeah. So I'm up 3,482.
How many micros did you go in on?
5. So it's
dude, that's
been 5. Yeah. And
Okay. I wanna ask you one thing
level.
as you are trading.
then eventually like 10 if I have like high confidence, or like a 1 mini if I just want to hit it. Like that. Yeah.
Okay.
I was saying I want to ask LJ about risk management as in futures your trailing drawdown, you always goes up. In CFD it is different. So what is your risk management plan when it comes to futures? You are using normal risk, static risk, or maybe reducing the risk? I just want to know.
It's pretty standard, the same as CFD. Basically the same market structure, same entries, that kind of stuff. I will look at obviously the CFD will be less volatile. Like if you compare the futures like 1-to-1, like the 1 minute view, the futures will snap around a bit more than the CFD. Like the CFD will be more stable, obviously, because it's a derivative of the futures with other backing contracts with liquidity and that kind of stuff. But yeah, it'll be pretty similar. Now, the only difference is the contract size, where you can get a lower contract size on the CFD versus futures, even when you're looking at the micros overall.
TP4
So
hit.
that's the only difference overall. But
So
generally,
you're using your normal risk approach, I think.
yeah, pretty much, yeah.
Okay.
So it'll be typical structure, typical approach, that kind of thing, just applied to a different asset formation. But I do take the slight differential there, obviously. Same with liquidity, like you'll see in the minis and the micros do have a slight variation in spread, depending on the local contract, that kind of thing. But I mean, it's very active. It's not too much. So
I mean, it
But going
always
forward, I
stays 4%, correct?
sorry.
Yeah, it is just 4% drawdown. So
Yeah. Just
Yeah.
like it
No.
remains 4%.
I mean the spread in the entry of like
No,
the
no,
spread
I meant-
differential on the.
No, I meant the drawdown, end of day drawdown.
Oh, that yeah, of course.
Yeah,
that's
it remains 4%
it's
regardless.
trailing.
Like It's
Trailing,
trailing.
yeah.
So it's gonna move up as you're taking profit. You might take a bit of a dip down. It's gonna stay there. You take a bit more profit until you're back to 4% and above. Then it starts moving up again with you. So long as you just maintain that same level of risk, to ensure that the 4% doesn't get hit, you can build your way up.
Yeah, so the only difference in activity, I would tend to more scalp on the futures. Also, the fact that I don't have the swing trading element. And now, obviously, we do have the 100 and 150K for the swing trading. Prior, we only had up to 50K for the swing. And there's limited of how many contracts you can hold over that period. So hence, I've been trading the intraday 150K, which is very much more active. And so, yeah, that's where my main prerogative has been overall. Yeah. But it's been doing well. So I will say, like, it's weird. It's kind of the same thing with the CFD and the futures, like, obviously, because they're a derivative of each other, and often the CFD price is derived off the futures cross correlation and hedging from liquidity providers. But yeah, somehow I feel like the futures is more active. It's just more chaotic somehow, even though it's kind of the same thing. Somehow, like, you do notice the deviation in price. It's minimal, but it's more snappy.
Yeah, exactly.
Yeah. I also find that with the futures, the execution is a lot faster, and you get less deviation within that execution itself.
Correct. Yeah. For the exact same reason.
TP4.
I like them both though.
So
I think doing both
one
at the same time is very good. Sorry, Rich.
No. I'm just saying that my TP4 has eventually been hit, and I am now looking at entering on the...
Beautiful.
On
All right,
on
that
the
was really good trade.
Nice.
Bit of a pullback. 8 minutes left on this 15-minute candle. Massive wick underneath. Probably going to try and push up a little bit higher. Maybe come and attempt to sweep this previous 15-minute high, or even the open of the candle. Maybe we'll see. 23 minutes before the hourly candle closes. And by the way, guys, the moment the stream is over, you will all once again be redirected to the Futures channel to go and support Dave. And I believe Victor is over there today as well. So do go and give them some love.
I'm just going to check on Victor in the background.
We did get the NAS move, didn't we?
Yeah, no, we did. Thanks, Lisha. Yeah, we got a really good one here. It's one of those ones where maybe it wasn't the smartest of decisions to re-enter on that secondary move, but then again, the first move played out exactly as I wanted it to move out. So I'm very happy with the sell that we had.
And how much is that return on your trade now, then, Rich?
Say again, will you?
How much have you made on that trade?
So this is a 2.5 hour trade.
2.5 hour trade.
Yeah, but it was a 0.5% entry, so it's 1.25%.
Okay.
Net gain on the account.
Yeah.
And then also CFDs is commission free on or Indices is commission free on CFDs. So all you're paying is that little bit of spread. Where with the futures one, you are paying commissions.
Yeah, that's like I was saying, Rich, with like if we actually pump down, you're good. If we snap up yet knocked out, and then we do crush down, kind of sucks because you're going to be like leveled out, right? Yeah. And potentially, if on the first trade you also get stopped out, then you're actually behind. So this way, it's still a win-win. So yeah,
And-
good trade.
And like I said, I with the futures account, I do it a little bit differently now. So I'm going in with one position, so one micro, and then I add into my position as it's going down. Or in this case, if it maybe go into a little bit of drawdown, it's fine. I can also add up. So that will then dollar average my entry, so that it doesn't need to move as far down to be back in profit. That kind of like thing.
Yeah, of course. Yeah.
So I am currently in on a sell. My entry point is 28,586 on futures.
I'm out right now. I've TP'd.
I've already taken out one position and added another one.
Yeah, we hit my TP2, so
And US.
I'm considering the next spot. We'll see. With that said, give me a sec, guys. I will come back for the final bit. And then just give me a minute. Just got to go to men's room.
Yeah.
All right. Are you in anything right now, Samir?
No, I'm just waiting for that 4-hour area to be tapped on US 30. And I'll be selling it. Right now, there is a consolidation pattern. So I might can sell it a bit earlier. So I'm just seeing what I can do here. Okay. So let's just analyze this thing again, going to the 4-hour time frame. Okay, this is a decent level. We have some kind of rejections from here. This is also the 4-hour level. Let me just, okay, draw it this way. So right now we are in the middle. So we are retesting this level actually. So it means it can go a little bit more to the upside. So yeah, I think entering here, it is a little bit risky. I'll wait for this area to be tapped. So on the NAS, yeah, we are going lower. As gap is filled, I'm just trying to see if there can be some kind of buying opportunity. It's not filled 100%, but it's still filled some, some kind of gap is filled. Okay, let me go to the 5 minute, 1 minute.
I've taken out another one, and I'm about to enter another one contract.
So you took the trade here?
Yeah, I've taken one to the third position now.
Nice.
All right.
So already I had an 45 point movement on the first one, an 85 point movement on the second one, and now I'm waiting for the next one to be maybe another 85 or another 45.
All right. I'm just waiting on that US 30 trade. It can happen later in the session maybe. So let's see. That US 30 was really, I'm sorry, that USD CHF, that was really clean break and retest. I was just eyeing on that. But anyways, I don't trade currencies. It has been not very long, but it has been some months. I haven't touched currencies. So, yeah. You also are not trading.
Another 80 point movement as well.
That's awesome. I think the momentum is there.
Yeah.
It can fill the whole gap, I think, with this momentum. Yeah.
Very,
Which is, let me see how much point it is. I think it is still like 120 points away from that gap fill area. So you can definitely get that.
Dude. I just missed it, dude. I would have re-entered on this. We hit my TP3.
I did.
Where just
on your behalf, Richard took the trade.
I did.
Thank you, Rich.
Yeah.
Thank you. Someone got it. Because yes, this has come down to my TP3. We're just above right now. We're a couple points above.
So I got a 45 point movement on my first one contract, which was $90. I got a $85 point movement on my second one, which is $170, and then I got another 85 pointer. It wasn't actually 85; it was like 84 and a half point movement for 170-ish as well.
Dude, I was waiting for this. I swear I've lost more money going to the bathroom when I'm trading than anything else.
There's this lovely invention called adult diapers.
Or limit
Do you have
orders.
a supplier recommendation, Rich? Is this your own company that you
Yeah.
started
I
up?
mean, it's how I stay on stream for as long as I do. I mean, how often do you see me run to the bathroom?
I try to go to the bathroom sometimes. Other times I'm just in my wellies, you know, like, and I just stick around. That's fine.
See, that's
So
not
if
good.
you want to give me the heads up, like if this is your own company that you've started, like I'll please help.
You'd gladly invest.
Help. Yeah.
It's called Trader's Pants.
On another note, can you tell us what a shoey is, LJ?
Oh, dude, do you
shoey.
not
Where's
know what a
my-
shoey is?
Well, he was just talking about, going in these wellies.
Mate.
Yeah, but
If you
that's
want,
a different thing than a shoey. A shoey is you drinking a beer out of a shoe.
Yeah. All right. Yeah. Sometimes we can get me drinking a coffee out of my shoe. During the stream one time, I'll do a shoey. Like maybe if
What am I hearing today?
if I lose the next 1v1 trading session when we're on, I'll do a shoey. Right?
Someone needs to clip that, chat. I mean, he's just promised to do a shoey if he loses a 1v1.
Yeah, it'll have to be coffee because he's not allowed to drink alcohol on stream, obviously.
Yeah.
But it's traditionally like a beer or like a cider or something out of a shoe. Like there's a UFC fighter that every time he's had a knockout, he would jump onto the rail, grab a shoe, they'll pour a beer into it for him and he'll drink out of the beer. His name is Tai Tuivasa. Yeah.
Yeah, it's become a Australian tradition in general. Anytime you have a good celebration, you've won, whatever, skip the champagne, that kind of stuff, you pull out your shoe, find a random beer, has to be very like degenerate, pour a beer in and just drink it out of the shoe.
Yeah.
Right.
Do you
just like Dan
said shoe afterwards though?
Hey?
Yeah, you still wear your shoe.
You still wear the shoe afterwards?
Of course.
Yeah, why not?
It's like, look, go watch F1. It's like Ricardo, right? Ricardo definitely set it on sort of more the world stage with F1.
Do you still wear your shoe when you step in a puddle?
Well, my shoe, I try and keep my shoes fairly dry. I mean, yeah, but,
Your shoes are there to keep your feet dry. Your shoes are there to keep your feet from getting hurt when stepping on stuff. Sometimes you have a beer in your shoe and you walk with it. One of those
something
things.
that just happens in nature. It's not just like stepping in a puddle.
Dude,
with
shoes are not like in nature. like who cares about shoes in nature? There's hoofs for that.
It is definitely a very Australian thing in general that we started, and every other nation is definitely like, "What are you guys doing?" especially like F1 or any kind of sports
game. This is not sanitary. Nobody asked you for your opinion, or
it's always the game shoe that you're wearing through whatever you're playing, whether it's rugby,
it's good luck.
Soccer, basketball, F1, whatever. Rip your shoe off, pour that in the champagne, drink it up. Great, right? It's just it's become a thing.
It's a good luck thing.
Yeah,
it's a good luck thing.
Yeah, exactly. It's good luck. Good fun.
Okay.
Look, we're unruly. It's fine. We've got plenty of animals everywhere else, whatever. We're just like, it goes.
It is
it works.
what it is. 'Tis a thing.
We are now down towards my TP3 right here.
Should we switch over to your screen then?
Yeah, we can do that too.
Sure. So this is my TP3. That's where I took the first trade, TP'd out of there before I jumped off stream. We've now come down to TP3. Like I was saying, I don't necessarily think we'll close the entire gap. So there may potentially either, if you're very risky, you want to buy from here, or if you've been short already, you just TP from here and then just wait overall.
Yeah.
That would be my base recommendation. Yep.
Did you just die?
God, I'm dying. Also got a bit of a cough after the weekend. Yeah, sorry guys. But yeah,
We're getting a
I'd
little
consider
bit of
like a long
build-up
from here.
now.
I think, like as a bounce, I think that's high risk though. Like I'd still say wait until the deeper drawdown if we get that, or we consolidate through here for a longer period, and then eventually come back up. I wouldn't want to short from here, wouldn't want to quite buy. I'd rather wait until we crack above the TP2 levels that I had and actually establish a firm hold, like a break, retest, and then start to run type situation. If we get the upside, which I'm not so sure about. I think we do stay languishing.
It's slowed down
Yeah.
now. This is now that post New York Open, let's say first 20 minutes or so. We'll see now after the first half an hour.
So you could get that up to the TP1 type standpoint, eventually clamber up, hit that underside, and then start to print lower once again to Friday's lows from last week.
Let me see on gold. Gold, for the majority of this New York session so far, has been trying to reclaim some of today's losses. We just tapped the 50 EMA on the 5-minute, as well as on the 15-minute. But it's a very, very bullish 15-minute. Long wick on the 1 hourly. I don't know if we're going to close anywhere close to below the previous 1 hour candle on gold. So far, quite bullish. Yeah, overall, a very profitable day. Overall, a very, very, very profitable day. Up on futures, up on CFDs. Very happy for that.
I think it's fair.
Especially
Round of
having,
applause.
especially having a very, very chill weekend. Coming back to the market like refreshed and whatnot. It's just, I don't know, sometimes you just need to walk away a little bit and then come back. It's refreshed, and then you feel, okay, I'm ready to, I don't know, go balls to the wall again, you know, head first. Yes. Anyway, to everybody out there in chat, if you liked what we've done so far, if you've enjoyed today's content, please drop us a like and consider subscribing. Hit that notification bell, all of the bells and whistles, the whole 9 yards, do all of it, and then we'll be eternally grateful to all of you. Really, we'll be very eternally grateful. That's what you get. You get eternal gratefulness from us.
And some giveaways throughout the week. So
yeah, which you need to be there in order to be
That's
in
the
it.
one.
So 1v1 battle tomorrow against Pedro and Griff. It's going to be the first of many 1v1s again outside of the Trading World Cup that we had recently. So
correct.
please, everybody, tomorrow arrive willing and able. I will provide you with a demo account to trade with. You don't need to have your own demo account if you don't have one. I will be providing you with one. And if you beat the pro, you get a 100K summer account. So that's $149 discount. Cheap. Nice.
It's even bigger than the 1v1s for the World Cup.
That was a 50K high stakes.
It is. Yeah. Yeah. But still, the base level.
Yeah.
Even bigger.
I mean, it was a 50K, so you basically got, I think it was like a $250 prize if you beat the pro, effectively.
Yeah. Yeah. Beautiful. Beautiful.
Beautiful.
Beautiful, mate. Beautiful. Love it. Lovely
Bloody
jubbly.
beautiful, mate. Oh, that's amazing. Oh,
Right.
anyway, we'll see you
Good
guys
stuff.
tomorrow. It's absolutely beautiful, and we'll get ready for the giveaways. No problem, brother.
Let's go.
It's my best British accent. You can tell me if it was rubbish.
Booyah, can you do the Cockney accent?
Bit apples and pears. Why am I struggling? I don't know. No, I can't. Bloody well can't.
Bloody well can't.
Can't do it, mate.
Bottle of water.
Bottle of water.
Yeah,
Bottle of water. Bottle of water. You men are mad. You men are mad, them. Mad, them. Oh, bottle of water. What's that? £4.50. Nah, man.
No, mate. No, mate. Bottle of water, £4.50. You must be having a laugh, mate.
I'm having a laugh.
There we go.
Me, this is my best Australian accent. Oh, yeah.
Oh, yeah.
Putting on a shrimp on the barbie. Oh, yeah.
Oh, yeah, mate. Oh, yeah.
Okay. I've been meaning to ask you, what is the male equivalent of a Sheila? Is there a male equivalent of a Sheila? Yeah.
Not really. Like a Sheila is just like a girl in general. So the equivalent doesn't have like some proximo beyond that. It's just like a man. Like there's nothing interesting on the opposite side. It's just like a male. It's very boring.
So what did they say? They say Sheilas and lads.
Repeat trades now, innit?
Yeah, there's like no one that says Sheilas. Like it's a thing that people know, but no one actually says it, right?
Except what's his name? Aussie guy.
Steve Owen.
No, Aussie guy. No. Like what's his name? Like literally Aussie guy, the YouTuber.
Oh yeah. Because obviously we get all the big So all the
you big beautiful bastard.
Yeah. So a lot of those terms.
That guy.
Yeah, they're more selective. So some people
Aussie
say
guy.
Sheila, but normally Sheila is like people that are a bit further out from the city and a bit older, and they'll say a Sheila in terms of a girl. In terms of a man, I don't think there's really a equivalent.
Not Osborne, no. I think it's just Aussie guy, as an A-U-A, or it's either like this, like O-O-Z-Y guy, or it's A-U-S-S-I-E guy.
No, it's O-Z-Z-Y, if anything.
Yeah, Aussie
That's
guy.
Aussie, yeah.
He's a YouTuber from Australia that does like content about like basically in his Australian voice. And he refers to everybody as "you beautiful bastards."
Yeah.
The other Aussie guy, Osborne, he passed away a while ago. He's a Brit.
Yeah.
Was a Brit. Not a Brit no more. LJ.
That's half of Australia, anyway.
LJ, I think this NASDAQ thing is not stopping.
Yeah, I've been looking for the re-entry, and I don't think I'm going to get it.
No. I got
myself. I do see things going lower. I know you've already made some profit, so I would say myself stick out. Like I can see it going lower. I've made some profit. You've made some profit. I'm gonna step aside. Just wait. Given this week.
All right, and then if that is it, then we're pretty much at the end of the day. Thank you to the lovely hosts and guests that we've had on today, and thank you very much to everybody else in chat for joining us today. Is there anything else that you gentlemen would like to mention before we switch off? Start with you,
I think
Booey.
I could have entered. Yeah,
Okay,
yeah,
we'll
go
start with
ahead.
Samir. We'll start with Samir.
I was I
go
was
on.
just gonna say I was just gonna say I could have entered that USDT trade at that area, but I didn't enter. I just waited for it to go a little bit higher. Now it is going without me. I think it is gonna be a no trading day for me. That's it, guys. So I'm just following my plan. I'll see you tomorrow, and thank you so much for everything. And make sure that summer plan, that is a game changer thing, because that is the first time we have brought this kind of thing. So yeah, take full advantage of this opportunity. And that's it from my
CFD and
side.
futures.
Thank you.
CFD and futures, guys, both of them. Buyu, you're next.
Right. So everyone's mentioned the summer plan a lot today. For me, I also want to see more people wearing 5ers merch. So make sure you check out store.the5ers.com. Get your summer merch on. I know I will be later on this summer. Definitely getting a unisex summer tee and one of those beach towels, because those are the ones that stand out for me. I love them. So yeah, make sure to check those out.
Awesome.
Beautiful.
LJ.
All right, I will say tomorrow, join up. Tomorrow, guys, be in here. We will have the 1v1s kicking off tomorrow, so definitely join up. I will not be participating. I will be commentating, and I will be pressuring Pedro to go 100 to 1 leverage. All right, guys? So you guys will have your chance. You got to sign up, join the stream tomorrow, and you'll get picked in real time to actually join up. Outside of that, I think we've had some good trades today, and we've got a bunch going on through the rest of the week. I will see you guys tomorrow, the next day, entire week. We got the Fed, we got earnings, we got everything else. Keep going. I'll see you guys throughout the week, and there's a lot to go through this week. So either way, but big one. If you guys want to join tomorrow, be here. Don't be square. Join up. Get your chance.
Awesome.
Beat
guys,
Pedro.
you'll all
Come
be-
on, beat Pedro.
Yeah,
All right, we
beat
got to
Pedro
beat
and beat
Pedro.
Griff.
Yeah, we gotta-
All right, guys, you will now be redirected to the future stream. Please go and give them some love as well. They're also part of the 5ers family, and they're also doing a great job over at the 5ers side. Victor will be there along with Dave, and I do believe Alejandra and maybe even Cesar is there as well. So, guys, thank you very much for joining us today. That's a wrap. We'll see you all tomorrow. Cheers.
All right.